Welcome back. You're tuned into Power Breakfast on CNBC-TV18. And moving on to the updates in the ongoing war in West Asia, Israeli Prime Minister Benjamin Netanyahu announced that the Israeli force in Gaza has killed the Hamas leader Yahya Sinwar, the architect of the October terrorist attack last year. According to the IDF spokesperson, Israeli forces identified 3 Hamas militants moving from house to house yesterday when Sinwar fled into the building on his own. The military sent in a drone that identified a masked man with a wounded hand and who has been identified as Sinwar. That's the update coming in on West Asia. But how is that impacting commodities as well? And seems like that uncertainty again has led to the gold shining bright. Manisha is joining in with us with all the update in the world of commodity. Good morning, Manisha. Only glitter coming in from gold today.
Oh, well, yes, Vinny. It's such a big surge that we've seen in the overnight markets, and in Asian markets, some seem to be following that up. $2,700 an ounce on gold right now. So it has been an almost 30% of gains in this year until now, which is the best one that you've seen in perhaps a decade. The ECB rate cut of 25 basis points, China cutting rates as well, and the China's third quarter GDP coming in on the stronger side also has led to some buying coming in for other metals. So when you look at silver, we are trading at $32 an ounce. Copper, aluminum also have gained up by nearly 0.5% right now. So it's not just the precious metals, but the base metals also surging up at this point in time.
Okay, Manisha, thank you so much for that. So keeping an eye out on gold, but the other metals as well. Let's move on. And a flurry of Hawks bomb threats continue to plague Indian airlines. Close to 32 bomb threats in the past 4 days have hampered both international as well as domestic flights, forcing them to divert or make emergency landings. And most of the threats turned out to be hoaxes. However, the Civil Aviation Minister is considering strict norms to prevent incidents of Hawks bomb threats to the airlines. The ministry is looking at a proposal to place the perpetrators of such crimes on the no-fly list. The ministry is examining rules followed by foreign countries to deal with such threats. So far, the Mumbai police has filed 7 FIRs relating to the bomb threats and has detained a minor for allegedly posting online bomb threats to 3 flights earlier this week. In an exclusive, let's move on, and in an exclusive conversation with Shireen Bhan, British Airways CEO Sean Doyle has said that India remains the airline's second largest market and that they plan to do much more in terms of expansion and India's exciting aviation market. Listen in to the size of the conversation.
How important is India for British Airways today? And what's the aspiration? What's the ambition in terms of market share? Because it's still fairly small in comparison to the aspiration that you have.
Well, I think India is our second biggest market. It is strategically very important. We have a lot of links from a trade and a diaspora perspective. We think air service is a very critical catalyst for the growing economic relationship that's emerging between the two governments. But also we employ a lot of people in India. We have 2,500 people who work for British Airways here. And in fact, yesterday I had the privilege of opening up our new engagement centre down here in Noida. So we have a great team here. They're very much part of the British Airways family. And they make the experience in British Airways, very, very, I think, comfortable and fit for purpose for the Indian market.
So, you talked about this being your second largest market and a very strategic market for you. Now, what is that going to entail in terms of future investments, in terms of future hiring, and in terms of future expansion, from a connectivity point of view?
We're investing $7 billion in modernising British Airways, and that's well underway. You will see more and more of our new product on the Indian routes. Our Club Suite, which is an award-winning business class experience, is now on nearly every route, and by the time we get to the end of next year, nearly all of our flights will have that experience. We're also investing in new technology, so a fantastic digital experience, and of course we're modernising our IT infrastructure. But generally, whether it's the digital experience or the onboard experience, we've very, very ambitious investment plans. And, we're only starting in British Airways on this very extensive modernisation programme.
I'll talk to you about the modernisation programme in just a second, but let me labour a little bit more about the Indian market. And, if you look at the IATA data as well as the IATA forecast, India is being positioned as one of the fastest growing commercial aviation markets in the world today. From that perspective, what's the kind of demand outlook that you foresee?
I think that's obvious. You know, even compared to China, I think Indian travel per capita is about 1/10 of what we see in China. So the growth is going to be exponential. I think everybody will want to serve the market. I think it's a very exciting time for international operations into India, but also for the domestic market. But I think India is a very important strategic market for anybody who's serious about international aviation.
Just a small programming alert as we wrap up the show. As we prepare to ring in the festivities this Diwali, tune into CNBC TV18's Market Movers Forum 3 p.m. onwards on the 24th of October, featuring guests like Ramdev Agarwal, S. Narain, Nilesh Shah and others to help your portfolio prosper this Diwali. And with that, it's a wrap on this edition of Power Breakfast on CNBC TV18. Thanks so much for tuning in.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema is with us today. Guys, good morning.
Hi, good morning.
Morning.
It's been a very, very tough week, right? Particularly yesterday, where the sell-off came from nowhere.
Well, indeed, and the global cues are still looking pretty much okay. But otherwise, I think for the Indian markets on the domestic front, we are searching for some good news because there's been so much of negativity in the last 36 hours or so. So some bit of positive news is something that the bulls will be looking to latch onto.
Absolutely. And, you're right. I mean, yesterday, the sell-off came out of nowhere. Yeah. There was no indication at all. And there's no indication this morning that, something is amiss. And I'm talking about largely, the global stuff that we look at. And of course, some of the other indicators. So it's all okay. But, markets sold off hard yesterday. The graphics will come up. And it's just a question I'm putting out there. I'm not saying it is so, but we are now getting very close to the 24,694 levels, which is essentially the low that we saw just a few days back, right? I mean, I think we'll have to, the 7th of October low is 24,694, and we're very, very close to it. But again, it's a question more than an answer at this stage. There are lots of the problem, and I was saying this yesterday as well, a lot of the high-frequency data is indicating that even in the festive season, things are looking, actually into the festive season, things are looking a little sluggish, subdued. We're getting lots of earnings as well, although it's not for this quarter, but it's for the last quarter. And it generally was expected to be people had written it off and they were looking at H2. But for single stocks, it matters. And more than not, most of the earnings which have come through are in the subdued, not so exciting category. And we'll go through each of these as we kind of go along. Now, just a bit in the global stuff. US equities were flat last night. So NASDAQ almost unchanged. US data points were strong. So core retail sales data beat. Initial jobless claims were lower. And as a result of which, yields jumped. Bond yields were up 8 basis points in the 10-year. We left off at about 4.09. We basically have reversed, nothing else. But it's back at close to 4.1. Dollar index, it continues to move higher slowly but steadily. About not quite at 104, but 103.78 is where we're at on the dollar index. And because yields in the US are jumping higher, the dollar is strong. It's also having an impact on some of the other crosses. USD JPY, for example, right? I mean, the dollar is stronger and the Japanese yen is weaker, and as a result of which, you've got the cross breaking above the 150 level. I mean, it's not exactly bad news from a flows perspective. It's good news, but I thought I should put that up. But that's largely because of what's happening to dollar and yields. Now, in the US, just one other thing, this entire AI semiconductor theme remains pretty intact because TSMC really crushed expectations. And the numbers came out yesterday while we were still trading. But the ADR was higher. Stock, of course, yesterday was up. And it kind of lifted that entire space in the US as well. Oil prices flat, not very much, $74.5. There's news coming in this morning. We woke up to the news that, the IDF, the Israeli military, has killed the Hamas leader. The point is, will that lead to any a lowering of conflicts and hostilities? That remains to be seen. Now, let's come to the market here, right? The Nifty here. So we are now, as I said, very close to the October 7th low, which is 24,694, right? That's the level that we are watching out for. Hopefully, it will hold. Lots of near-term indicators are telling you that we are oversold and we are due for a bounce. Now, the point is, will we get that bounce? And the reason I'm a little more skeptical is because look at the 200-point fall yesterday. Absolutely unanticipated, but the market just kept falling, right? So will these indicators work? Maybe in the short term, we'll have to see. But one of them is important. The PCR, the Nifty Open Interest PCR, has now fallen to 0.65. It's the lowest since March of 2024. And actually, if you go back the last many years, at about 0.6, 0.65, it's kind of marked a short-term bottom many times in the past. And then, of course, the market does what it wants to do. The fact is, I mean, we've basically just steadily moved higher. Very short-term reversals, get to about 0.65, and then the market is bounced again. So we'll be wiser in hindsight if that is true, but I think we are there in terms of some of these indicators. If we are not able to hold on to the 24,694 level, the next number is 24,000. the 20 weekly moving average, which is also very close by, which is about 24,650. So a cluster of supports here. Bank Nifty is facing selling pressure near the 40-day moving average. And we saw that once again yesterday. On the downside, watch for the daily low, which is 51,005 and then 50,892. That's a 61.8% retracement of the rise. And on the upside, we need a break above 52,000 roughly to confirm that a reversal perhaps is around the corner, reversal higher. GIFT Nifty will come up on your screen and that will give you a sense of how we're likely to start 100 points lower once again. So, I mean, not looking like it's steadying anytime soon. But we are at those levels. If the market wanted to stage a short-term reversal, I mean, I think now would be the time. Rima.
Okay, and even IT today is probably not going to provide that support, right?
Yeah.
So yesterday, all the indices ended in the red, barring the IT index. The Nifty IT index was up more than 1%. And yesterday, we've got a clearer picture of the industry demand. Infosys, Wipro, LTI, and Mindtree, all three of them came out with numbers. So it's a good quarter for all three of them, no doubt. But it's on expected lines. There is no positive surprise to take these stocks higher from here on. So if you look at Infosys, for instance, the company, the guidance upgrade came on expected lines. Q2 on expected lines, it closed to about 3%. The ADR slipped 1%. Wipro Q2 was strong, but the Q3 guidance disappoints. So again, the recovery seen for Wipro is still a bit patchy because they can't follow up a good quarter with another good quarter in terms of guidance. That ADR was down 1%. LTI Mindtree's revenues were slightly softer than street expectations. Also, the market sentiment can be gauged, the retail sentiment can be gauged in terms of the Hyundai IPO subscription. So overall, it's sailed through. The mega IPO is sailed through with 2.4 times, but retail has given it a bit of a pass with the overall subscription coming in at just 0.5 times and QIB is being subscribed nearly 7 times. In terms of flows, the FI outflows continue. Nearly 7,500 sold yesterday. This month, their selling figure is approaching 75,000 crore rupees. The DIIs bought nearly 5,000 crore in cash. And for the month so far, it's about 68,000. But we're not done with earnings. So today, of course, we'll react to the likes of Axis Bank, Polycab, and so many others apart from IT. Today, it's Tata Consumer, ICICI Lombard, Hindustan Zinc, Jio Financial, MRPL, and Z. And tomorrow is a big banking day because you've got HDFC Bank, Kotak Mahindra Bank, and even Tech Mahindra will be reporting numbers. Their press conference is, I think, at 8:30 or 9 in the morning. So early start for them.
All right. Well, in terms of the global action, everything's looking positive from the US market perspective. But the problem from an emerging market like ours is that the dollar index was flirting with 100, 101 just a month or so ago. Now it's moved to around 104. And that's a problem point because it deters flows as well in all emerging markets and India in particular because of the kind of valuations that we are trading at. The other factor that we're looking at is the bulls. They are hoping for a stable session today. You want at least a stable session by the time we wound up because otherwise we'll be seeking lower levels. Otherwise, if we break the recent low, then maybe we're headed to test the 24,200 odd mark. Bajaj Auto's numbers raise some questions about the two-wheeler space and also the state of the economy. You also have other numbers coming from Polycab and the likes, which have made the markets a little bit jittery, and no surprises coming from the IT pack. So that's going to be, we are searching or we are seeking for some kind of good news. Hopefully something comes through during the course of the day. What about the FI positioning? Well, yesterday the unwound positions, both as well as the long as well as on the short side, but they continue to remain net short with close to around more than 60% of the positions on the short side as we speak. While the client positioning, well, it's absolutely the opposite, in terms of their positioning because they are net long with more than 2 lakh contracts on the long side. So that's how the short positioning is for both of them. Moving to the options data, then, well, you have the 24,800 call as well as put that are fairly active. For someone that's doing a short straddle, they're looking to pocket this 350 rupees odd and hoping that the Nifty stays in that range, 350 points higher than 24,800 and 350 points lower than that particular level. That could be a strategy at place. But I'm more concerned about lower levels. And the recent low, it becomes very, very important. You don't want this level to get breached. Otherwise, in fact, you could be heading to lower levels, which is at around 24,480, the 100 DMA. Though we have resistance coming in at around 25,000, 25,100. This market will remain jittery till we get past the 25,000, 25,100 odd mark. And if we break these levels, then maybe we'll head to around the 24,000 odd mark. The Nifty Bank, yesterday it had a weakish close, but that could provide a glimmer of hope. In case we are hoping for a bounce, this one needs to bounce. We ended below the 50, below the 100 EMA as well, and we've got big earnings that are coming up tomorrow. HDFC Bank as well as Kotak Mahindra Bank. And the positive to, if you want to view one of them from both these two perspectives is, these two are trading at similar valuations in comparison to say 2 years ago. So in that sense, valuations are still more palatable in comparison to other stocks. So I'll keep an eye out on both these two. There could be some pre-positioning getting into its numbers. That's where the Nifty Bank is going to be in focus. In terms of stocks that I'm looking at, well, RBI, they have wrapped Manappuram on the knuckles with regard to their subsidiary Ashirwad. So that's going to get a knockback. Remember, Ashirwad is more than 20% of its total AUM as well as of its net worth. And the fear is the promoter entity will have to infuse some capital over there to avoid any kind of erosion of the net worth. So that one's going to pull back to trade. Yes, valuation-wise, there is support, but this comes as a big, big negative for the stock. So we'll keep an eye out on Manappuram as well.
Okay, that's a stock to watch today, but let's get to the macro calls then. It's Chris Wood of Jefferies. In his greed and fear note, he says the base case is that the Federal Reserve easing cycle has begun and that in the much anticipated soft landing, the federal funds rate should be 3.5% by the middle of next year. That is also more or less the view of the money markets, which are now discounting a 120 basis point Fed easing by the end of June next year, even after Thursday's slightly disappointing CPI number in the sense that it came in above expectations.
Okay, there's another one. This is Lawrence Belanco on technicals. He's, of course, with CLSA, says downside momentum in Nifty stocks looks set to accelerate after recent break of its 50-day moving average and is in the cusp of breaking below early September and October lows at 24,694 to 24,700 area. He says such a move would confirm a short-term topping pattern and provide a downside target of 22,990. Essentially, a move back to the 200-day moving average. He says their ad recommendations are Eicher, Coal India, Power Finance Corporation, while they have a sell recommendation due to downside risk in Maruti Suzuki. Okay, well, Anurag Singh is a managing partner at Anzet Capital. Anurag, good to have you on the program. Good to see you. Thank you for joining us. So, what's the view, Anurag? You know, earnings, global seems pretty okay. Earnings here, as expected for the second quarter, is all coming in a little subdued, but markets were anyway focused on the H2 and markets here in a bit of a flux. What's the road ahead?
Good morning. Happy Friday. Prashant, you're talking about Indian markets or US? Let's start with the US.
Yeah.
Indian markets.
Why don't you take us? Yeah. You start with the US and then sort of come down to India. Yeah. Go on.
Makes sense. So, Prashant, US is all clear, right? And, Federal Reserve is cutting unemployment 4.1%. That's hardly any sign of trouble, right? And, keep in mind that for the peak of 4,800 that S&P touched sometime in November 21, it was crossed only earlier this year, right? So market has been range bound, between 3,500 and 4,800. And it took the time correction of almost like close to 3 years, in that range. So I think there is a bit of a, bullish sentiment. I think it's quite well placed. And I think both on earnings front, S&P is likely to hit about 250. Markets are at 22 multiple, but, you've got to separate these top 7 stocks from the rest of the 493. And then I think if you do that, you realize just about 20 trillion is coming from these 7 stocks and rest 30 trillion is from the rest of the market, which for a size of the economy, US economy, it is about 100% of GDP. So I think it's not, contrary to assumptions, the moment you take out 7 stocks, the market is very reasonably priced. And I think there are good bargains to be had, in the US markets, right? So that's the broad view, Prashant. It's all good. That's all good because market has taken a very reasonable time correction for the last 3 years. So that's the scene on US. Let me come to India, Prashant. I think to your point, I think the same behavior. Let's see, Nifty touched around the peak of something like 18,000 November 21. And since then, it kind of, spiked up even more to 25, 26,000 now. So that's like almost like a 33% hike, even right from the 2021 peaks that it made. I understand the earnings have caught up, right? We see Nifty earnings from like 425, 430 or to like 950,000 plus. But consider this, Q1 was just about 7%, and Q2 projections are around 4%. Now, any other market would have taken a very steep 20% correction, especially US, given these earning projections. But, given the flows in India, I think it just continues, right? That continues to perplex most of the investors, especially the foreign investors like me, Prashant.
So you were telling us that how the US markets went through a long 3-year period of consolidation before the breakout took place in S&P 500 this year. Do you think that's possible in the Indian markets case? What's happened has happened. From here on, for the next 12 months, what would the call be on India?
So, Priya, let's consider this. Start from, I understand earnings have grown about 22% CAGR for the last 4 years. But look at the nominal GDP. I like to highlight all the time that regardless of the real GDP number, right, that is distorted by the, how we calculate our inflation and how is the deflator plugged in there. Since 2013-14, the nominal GDP is growing at about 10%. And that's really not in sync with the kind of earnings growth we have seen. Now, it might be because one, the bank balance sheets were very clean, so banks were ripe for a very strong earnings rebound. There was a revenge spending post-COVID, right? So, of course, that had this consumer rebound spending as well. And finally, IT, which peaked in earnings, right, post the 2020 COVID lockdowns. Now, all of these confluences, coupled with the fact that Indian government started spending on infra, I think it created an earning boom. But when has Indian market really shown 20% YOY earnings growth for maybe even 10 years' time? It's not, right? So there are always these peaks that come in, but then there is a significant time correction. I think the time is right that we take a couple of years of time correction. And it'll be, by the way, it'll be very healthy for the long-term investors, especially the SIP investors who are pumping in all the money. History proves all the time that any money we pump in at 25, take it at 25 multiple for Nifty, I'm counting trailing, it doesn't really give good results in the next 5 years, right? So it'll be very good and very healthy correction if it comes in. I doubt it'll come in though, looking at the flows. Yeah.
Okay, all right, Anurag. Well put. I just hope it's not a couple of years. If I heard you correctly, a couple of years, and it's a couple of months. So that was my colleague Reema, Anurag. But we'll leave it.
Hi, bad.
Yeah.
Sorry.
Hi.
Yeah.
Well, we'll leave it there for today. But we'll have you back again soon. Again, good to hear you get your views, Anurag. Appreciate you joining us here on CNBC-TV18. Well, let's quickly run you through what's lined up here over the next. 2 hours or so. At 8:30, we'll be joined by Srini Palia and Aparna Iyer, Saurabh Govil of Wipro as they talk about their second quarter earnings. At 9 o'clock, we'll have Manik Taneja of Axis Capital as we talk about what to do with stocks, IT stocks. Pankaj Tibrewal of Ikigai Asset Managers, a market master of the day, at 9:15. Polycab Management joins us after earnings yesterday at 9:40 this morning. At 9:50, it's our special quarter se quarter tak. We'll have an analyst joining us to talk about the banking sector expectations. And 10:15, Latha will speak with Anil Rai Gupta of HUL India, and they will take their quarterly discussion forward. Stay tuned.
So time for a quick break, but on the other side, we have a lot of stock-specific action to track, so we'll get straight to our top 10 segment. We're looking at all those stocks that are flashing through the screen: Infosys, Axis Bank, Wipro, LTI Mindtree, Tata Chemicals, CEAT, Polycab, City Gas Distribution Companies, Manappuram Finance, as well as Zomato. Stay with us. We'll get into further detail on the other side.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Welcome back. Let's kickstart our individual stock discussion and how they're likely to move with Infosys. That's the big one. Now, it was a good quarter, but there is no positive surprise. And I think it gets reflected in the way the ADR closed yesterday. The stock ADR was down nearly 1%. Remember, the stock has also had a very good rally. Yesterday itself, it was the top Nifty gainer, 2.5% higher, 40% since June. The street was anticipating good numbers. It got good numbers, but it didn't get a great set of numbers. Not a big beat compared to street expectations. So here are the numbers. Dollar revenue growth, 3.8%. Constant currency revenue growth, 3.1%. FY25 guidance has been upgraded. It now stands at 3.75 to 4.5%. BFSI has done well, having grown 2.7%. The brokerage view is, and most of the brokerages are upbeat on Infosys, it's the top call in the IT pack. Morgan Stanley says a slight correction is possible in the near term because of the slight miss in Q2 weak deal wins, but they would build positions on any potential correction. Citi says some of the forward-looking indicators which concern them. One, large deal TCV is down 7.5%. Headcount is up year-on-year, but it's still down on a year. It's up quarter-on-quarter, still down year-on-year. And the guidance implies no growth in Q3 and Q4 at the midpoint, which is why they're neutral on the stock. So going with red for Infosys.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Abhishek. He's here to tell us about Axis Bank's numbers. Morning, Abhishek.
Morning, Nigel. So Axis Bank numbers were mixed, but more on the weaker side. Deposit growth at just 13.7% YOY and about 2.3% sequentially. The CASA or the low-cost deposit ratio has fallen below 41% for the first time in last 9 to 10 years. Advances growth at just 11.4% YOY is the weakest growth that you are seeing in last, about 12 quarters. So the CD ratio is on the higher side at 92%, so low deposit growth has impacted the loan growth as well. Core operating profits, that's declined on a sequential basis for the first time in last 5 quarters. Now, treasury income of about 1,111 crores, that aided the bottom line. However, the net interest margin has come in at 8-quarter low. Asset quality slippages have declined sequentially, but they have been, improving on account of the highest write-off that you are seeing in Axis Bank over the last few quarters. So with reference to the PNL versus ARPOL, the NII is below ARPOL, but treasury income has enabled profit to be ahead of ARPOL. Back to you.
Okay, well, Abhishek, thank you very much for that. Well, let's talk about other earnings as well, right? IT earnings. So Wipro and LTI Mindtree reported as well. And again, a little subdued.
So Wipro was actually a good quarter. The company reported revenue growth after 6 quarters of a revenue contraction. So things are picking up under the new CEO, Srinivas Pallia. Margins too beat street expectations. They expanded by 30 basis points. Their large deal wins are the highest that we've seen in the last 10 quarters. So things are on the right track. But here's what's disappointed the street, the Q3 guidance. The company is guiding for -2% to 0%, which means negative growth in Q3. The company said it's on account of 3 reasons. 1, furloughs. The second reason is lower working days in December, which typically takes place. And third, weakness in Europe. Now, talking about LTI Mindtree. Now, here, again, numbers were slightly softer than street expectation. That's the poll. 2.7% revenue growth was anticipated. The company delivered 2.3%. Margins expanded by 15 basis points. BFSI did well. It drove growth by close to about 4%. But on the whole, the top line growth was a bit subdued. So I'm going to go with red for LTI Mindtree.
I'm a little worried about the tech companies because of the pre-positioning in all of them as well. They've rallied so much and, no one was factoring in any kind of negative surprises. So we'll have to keep an eye on it.
So there are no negative surprises. It's just that there are no positive surprises also.
Exactly.
It was a good quarter for all of them. They've delivered largely on expected lines.
Absolutely. Well, let's move on then. Sonal joins us to tell us about Tata Chemicals. Sonal?
Good morning, Nigel. Well, Tata Chemical numbers, they were largely in line with what was expected. So it's a decline that we have seen, a big one on a YOY basis. Revenues were flat at around 4,000 crore rupees, but the EBITDA declined by 24.5%, leading to a margin compression of around 500 basis points and a profit decline of 46% to come at 267 crore rupees. The balance sheet has worsened a little bit because their net debt has increased by almost 800 crore rupees to come at 5,200 crore rupees in the September quarter. The company says in India, demand was stable across end-user industries, but in America and Europe, demand was down. They experienced muted demand in both these big geographies, and net debt is higher because of lower EBITDA and higher working capital. We'll get the management commentary. The conference call is at 6:30 p.m. today, but going with red, considering that these chemical stocks are not seeing any recovery in demand in general.
Right. Thanks very much, Sonal, for that. Well, CEAT is also in focus after second quarter earnings. Sudarshan has got details here. Sudarshan, morning.
Morning, Prashant. So it was a weak set of earnings and the weakness came from sharp increase in raw material costs, especially natural rubber. And this led to a sharp dip in gross margin, which has fallen 600 bips to 37.3%. Now, talking about the headline numbers, profit was down 4%, revenue has increased 8%, while EBITDA has fallen 21% and margin has come down 400 bips to 11% year-on-year.
Thank you. For that, let's get to Polycab then. Upasana joins in with the numbers.
Good morning. Polycab reported mixed set of numbers in its Q2 FY25. Revenue was above the estimates, PAT was largely in line, but EBITDA margin was a big miss. Now, companies reported highest ever Q2 revenue, and companies H1 revenue has also surpassed 10,000 crore mark for the first time. Now, company's Q2 revenue stood at 5,498 crore with a growth uptick of 30% on a Y&Y basis. The strong revenue growth was mainly led by company's cables and wires segment. Now, EBITDA margin is where the pressure lies. It saw a downtick of about 290 basis points on a Y&Y basis, stood at 11.5% while we were working with a poll estimate of 13%. EBITDA margin was mainly impacted by higher competition and the mix change, that is lower share of high margin domestic distribution business. Now, PAT stood at 445 crores, which was largely in line with an uptick of 3% on a Y&Y basis. So all in all, mixed set of numbers from Polycab in its Q2 FY25.
Got that, Upasana. And let's wind this down then with the city gas distributors. Sonal, that APM gas supply cut finally came.
Finally did. It's a confirmation that we have received from MGL and IGL. They said that gas allocation has been cut by 20% from 72%, so it's around 50% levels now. And they also say that this will materially impact their profitability and they will be in discussion with key stakeholders to minimize the impact as well. Now, the impact would be, it would materially impact earnings across all the companies that are in this sector. Now, Jeffrey says 6 to 7% price hike is required to maintain margins. If they maintain margins, this will impact their volumes as well. And sector derating is likely because of that. ICICI Securities says 4.5 to 6 rupees per kg price hike is needed. If price hike is not taken, EPS estimates will be between 20 to 32%. So either they lose on margins or on volumes, and that's why red tick is expected on these stocks.
Thank you very much for that. Let's get to Wipro then. That's going to be one of the stocks of the day. Remember, good Q2, but the Q3 guidance is disappointed. The CEO, Srinivas Pallia, CFO, Aparna Iyer, and the CHRO, Saurabh Go, will now join us on the show. Srini, first question is on the guidance. At -2 to 0%, it's disappointed the street. What are you seeing in H2? What makes you cautious?
So let me specifically ask in terms of talk about the Q3 guidance. We factored in the furloughs, we factored in the number of days of working in this particular quarter, and also we factored in for Europe in terms of the slowdown that we have experienced. Based on these three factors, we have kind of guided between that range. Having said that, we do have momentum across the markets, include, for example, Americas, across sectors we see a good pipeline. Also APMEA, we are seeing good pipeline, and we'll continue to stay focused on executing to that.
Okay, just to follow up then, the furloughs in Q3, are they similar to what we've seen in the past? And also this weakness in Europe, we've seen that in in Q2, revenues from Europe declined for you. How much of a negative is that in the coming quarter?
As far as furloughs are concerned, if you look at this quarter last year, I think it was very similar. So it's not something which is out of the ordinary. It's very similar. Specific to Europe, like I said, it's a few client-specific ramp downs that happened, which actually impacted our growth. But having said that, we continue to see the deal pipeline and deal momentum in Europe. I think the focus is on winning them, and this is across the countries that we operate in Europe and across the industries that we operate in Europe.
Okay, all right. Thanks for joining us. Aparna, if I can come to you, what drove the margin expansion to 16.8%? And do you think you can push this number towards 17% by the end of this financial year?
I have shared that we are one step closer, in Q2 towards that aspirational band that we had laid out of 17 to 17.5. We're very encouraged by our performance in Q2. We expanded 35 basis points. This is after absorbing 1 month of salary increase that we rolled out in September. All the levers that we've been working through the last few quarters are paying off. We've been improving our fixed price productivity. Our utilization is nearly at an all-time high. Our offshoring is very healthy. We've also done a lot of work in G&A optimization, right? In terms of some of our acquired entities that, there are synergies to be realized as we drive integration. So some of those levers have really played in well. Capco has also been performing very well, and that's also adding to our margin expansion. Overall, we are happy with how the operational excellence has played out.
Got that. Let's focus then on hiring. The net headcount is up by close to 1,000, and you have been hiring from various campuses as well. How much have you hired so far? How many? And how much more to go? And also a quick word on attrition. That was up slightly. Will it stay at these levels?
So let me start on freshers first. From this, we had not gone to campuses last year, but from H1, we have Q1 and Q2, we have onboarded freshers. We intend onboarding between 2,500 to 3,000 freshers every quarter. So that will be a constant band in which we'll continue to add freshers. And by the end of this quarter, that is Q3, we would have taken care of all the backlog which we had during the COVID time of the offers we had made. So from that aspect, it's a smooth growth going forward. Second, attrition headcount has been growing marginally over the last 2 quarters, so which is a positive. We have invested in certain areas. Our utilization has come down slightly because we invested for future growth, and we believe that this trend would continue going forward. As far as attrition is concerned, we have seen a slight uptick. In one way, it could be some early signs of market looking up and more demand, but we are comfortable from the supply side, and we believe that we'll be in a similar band from an attrition standpoint going forward.
Okay, attrition to stay at similar levels or similar band, as he called it, going forward. Srinivas, coming back to you, Capco has been strong for you, and this provides you the consulting edge. Revenues for Capco went up by 3.2%, outperforming the overall company average growth. Do you think Capco can continue with this kind of growth momentum?
So first and foremost, I think Capco is a great asset for us. It's the tip of the spear, and it helps us in terms of consulting-led opportunities in the sectors that Capco is very strong in. So with that in the context, in fact, one of the large deals that I talked about today is actually a combination of Capco rising and the entire consulting piece of Wipro coming together. In terms of the growth and going forward, all I can say is that there's a good momentum for Capco, and we continue to see traction. And there is a discretionary spend, that we are able to actually gather, specifically in the BFSI segment, across US and UK and Europe. Having said that, we are also seeing good traction for us in APMEA and Latin American countries, specifically for Capco.
So this discretionary spends that you're able to capture because of Capco, are we seeing discretionary spending come back only in BFSI, or is it even coming back in the other sectors?
If you ask me specifically, discretionary spend remains the same like it was last quarter. So it's been consistent. There's no significant uptick. But for us in the BFSI segment, definitely we have seen a little better opportunities. And obviously when Capco wins, it's going to be the discretionary spend. In that context, maybe I can give you a color and say, maybe we have got certain businesses very specific to discretionary spend, which is good news in the long run.
Thank you, Srinivas, Aparna, Saurabh, for your time. That's the Wipro management for you. We'll slip into a very short break on that note. We'll come back with more on the markets, individual stocks. Stay tuned.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you, because I know that you believe, and I think I tend to agree with you, that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype, and the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
Open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, near the specific set of breakthroughs.
That brings me to the question of, 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what...
Welcome back. You're tuned into Bazaar Morning Call. Well, let's focus on a couple of more stocks that we're tracking for you. Manappuram Finance as well as Zomato. Abhishek, you go first. Tell us about Manappuram Finance. RBI has wrapped its knuckles on one of its subsidiaries. Please fill us in.
Nigel, that's exactly right. RBI has come down very harshly on some of the subsidiaries or, some of the companies that are operating, especially in the NBFC MFI space. They have taken actions with respect to stopping of sanctions and disbursals from these entities from 21st October onwards. So they have directed 4 NBFCs, which are, Asirvad Microfinance, which is the subsidiary of Manappuram Finance, Arohan Financial, DMI Finance, and Navi Finserve as well. So they have asked Asirvad MFI to stop sanction and disbursals of loans. Now, the action taken by RBI is based on the fact that they have observed in the pricing policy of these lenders, which is found to be in excessive and not adhering to the guidelines that are being set by RBI. So NBFCs were also found to be in non-adherence with respect to the assessment of household income and the consideration of repayment obligations of these microfinance loans that they had given out. So they had observed deviations with respect to evergreening of loans, that is top-up loans, conduct of gold loan portfolio, disclosure requirement on interest rate and fees, outsourcing of core financial services, etc. Now, one man's loss is another man's gain. So the loss that Manappuram might face may be a gainful point for Muthoot as well as IIFL Finance. We'll keep that also on focus. Back to you.
All right, Abhishek, thank you very much for that. Well, RBI is coming down hard, isn't it, on some of these NBFCs, MFIs, and of course other NBFCs as well, as Abhishek points out. Well, Zomato is the other one we are focusing on. They're raising money, but why is the question? Vinny's got details on the news flow. Vinny, morning.
Absolutely. Good morning. Why is the question? And that is why maybe we could see some subduedness on Zomato stock today. QIP, they're planning to raise the funds via on 22nd of October is going to be the board meeting. Let's not forget, as on Q1 FY25, they already had 12,500 crore cash balance with them. And Zomato's cash balance has been consistently increasing every quarter when you look at it. This 12,500 crores is obviously before the Paytm ticket business that they acquired for around 2,000 crores. So net cash balance also as of now would be around 10,000 crores. The concern comes in that why do they want to raise money? Because they have enough on their plate and enough on their books as well. So that is something that may cause a bit of a subduedness in the stock today, and expecting Zomato to be in the red side today.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Sid Khemka, head research at Motilal Oswal Financial Services, who joins us. Hi, Sid. Good morning. Good to see you. Ben, what's your take on Zomato? They're already sitting on 10,000 crores of cash. They yet want to go ahead and raise some money. What's your best guess, and how would you approach the stock?
Yeah, good morning, Nigel. Thanks to be on the show. So I think that's the question the entire street is asking. With 12,500 of cash before the acquisition, roughly we will take about 10,000 crores of cash already there. So it looks like the company is trying to build in a war chest for the growth going forward. So some of the newer ventures, for example, the district vertical, which it plans to build after the Paytm acquisition, the going out vertical, that would need some amount of cash. I believe that could help, the fundraise could help towards that extent. It is also considering to relaunching its quick parcel service, which was earlier named Extreme, also strengthen up its food delivery business. I think there are capital requirements to build this business given the increasing competition, especially in the quick commerce business where they have now started doing very well. So there will be definitely questions in the market with respect to what's the size of the QIP and what the intent is to be. But definitely, I think they are building up this capital to build businesses over the next few years.
Siddharth, hi. What about Manappuram Finance? Morgan Stanley today has downgraded it to an equal weight. Their target price is slashed to 170. They're cutting consolidated earnings forecast by 20% for this year and 30% for FY26, FY27. Jefferies has also downgraded the stock. The parent may have to infuse capital if the subsidiary's net worth is eroded. So now if someone has Manappuram Finance, today you'll see the stock under pressure. Is it still a good idea to exit? What
Did the stock to neutral? We expect the company to underperform till the RBI ban is revoked, which may take anywhere between 6 to 9 months at least, and if not earlier. So even we have cut our estimates by about 9% for this year and up 17% for the next year to factor in the lower loan growth as well as So I think the strategy should be clearly to exit, and because this is a serious issue with the business. If you look at the contribution, it's almost 30% contribution comes from the Ashirwad in terms of AUM, about 20% from in terms of profitability. So that will be a big hit to the Manappuram business, and even the future plans of getting the Ashirwad IPO in future. So the story gets pushed by at least 2 to 3 years from now. And while the management sounds confident that they will look into the issues and resolve it as soon as possible, but clearly we believe that this issue could lead to underperformance in the near term. Even if the stocks opens about 8 to 10% lower, one should exit. Our target price is 160. So I think that is where the stock price will open today, and that could be an area where one should exit and look at other opportunities in the market.
Very clear in that thought. That said, you're saying 160 if it opens out, you want to get out of it, you want to stick to the winners. Got that said, request you to just stay with us for a little bit more. Let's focus on Zomato. As we said earlier, they're looking to raise some money, but the street is a little bit confused. Why do they want to raise money when they have 10,000 crores of cash? Karan Tarani, the Senior Vice President Research Analyst at Elara, joins us on the show. Hi Karan, good morning and good to see you. When people are baffled, why do you think they want to do this fundraise?
I think we are also quite confused in terms of why do they want to do that. I think the possible reasons in terms of the investments that could pan out over the next 2 to 3 years, as we see, is that one is, of course, the investments into the quick commerce business beyond metro markets to really create this category and scale up. Maybe invest into inventory, high value inventory in the quick commerce side because new verticals are opening up. Third could be a potential inorganic acquisition. But I think with Paytm right now, they've already paid 2,000 crores. I think that's also largely done for now. Fourth possible reason could be investment into marketing, and even that is not more than 1,400 crores in terms of annual run rate. And as time moves by, the free cash flow of the company will also grow. So this company makes close to 110-120% of FCF versus EBITDA as a conversion. And the EBITDA number is going to about 3 to 4 times over the next 3 years. So that's the kind of multiplication effect we are seeing because of better margins in food and Blinkit being at quick commerce. So it's quite astonishing in terms of why they're going to raise capital, but we'll wait and wait in terms of what the management has to say here.
Marketing, advertising could be one, but you don't need so much cash for that. One could be Blinkit expansion. And what about acquisition? Are there any potential, acquisition candidates out there in the market which they could be interested in? Or are there white spaces that they may be targeting, which they've hinted about earlier? And to fructify those plans, the company needs cash now?
So I think, they've got close to 10,000 crores of cash, even after we assume that 2,000 crores is being paid, to Paytm. I think 10,000 crores is more than sufficient to take care of the reasons which I just pointed out in terms of marketing and quick commerce and expansion and so on and so forth. And this number will only increase from here on because they will generate, more than 1,000 crores of free cash flow in FY25, and that number will also go 2.5-3 times over the next 2 years. In terms of acquisitions, I think, food was a very different proposition wherein they had smaller targets, they had smaller companies where, each of them could acquire. Zomato and Swiggy both have done acquisitions in the past in food business to consolidate. I think, unfortunately, if you look at the quick commerce side, there are not enough opportunities for any kind of acquisition, right? Because if you look at most of the players right now, except for Zepto, each of them is a large conglomerate. Now, if you take here in the case of Big Basket, if you take in terms of Flipkart, Amazon wanting to come into this space, I don't think any of them have any scope of potential inorganic acquisition or something of that sort. So we'll have to wait and watch in terms of why they would want to raise this kind of a capital. Maybe, the Swiggy IPO is just around the corner, and, the investor interest is very, very high right now in terms of investing into these high growth companies, and they haven't raised any kind of money whatsoever since their IPO, in fact, in 2021. As per what I was reading. So I think they would want to take advantage of the situation in the best possible manner and probably, just create a cash pool for some future, organic plans or some acquisition plans.
Karan will know. And we're trying to, of course, reach out to the company as well, and we'll try and speak with them about some of this. But good perspective, Karan. Thanks for joining us for that quick one. Appreciate it here on CNBC TV18. We'll take a quick commercial break here. Mitesh and Srikanth are with us this Friday morning with Technical Trade. Stay with us.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype, and the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us...
Okay, welcome back. There's 7 minutes to go for the pre-open session. Mitesh Thakkar and Srikanth Chauhan are with us with what they want you to do this Friday morning. GIFT Nifty implying a 100-point plus cut once again. Gentlemen, morning. Mitesh, we read out that quote from Lawrence Belanco of CLSA, who also does technicals, and he's got much bigger downsides here, at least what he's projecting. What's the sense, Mitesh? Are we at the start? There is this head and shoulders which many are pointing to. Some of the other traditional indices, etc., are all looking a little oversold. What's the thing to do here?
Prashant, I think, to me, I'm not looking at a head and shoulder pattern because the head is unusually large. I'm not sure whether it's a proper head and shoulder or not. But what has happened in the meanwhile is that, and I've been, on the negative side or the caution side purely because of the fact that the weekly indicators and the averages have started to turn down, which typically means a stronger correction. Now, the good part is that in this entire thing, the Bank Nifty is still much above 50,500. And I think, that if starts to break below that level, I think that will add to the pain of the Nifty. Broadly, I've called for 24,300 area, give and take 50 points as the first support area for the Nifty. If you look at, levels below that, then there's 24,200. There's a gap which started the entire rally in the month of August. And then there's a pivot at 24,000. So there are multiple supports, but the structure being negative means that while you will, keep getting bounces from the support areas, the pattern of lower highs and lower lows can continue. So I think the market is clearly in a corrective phase. You might want to tactically play it out near the support levels, cut your short, wait for a bounce back again to go short. But yeah, in the short to near term, I think, medium term, the charts are slightly on the weaker side.
Okay, short the bounces if you get. We are in a bit of a corrective phase. Shrikant Chauhan is also with us on the show. Shrikant, how would you approach markets this morning?
Good morning, Rima. I think, what you're saying is right. The formation is certainly showing weakness. It was like consolidating. It has been consolidating between the range of 25,300 and 24,700. And today, on the back of weakness in the GIFT Nifty, we could see the markets opening below the levels of 24,700. So it's a very important level for the market. And in case if we see the market is breaking to the same, then the next level to watch out for would be 100-day simple moving average, which is around 24,500 or 24,450. So formation is weak. In case if there is any pullback, then certainly we should look for creating short positions. Today, on the back of lower opening, we could see some rebound during the day. That's the view. But otherwise, I'm of the view that the markets are very clearly heading for 24,400 or 24,500. Bank Nifty is also is showing weakness. It failed to surpass the level of 52,000. So the next level to watch out for would be again 50,500 or 50,400.
Okay, all right. Got that, gentlemen. Good morning and welcome to the show. Mitesh, you go first. Tell us what individual stocks you're tracking.
Yeah. So, Nigel, on the stock side, last few days, I have more of sell calls, purely because of the fact that one, the GIFT Nifty is trading negatively, and two, I think the view is slightly bearish. MGL is a sell with a stop at 1782 for a target of around 1720, 1715. Glenmark is a sell. After a long time, sell on Denmark because it's showing first signs of profit booking. So sell with a stop at 1760, look for targets of 1680. And BHL is a sell with a stop at 261 for targets of 240. And one buy call, that's LTI Mindtree. Keep a stop below 63.30. We'll take a tight stop and look for targets of 65.40.
Buy LTI Mindtree today. Shrikant, what would your stock calls be?
Yeah, I think these NBFCs are showing weakness, and Shriram Finance, which was down yesterday, nearly 3-4%, is showing furthermore weakness, and we can expect the levels of maybe 3,100 or 3,050 in the near term. Currently, it is around 3250 levels. So at current levels, it's a short with a stop loss at 3300. And on the buying side, because the markets are oversold in the short term, we could see some rebound. And in that case, Tech Mahindra should be on the watch list. There we are seeing higher top, higher bottom series, and it is very close to its previous highs of 1780 or 1790. Based on technical formation, it's a buy at current levels around 1700 with a stop loss at 1650. Target somewhere around 1800 levels.
Okay, thank you very much for that. We will slip into a very short break. We'll come back with the pre-opening. We'll talk about stocks like Manappuram, Zomato, see how they open up, and even the IT names. Manik Taneja of Axis Capital will decode the Q2 IT earnings print for us.
Or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of TDM that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, in the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, you know, because I still haven't yet found the cause that I really want to support, as in, like, you know, something which is close to my heart. Yeah, so they're also very committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Welcome back. You're watching Bazaar, Open Exchange, live from the CNBC-TV18 Motilal Oswal studio. Now to talk about the IT earnings, Manik Taneja from Axis Capital is with us on the show. Manik, good morning. First, if you could share your key thoughts on the three numbers and what are the trends which stand out now that we've got the entire picture a bit clearer.
Good morning, Rima, and thank you for having me on the show. So I would say across earnings that we've seen in this quarter till date, BFS continues to hold up well, and which is where the excitement about recovery in the financial services has been, and thereby numbers don't seem to be disappointing on that front. I would say growth performances across different other verticals would vary according to across different companies, depending on how they are positioned and their customer concentration. Good part is that you started to see headcount increase after being rationalized through a better part of second half of FY23 and FY24. Some of it is also a function of the fact that companies are working at peak utilization rates, as well as the fact that they need to hire junior resources to manage their average cost. But it's a welcome sign. That's the way I would basically sum up the internals. From a company-specific standpoint, I would say probably Wipro's numbers were in line to better than what Street expected, while for the rest of the pack that reported yesterday, numbers were in line to slightly lower than what people anticipated.
Do you think the Wipro management is being cautious when they give back the stock to perform?
No, so Wipro remains the least expensive name amongst the tier 1 coverage, but that's for the right reasons given years of underperformance on growth, and we can keep on talking on and on about that aspect. That being said, I would say from a near-term standpoint, their numbers in second quarter were okay. The only negative point was the weak guidance for December quarter, and just look at this aspect that Wipro reported a positive sequential growth after 6 quarters of decline. So from a rate of change standpoint, Wipro did surprise positively in the current quarter. And what they are suggesting is that things will start to improve from the start of calendar year 25. In addition to that, you also will have some news flow around their new capital allocation policy. So there are certainly some tactical triggers for Wipro, and as I said, Wipro is the cheapest amongst the tier one pack.
So now for the next 3 months, Manik, which is when we will get the Q3 earnings, and then we will have further triggers about, further cues about the way, the direction of the earnings growth. So for the next 3 months, which company, according to you, offers the best risk reward? For Wipro, you said there are tactical triggers. And also, if you could elaborate a bit more on the capital allocation, what should one expect?
No, so Wipro's prior capital allocation policy has been to pay about 30% of profits as dividend. And then they have interjected with buybacks at periodic intervals. But if you look at the last 5-year period, they might have paid close to about 50% of their earnings back to shareholders. In contrast, you've seen the likes of HCL Tech step up their payout metrics, and that has also been a big contributor to the way HCL Tech has got re-rated and now trades almost at par with Infosys or TCS. So given that Wipro continues to do well on cash generation, one would probably expect a step up there as well, and that could drive some excitement. We'll have to see as to how the business improvement plays out, because Wipro has always had a number of false starts and then once again getting back to its underperforming streak. But certainly there are tactical triggers in the near term for Wipro.
So the possibility is that Wipro will start paying out more by way of dividends to the shareholders. The current capital allocation is 30%.
Yes, that's correct.
Okay, and that could go up to 50. I mean, sorry, the current policy is 30%. They've been paying out 50%, but it can go up even higher, according to you.
That's
and that could be a factor for re-rating.
Yes, that's correct.
What about Infosys? Because Infosys is where, I know you've not been very bullish on Infosys, but that's where the consensus bullishness lies. What's the call now on Infosys? And when you spoke to investors yesterday, post the Q2 numbers, what did they tell you?
No, so in case of Infosys, with the way expectations were running, I would say numbers were a tad disappointing compared to where the expectations were. And from an internal standpoint, I would say there were both a combination of some hits and some misses. From a cost standpoint, you saw headcount increase sequentially. You saw guidance getting upgraded. From a growth construct standpoint, almost all verticals with the exception of retail and other segment grew in the current quarter. Qualitative commentary stays intact. From a negative standpoint for Infosys, I would say the pushback of the wage hikes and the fact that the growth in the current quarter once again included a higher portion of third-party software, and the third element being that the guidance upgrade was slightly lower than anticipated. So I would say those were the negatives. All in all, our numbers haven't changed much for Infosys after this quarter's numbers.
And a quick word on LTI Mindtree. They're executing well on BFSI, which is where the delta for the company will come in. What's the call on LTI Mindtree?
So in case of LTI Mindtree also, I would say the performance in second quarter was in line with what they had suggested after Q1. And unlike the usual improvement that you see in second quarter compared to Q1, the quarterly performance was just about okay. And over there also you saw headcount increase, but their qualitative commentary is for some moderation in sequential growth in third quarter. And given some of the wage hike related headwinds on margins, I would say the street would have cut estimates even for LTI Mindtree after these results.
Okay, some EPS downgrades for LTI Mindtree. Mani, thank you very much for joining in. So the two key takeaways by way of a trend. One is that the BFSI recovery is intact. All the companies have shown a pickup in BFSI. And secondly, it's heartening to see an increase in the overall headcount. So companies are back to hiring, which does suggest improved demand going forward. Remember, headcount was being rationalized for the last couple of quarters, more than a year now. But now hiring is back. Even Wipro hired about 1,000 employees on a quarter-on-quarter basis. For Infosys, I think after 6 quarters of a headcount decline, this time the headcount went up by 2,500 employees on a sequential basis. Mitesh is back with us for a 9:10 call. Mitesh?
Yeah. I'll go with a sell on MGL for targets of 1720.
Okay, all right. Mitesh, just one more quick question on Reliance Industries and HDFC Bank. Levels we're tracking with the HDFC banks would be important in the second half of trade because they'll be pre-positioning ahead of its numbers. But just important levels you're tracking on both these two?
See, Reliance, I think, one has been underperforming and now looks slightly oversold to me. So I don't know whether it will fall much. There's a good support coming in around 2680 and then at about 2580 levels. So 2680, if it breaks worse, I think I'm looking at is 2580, not below that. Then, we'll look at some kind of consolidation and reversal from those levels. And HDFC Bank, if I was to talk about, it had a good run and then a decline and, it's now showing signs of contraction after that rally and then a decline back to the same level. So my sense is that it will do 1700 to about 1620 kind of range.
Thank you. In pre-opening, the Nifty is down about 85 odd points and Manappuram General Finance is straight away, it's a slam dunk of 10%. Abhishek?
Well, to begin with, RBI has taken action on selected NBFCs, which include NBFC MFI as well. So they have directed 4 NBFCs to stop sanctioned disbursals of loans with effect from October 21st. So if these 4 NBFCs, the names are Asirvad Microfinance, which is a subsidiary of Manappuram Finance, Arohan Financial Services, DMI Finance, as well as Navi Finserv. So they have asked Asirvad MFI to stop sanction and disbursals of loans, which is a subsidiary again of Manappuram Finance. Action is based on concerns that have been observed with respect to pricing policy followed by these lenders, which is found to be excessive and not adhering to regulated guidelines as well. Now, NBFCs were found to be non-adherence with respect to assessment of household incomes and consideration of repayment obligations with respect to the microfinance loans. So deviations were also observed with respect to evergreening of loans, which is top-up of loans, conduct of gold loan portfolio, disclosure requirement with respect to interest rate and fees, and outsourcing of core financial services, etc. Back to you.
Okay, all right. Abhishek, thank you very much for that. So keep an eye out on that one. Will open weekish. City gas distribution companies, we focused on them yesterday. Let's put the spotlight on them once again today, this morning. Sonal, morning.
Good morning, Prashant. Well, yes, it has finally been confirmed that there has been a cut in gas allocation to these city gas distribution companies. This is basically the raw material which is supplied to them. The domestic gas prices are lower than the imported gas prices. Now, the company says that the gas allocation has been cut by 20% from the 72% levels. This means that this sector will get only 50% domestic gas in their kitty in sourcing. This is due to lower gas production from lower fields, gas requirement of new city gas distribution companies, and now gas is also required for the petchem plant of ONGC, which is Opal. And on the back of this, IGL and MGL say that this will impact profitability. Company is in discussion with key stakeholders to minimize the impact. As I said, the impact would be lower earnings because now they will have to import gas, which is around 50 to 60% higher in terms of prices. This would mean a margin compression. Jeffrey says that EBITDA per SCM would fall by around 2.3 to 3 rupees per SCM for all these 3 companies, which would be around 24 to 30% of their Q1 EBITDA. They will need to take a price hike of around 6 to 7% to make sure that this impact does not come in their books. But if they do that, they take a price hike, volumes will be impacted. This would mean there is a possibility of a sector derating, according to Jeffries. ICICI Securities says that around 4.5 to 6 rupees per kg price hike is needed. If price hike is not taken, EPS impact could be anywhere between 20 to 32%. The highest impact being on IGL at around 32%. But there is a possibility that now that the assembly elections are coming, this could limit their ability to hike prices and pass it on to customers. In case that happens, they will take a hit on margins. But if they increase prices, they'll take a hit on volumes. So in both the cases, it will be a hit on their profitability.
All right, Sonal, thank you very much for that. So that city gas distribution companies, price increase is needed. But even after that, will there be any damage to earnings trajectory? Stocks in the pre-open are down sharply, 4% each on IGL, MGL. Gujarat Gas is down about 2% or so. Let's just look at the Nifty in the pre-open and how that is left off. Just quickly run you through with just a few seconds to go for market open. Nifty is down 84 points, so 24,665. So we're going to open right around the October lows and the 20-week moving average for the Nifty. I mean, will that hold? Will that provide any floor for the market? Remains to be seen, but it does. The trend does look weakish, definitely. Let's look at, and we'll, of course, track individual stocks because there were all those earnings, 4-5 names which reported post-close yesterday. Starting, of course, with Infosys, there was Wipro, there was Polycab, there was Axis Bank. So those also in a bit from now. But indices as always, and we'll pick it up from there. What do we have? The Nifty Bank was in the red. It's ticked into the green. So let's see, but absolutely flat. 51,300 on the Nifty Bank. It's about 1/3% cut on the Nifty, 24,671. We are absolutely exactly at the October low, 7th of October low right now. The Sensex is down about 1/3%. And the IT services index, and I think we'll look at individual stocks, but 1.5% cut on the Nifty IT index. That's getting smashed up a little bit. So 42,270 or so on the IT index. And as you can see, the Nifty heat map is emerging into view, and you've got, 13-14 names in the green, but the vast majority is in the red to begin the session. 78, 80 points lower for now. Rima.
Well, the IT index is getting smashed because of Infosys. It's straight away down close to about 2.5% at open as the numbers fail to excite the street. No positive surprise, and Infi is under pressure. Bajaj Auto continues with its weakness. Yesterday, it was down 12-13%. It's followed it up with another 1.5% fall. And the other, auto names, particularly M&M and Maruti Suzuki, continue to get hit. So these two stocks too down 1.5%. Now, Shriram Finance has been, under pressure. Yesterday as well, it counted amongst the top losers, and it's another follow-on now. It's a 3% fall on Shriram Finance, so it's overtaken Infosys as the top Nifty loser. So 3.2% gone on Shriram Finance. Infi is down nearly 3%. Maruti, Bajaj Auto, and M&M. Then these are the three stocks, where the weakness is quite, exaggerated, 1.5 to 2%. Titan under pressure. Tech Mahindra ahead of numbers tomorrow is also a bit weak. On the way up, you've got Axis Bank post their Q2 numbers. That's the top Nifty gainer, 2.5% higher. Wipro has opened up in the green. Remember, Q2 was strong. The Q3 guidance was dismal, but maybe the street is seeing the Q3 guidance as being a bit conservative. It's a new management. Maybe the CEO is being a bit conservative because even in Q2, he ended closer to the upper end of his own guidance. So perhaps, the guidance is taken in its stride. TCS today has gone ex-dividend by 10 rupees per share. The stock is mildly higher, and Eicher Motors is bouncing back, and some green seen on Sun Pharma. At the index level, it's about 0.5% gone on the Nifty and the Sensex. The Nifty down 130 points, but mid-caps are taking it on the chin.
Well, that's right. You have only 380 stocks that are advancing, Rima. And as we speak, the Nifty has hit its lowest levels we've seen since the 20th of August. So, that's another data point. We're now moving towards 24,600 odd mark. We need to bounce on somewhere around here. Otherwise, we're bracing for a level closer to around 24,000, or that's what it suggests on the charts. Stocks in focus, it's a perfect example of pre-positioning. On the Nifty itself, you have the biggest gainer, which is Axis Bank. The positions were such that there were a lot of shorts that got built up into the system. And now Axis Bank is the biggest gainer on the Nifty. It's up closer around 3%. So the shorts are being taken to the cleaners. And on the flip side, you have Infosys, that the street was hoping for a lot of positive surprises. Well, the numbers were pretty much in line, and the positioning was such that because of that overweight long positions, they are all getting unwound in today's trading session. That's the reason why that stock is down 2.7%. Stocks that are moving around, IGL, MGL, both of them down 8% each. Big downtick is what we're seeing. Zomato, they want to raise money. The street doesn't know why. So that's why that stock as well is down closer to around 3.5%. We'll wait for further clarity on that front. What's doing well? Pidilite is up close to 2%. So that's standing out as one of those big winners. Manappuram is locked down close to around 10% as we speak. So big downtick is what you're seeing out there. And Muthoot as well, for the time being, that's down only around 0.5% or thereabouts. But this cut is getting a little bit more wider now. We're headed towards 24,600. Let's see if at any point of time we see a bit of a bounce in the Nifty Bank as well, trading with a cut of around 100 points. If we have to see a bounce, it'll have to be the banking pack that'll have to do the heavy lifting today because IT is dragging.
You know, and Nigel, so yeah, 24,600 around on the Nifty. And you just want to look at a few other names, right? Polycab is the second biggest volume-led loser. It's down 5.5%. This is, of course, earnings reaction. There's a margin miss for Polycab, as there was for KEI, and I think for Havells as well. So these wire and cable companies not having a good day. Guess what's the third largest volume-led loser? It's KEI. KEI is down another 4%, and it's come off quite sharply in the last 3 days. So 3 days back, stock was at about 4,700. It's under 4,000 rupees now. So that's a pullback. IGL is down 8%, and Sonal was just talking about some of these names. I mean, again, that's a very large move coming in on IGL. But let's just look at the others as well. MGL and Gujarat Gases as well, and see what's happening. In the pre-open, they were all down 4% each. MGL and Gujarat Gas will come up on your screens, and we'll look at those as well. Shriram Finance is down 3%. There you go. MGL is down 8% and Gujarat Gas is down 3.5%. Shriram Finance is down 3%. It's got volumes in it. There is CEAT, which is down 5.5%. CEAT is a big mover. 27.36 on CEAT. Again, there's an earnings reaction. And I think as we highlighted earlier, Manappuram is limit down 10%. So for the time being, temporary freeze, I'm assuming. So 100 and just about 160 basically on Manappuram at this stage. Gujarat Gas and Quick Heal is another mover. Quick Heal is down 10% as well. Stocks at about 687 right now.
So Quick Heal is reacting to numbers, disappointing numbers. Profits are down 67% year on year. So that explains the 9.5%.
And I think it had a bit of a run up going into these earnings. I remember one of these days had a 10-12% kind of a move. So maybe there is that element as well. On the upside, Axis, of course, is there. Mazgaon is up about 2%. Wipro is still 3% higher. These auto names, maybe if you can quickly take a look at the Bajaj, which was the big knock yesterday, because Eicher is up about 2%. Eicher also was down about 3.5-4%. Bajaj is down another 1.5% after yesterday's 12% cut. Look at M&M, which was also down sharply. And Maruti, of course, is the other one, which should also come up on your screens. So, that's basically the picture. And what we'll do is we'll put some of these MFIs and NBFCs just to kind of see if there is anything which the market is making of the RBI actions for specific entities. We're seeing the action on Manappuram, but if there's any signaling effect out there at all, especially microfinance companies more than anything else. Well, let's welcome in Pankaj Tibrewal. He's founder and CIO at Ikigai Asset Managers. Pankaj, good morning. Great to have you with us here. Thank you for your time. So we are in a bit of a firm downdrift. You've been cautious for a while, Pankaj. Now, the point is earnings are coming in, but markets had kind of written off second quarter earnings. They were looking at H2, third quarter, fourth quarter for recoveries. But is there a sense that maybe this festive season, which is an important part of 3Q, that perhaps is coming a little soft? We got an indication from Bajaj, for example, yesterday. What are you picking up?
Good morning, Prashant. What we have been saying is that earnings growth is slowing down, and partly to do with the high-frequency indicators which we have been tracking. The government has slowed down spending considerably. And if we look at the first 5 months till the data is available, the Capex expenditure is down by 20%. And if government wants to achieve that 11 lakh crore kind of a budgeted number, incrementally they need to spend 1,25,000 crores every month, which seems to be a little tall task. And hence you are seeing some kind of a slowdown. And we have been a little careful saying that the earnings growth momentum, last year we saw 30% earnings growth for the broader market, should come down more towards 10 to 12%. The way the earnings season has started right now, looks like the Nifty earning growth should not be more than 9 to 10% for the whole of FY25. On the festive season, yes, what your comment was that it started on a softer note. We have seen different pockets, behaving very differently. On two-wheelers, though the commentary by Bajaj was a little tepid, but the registration data which we saw is not that bad. Registration data is still showing some growth, maybe lower than the expectation what the market was, penciling it at. On the consumer durables, ACs have been quite okay, though there have been some softness in other categories. So we believe that overall earnings momentum has started to slow down. And Prashant, if you remember what we discussed in our newsletter, is that whenever earnings growth slows down, the rally in the market becomes narrower. And we have seen in the past that, it's very important then from a bottom-up stock picking perspective. And we believe that the easy money, which we saw in the markets for the last 3 years, is behind us. Markets will become more and more selective as you move ahead in the next 12 to 18 months. And here, portfolio construction and stock selection will play a very important role in generation of alpha. So my sense is that one needs to be a little careful on the names one is owning in the portfolio, and companies which can deliver 15-20% earnings growth will again become darlings of the market as you move ahead.
Pankaj, hi, morning. So which are the sectors, stocks, themes where we are likely to see the biggest earnings downgrades or cuts versus expectation? And are you lightening your position in those?
So if you look at in the first half, the major sectors which have been dragged for the overall earnings growth is metals, oil marketing companies, energy as a sector entirely in terms of upstream, downstream, cement. So most of those sectors have led to a large bit of disappointment. And if you look at the start of the earnings season, clearly 4 or 5 companies are leading to a bit of a downward revision. First is the steel companies, both Tata Steel, JSW, and then Reliance and ONGC, which are leading to a bit of a downward revision on the heavyweights. But broadly speaking, I think earnings moderation is clearly on its way. And across sectors, we are seeing that the estimates are on the higher side, and we need to be a little careful on the broader market. Though, compared to Nifty, I believe that mid and small caps can offer better earnings growth as you move ahead. But overall momentum, which we saw for the last 5 years, where Nifty 500 companies compounded their earnings at 22%, probably may not be repeating this year and next year. So in that case, the breadth will become narrower and the style change is definitely happening. For the last 4 or 5 months, if you look at value, momentum, high beta, they have all taken a backseat, and low volatility, growth, and quality has made a comeback. And that is visible from the indices. Also look at the dispersion within sectors. Defense index is down by 18% in the last 3 months, whereas the healthcare index is up by 14%. And similarly, if you look at the financial services index, it's in green. The consumption index is in the green. So I think broadly, dispersions are very high. And there, if you are good at stock picking from a bottom-up perspective, because the breadth is becoming narrower, the portfolio should reflect that.
Hi, Pankaj. Good morning, and always good to see you. And Pankaj, you have been sounding cautious. You have been warning us every time on the channel as well. Earnings needs to show up. And in the last 48 hours or so, there's been a lot of concern on all the earnings that have come out, across sectors, whether it's wire and cables, whether it's some of these tech-related names as well. Pankaj, but you briefly mentioned that there will be select companies that will grow that 10, 15, 20%, and they'll be the darlings. Our viewers would like to know, where do we find those darlings? If you could give us a sense, which sector could it probably come from?
So, Nigel, we are debating within the team, but the broader thought is that our belief is that consumption may make a comeback. And the thought is as follows. If you look at the last 4 or 5 years, government expenditure was about 3.5 lakh crores. It's moved to about 11.5 lakh crores. And a large part of that spending was across sectors like defense, roads, railways, and so on and so forth. The question is this 11.5 lakh crores moving to about 17, 18 lakh crores? Our sense is probably it will be a bit slower than that. And hence the tailwind which you saw from a government expenditure perspective may not be there. Now the baton passes on to the corporate sector and the household capex, which is nothing but real estate. And they are coming back, but they are not with as force as the government expenditure was. So clearly you would see a transition which will happen. On the other side, when I look at the social scheme across states and center, that is picking up. Look at day before yesterday on the Rabi side, the MSP side, a clear boost of about 25 to 30,000 crores to the farmer. And then look at the schemes announced for the Maharashtra state election, Haryana, Jharkhand, and then it will be followed up by Delhi and probably UP at some point of time. And our calculation suggests that about 0.8 to 1% of the GDP could be spent on social welfare schemes, which was not the case for a long period of time. And if that happens, money will flow at the bottom of the pyramid. And we all have been talking about a K-shaped recovery in consumption, where the premium end has been doing well, but the mass consumption of the lower part of India has been suffering. I think that can reverse at the margin. And we believe that some of the names out there probably have started to look good. On the headline basis, let me put a caveat. All these names will look expensive. But again, I repeat, if they can deliver 15-20% earnings growth with some kind of a visibility, I think markets would love that because earnings growth will become scarce as you move ahead in the next 12 to 15 months.
Thank you, Pankaj, for your time. Enjoy your Friday and the weekend, which lies ahead. Now let's move on to the auto sector. Now, after yesterday's fall, today as well, you are seeing cuts. I think Bajaj Auto once again should come up for you on your screen. The sell-off precipitated once the Bajaj Auto management said that they're cautious about festive demand. So far, it's only been 1 to 2%. And at best, according to them, it should be 5 to 6%. There you have it. Bajaj Auto still down more than 2%. So to talk more about it, Gautam Sai Polavarappu, Director of Unity Motor Works and a member of FADA, and Abhishek Gaushinde, Deputy Vice President Research, Sher Khan at BNP Paribas, joining in. Thank you, gentlemen, for joining in. Gautam, come in. Bajaj Auto has told us that things are looking bleak, but some of the registration data seems to suggest that it's not as bad on the ground. So what is your data throwing up in terms of retail sales, registrations, and the outlook for the festive season, the numbers you're building?
So basically from the retail point of view and the dealership point of view, we operate in rural part of India in Andhra Pradesh, and the overall growth anticipation for the whole festive thing came majorly from two-wheelers and commercial vehicles and three-wheelers in and around the festivity. Obviously, there has been a little slowdown on the passenger vehicle side. But as you rightly said, that the registration data shows year-on-year growth also, because obviously brands like TVS or Bajaj or Hero are doing good on the export sides, as well as coming up with new products. And overall, I would feel that auto industry is going through a transformation where earlier we only had fuel-based vehicles. Now we also have new energy vehicles, which is the EV sector or the hybrids and all of that. So a little bit of confusion among the customer, which product to choose and which vehicle to ride on. But apart from that, when you compare it with probably the last year festival, obviously the rural India did respond well for us in our dealership areas.
Gentlemen, good morning. Prashant here. Abhishek, if I can come to you, what did you make of Bajaj's comment yesterday? And the stock was down sharply that, so far in the festive season, which is 10 days or so, they've seen 1 to 2% growth. For the entire season, they're seeing between 5 and 6% growth. This is for the festive period. Did that come I think it did come as a surprise for markets, right? And what to make of it?
Yes, broadly it is surprising because whatever the feedback we have been getting from the markets, other OEMs, ancillary players, and the other stakeholders, they are indicating for a better growth prospects in this festive season compared to the previous year. Although currently only the 20% of the festive period has been gone, but so far the feedback which the street and we are getting was positive. But Bajaj commentary was quite surprising, even though the result was almost in line with the estimates, adjusting to that 211 crore kind of for this one-time provisions. But because of this particular commentary, it has impacted the Bajaj Auto stock price as well as the overall sector. But beyond that, what is that? There is a catch-up was there. So beyond that, at certain point of time, it was quite difficult to justify that the price point at which the stock was trading before the result season. So some kind of correction was expected.
Yeah. Abhishek, and just to be clear, we are talking about retail sales, right? Not wholesale.
Yes.
Retail.
Yes, it's not wholesale. See what happened that this 30 to 40 days period is more for the retail sales. So if I can give you the background that in last year also what has happened that during the Navratri period, the passenger vehicle sales were tepid. But after this Navratri, the sales has picked up and the passenger car segment ended with a 10% kind of a growth in the last year. Although for this year base is high and in the passenger car segment things were not so right. But in two-wheeler segment, whatever the feedback we are getting from the other stakeholders, they are quite optimistic, and their performance is as per the plans. And see in the first half now, see in quarter 1 it was a heat wave, and then we have a Shraddha period and all these things. So some kind of a pent up demand is also there. So we have been in a view that this festive season will hold good for the two-wheeler sector also.
Okay, all right. Hi, Abhishek, and good morning. Good to see you, Ben. What's the approach, though? After yesterday's fall, everyone's wondering whether or not a stock that was the toast till now. Everyone was, saying Bajaj Auto is the stock to look at. After the 10% fall in today, as well as seeing some follow through, how would you approach the two-wheeler names, and what's the pecking order?
Yes, there are 2-3 things in this poll. It is not all about this commentary also. Even if you see that Hero MotoCorp has already been corrected by almost 10-13% in last 1 month. So there is a seasonality comes into the play. Generally, if you take the data for the last 15 years, so during the October or in November, in 1 month gives you a negative return in this auto index, except in the 3 occasions. And most of the occasions, this auto index has given negative returns either in October or in November. And there are only 3 occasions where the positive returns. So one is the seasonality. Second thing is that in this particular, in the running quarter, the growth in automobile sector is expected to be moderate. We were expecting just 2% kind of a growth in the overall revenue from the sector due to the high base. So high base is catching up. And third is that before that, we have seen a strong outperformance. So, and beyond that, if you see after the festive season, we are not seeing a healthy, you can say, a continuation of this retail sales. So obviously the wholesales will moderate. And if you compare it to the previous year, so what would happen in the quarter 3 is that you will be entering into the inventory adjustment mode, and previous or quarter 3 was the inventory build-up mode because of the change in the festive. Things are accumulating in this quarter, and on top of that, the Bajaj Auto's commentary has impacted the performance. Now going forward, what we see that post this correction, again the valuations have been corrected. So if we assume that the quarter 3 would be moderate and the quarter 4 where we have a lumpiness in this marriage season, so some kind of a demand would come up or the overall consumption pattern would revive. We continue to have our top pick in overall auto pack as the Tata Motors and the Hero MotoCorp. Hero MotoCorp largely because of the valuation per se, and the Tata Motors we are expecting H2 would be better than that of the H1, and that thought would continue.
So Gautam, if you could just give numbers, the retail sales so far for individual segments, two-wheeler, CVs, tractor and passenger vehicles, what are the numbers that we've seen in sales and even in registrations?
So basically, like if you see, just to add on to what Abhishek ji said, the major demand is coming from the rural side of it, and with two-wheelers, especially in EVs, two-wheelers had seen approx of 9% growth, and commercial vehicles, which are the e-bus segment, and the overall the large fleet vehicle segment has increased by the two digits. And when you see, like, obviously, like as we speak, like the reason why a company like TVS Motors is also growing is it's not just the demand in India only, but also the export numbers are also growing. So the companies, basically the Indian companies, have started exporting, like say like TVS or Hero and Bajaj. And when you see the passenger vehicle, definitely as a segment is struggling because of high inventory among the dealers also. And overall, there is a degrowth with the passenger vehicles because again the shift from the regular ICE engines to NEV vehicles is anticipated on that side. And yeah, so and then three-wheeler segment also, as we see, is growing. The major growth contribution and the growth driver is the EV vehicle.
Okay.
And, yeah.
Got it. Got it. All right. We appreciate you joining in, gentlemen, to help us out with a quick analysis of the auto space. We look forward to having you all back in the next couple of weeks to further discuss this particular issue. Well, time to move on then. Let's focus on Polycab. They reported a mixed set of numbers, but the EBITDA margins missed estimates. To discuss this and more, we have with us Mr. Jaising Gani, the chairman and managing director of the company, and Mr. Tongia, the CFO of Polycab. Good morning, gentlemen, and thanks a lot for joining in. Well, I have a two-part question. One is on the positive aspect, which is the revenues, and then on the margins. So let's get straight to it. At the half-year mark, you'll have done 10,000 crores of revenues. Can you hit that 20,000 crore mark in FY25 itself? So that's on the revenues. And on the margin front, your gross margins have come in at 10-quarter lows. And you all have mentioned that competitive intensity and product mix, that's one of the reasons that led to the margin miss. Do you want to alter that margin guidance of 12 to 13%? Please go ahead.
Thank you so much. Thank you for having us. You're right. The first half top line is 10,000 crore rupees. And as you would be able to recollect, we had given a guidance of 200 billion or 20,000 crore rupees of top line by fiscal 26. Considering that we have already achieved 10,000 crore in the first half, we believe we should be able to touch 200 billion or 20,000 crore rupees in the current fiscal itself. And we would beat our own guidance as far as top line is concerned. On EBITDA margin, your observations are correct. There is a bit of a contraction in the gross margins, predominantly because of competitive intensity. There was a fair amount of copper volatility in the current quarter. And for the retail business, at times, it's difficult to pass on all the increases to the end customer, considering the competition what we have in our sector. Having said that, the actual EBITDA margin for the cable and wire is within the guided range of 12 to 14%. And we believe that in quarters to come, we would continue to maintain that range. We expect that as far as the margins are concerned, that second half of the year should be better than the first half of the year.
Okay, all right. Just to push you a little bit more, Mr. Tongia, on that front, this competitive intensity, it's the first time I'm reading it in your, in your numbers. So if you could just throw some more light on that front, and also the FMEG business that continues to deliver losses. How is the turnaround going to take place there? By when could we see a positive number? Because those losses have expanded a little bit.
You're right. Let me pick up FMEG first. FMEG, your observation is right. Even in the current quarter, we have a small EBIT loss. Now we have a strategic roadmap in place for FMEG. We believe that this execution will start in the second half of the year. And in the next year, we should be able to get benefit out of it. Because of that, we believe that for the rest of the year, we will continue to have some losses on FMEG. As far as the cable and wire margins are concerned, we have two types of businesses. One is a cable business and second is a wire business. We leader as far as cable is concerned with a huge margin. As far as wires is concerned, though we are market leader, but there are other players as well in the space. Whenever there is a significant volatility of copper price, it becomes difficult for all the large players to pass on 100% increases to end customer because everyone wants to maintain the top line. And that is what we witnessed in this particular quarter. The copper LME movement was between $8,600 to $9,800. And that is why we were not able to pass on all the cost increases to end customer. Having said that, as I alluded a while back, we believe that the second half of the year should be better than the first half of the year as far as margins are concerned.
Even exports, your export revenue declined 29% on a year-on-year basis. Exports are high margins for you. What is the visibility of export revival and what led to the contraction in Q2?
You're right. Last year, exports revenue was slightly better than the current year. But if I were to just give you a quarter-on-quarter growth number, it has improved by almost 36%. Historically, exports used to be around 2-3% of our top line. Now it is in the handle of around 5-6%. And we believe that in a year or two, we should be able to take it to almost 8-10% of our top line. We have great traction in the markets like Australia, US, Saudi. And we believe that even the second half of the year should be better than the first half for the exports business as well.
Okay, gentlemen, good morning. Prashant here. Mr. Jaisinghani, if I can come to you, sir. Would you, so this competition bit which, Gandharv addressed, especially in the wire segment, I mean, is the competitive intensity increasing? You've seen you've seen this industry for a long time, or it's largely linked to sort of copper price fluctuation. So it's not competitive intensity on its own which has gone up. It's combined with copper price volatility, which is the problem. Go on, sir.
Yeah, basically it is dependent on whenever copper go up suddenly, demand. We cannot increase the price, whatever is cost is all gone up. So there's a dip of margin decline in that period. So from last 3 months, continuously copper is going up from 8,800 to 9,200, 9,600, 9,800. Always this is going to be happening. But whenever again will go down, then margin will increase. So this will be definitely dependent upon a quarter now. This suddenly metal has gone up, but now it is looking a very little soft now, though again margin may be increase again in coming quarters.
What happens, Mr. Jaisinghani, if copper prices go to, as some forecasts are saying, to $10,000, $11,000, $12,000? What happens then? Will we have a temporary setback for a quarter, 2 quarters?
No, yeah. Basically we are changing the price of every 15 days to 1 month. So we are trying to pass on maximum to the customer. But whenever jump more than $300-400 at a time, then it is difficult to increase that. If it will be range of 200 to 300, then we can collect from the customer. There won't be any problem. But whenever jump will be more than $500, definitely going to hit margins for everybody's. But everybody cannot pass on all the price to the customer.
Sure. Gandharv, just sort of moving tracks. There is markets have been expecting a order from the BharatNet program for Polycab. Can you tell us? I think the total value of the contract was about 10,000 crores, and the optic fiber bit is about 2,500, 3,000 crores. Sort of weigh in on the numbers, and where does Polycab stand for this?
Yeah. So the government of India has a particular ambitious project wherein they want to connect all the villages through optical fiber cable. The tender was submitted by all the participants, including Polycab, and we are expecting the final conclusion by the authorities in the current month. We have participated in all the tenders, and it is now on the authorities to finally conclude and award the tenders. Once we get some information from the authorities on the award, then we'll come back to you.
That you participated for is how much, Gandharv?
All the tenders.
What's the value?
Around 50,000 crore rupees.
You've participated in tenders worth 50,000 crores rupees?
Like us, many of other players have also participated. Not all of us will get 100%. So it would be a number lesser than what we have participated. And we'll have to wait for the government to finally conclude on this.
You typically, so this happens every few years, I'm assuming, right? It's not, so could you tell us, what's generally, how do they distribute this? What's your expectation? What's the minimum that you're confident of winning?
So the a niche project for the government. This is going on since last around 10 years or 7-8 years. This is, if I am not wrong, this is probably the second largest tender, and government will continue with this for a foreseeable future. We have participated in all the tenders, and I think we'll have to leave it to the government to decide. We as a manufacturer, we would love to maximize the top line and bottom line, but I think that's dependent on the customer, which is government in this case.
And typically, what are margins here?
Comparable margins, not significantly different from our domestic cable and wire margin.
So 12 to 14% in that range.
Give and take, it has some conditions, and we'll have to wait for the final order. But your understanding is right; it should be in that range.
All right, Mr. Tongia, just to clear the point on margins, for this year itself, the second half of the year, margins will be better. Cables and wire business will be 12 to 14% in that band, and FMEG will continue to deliver some losses, right?
That's correct.
And FY26, at some point of time, FMEG could turn into the green as well.
We are trying our level best.
All right, Mr. Jaisinghani, let me come across to you then. Could you tell us, about, I think the family office as well has been participating in the equity markets, and you had sold some minor stake in the company. No further plans to reduce stake, or could that be in the offing? Point number one. And point number two is, have you heard from the tax authorities with regard to that tax issue that was there towards the end of 2023?
Yeah, basically, we are family members are involved in total in Polycab work, and we are not interested to basically sell the shares. But everybody's little requirement to the family, personal families. So we already done equally. We all four with us has really only 0.5% only for the family requirements. Nothing for any business.
Okay. Mr. Jaisinghani, just one final word. As a part of your Project Leap, you had guided to achieve 20,000 crore by FY26. Now you're going to achieve it in FY25. So it's time now for the next strategy reset, for the company. Give us the direction. Are you looking at doubling revenues in the next 5 years? Where do you think Polycab will be?
Yeah, we are basically again doing a steady meeting by end of December. And in which we are really talking about where we should be in coming 5 years, where the long-term goal and short-term goal we have to think very clearly. So we all team members are working on that. We'll come back to you about after having a meeting.
Any early indications of the direction?
Of the direction?
The details we'll get in December, sir, when you come out with that strategy. But just give us some hint, a trailer.
Trailer means definitely we want to grow, and we are putting a capex, and we'll definitely do what we are giving figure. Whatever figure we'll give, we will try to do more than that. So we'll let you know in next quarter exactly where we want to be.
Okay. Thank you very much, Mr. Jaisinghani and Mr. Tongia for joining in. Wish you all the very best. That's Polycab. The stock is down close to about 3.5% today. Get into a break. On the other side is our special segment, Quarter Se Quarter Tak. Now, Axis Bank has come out with the numbers, but a whole host of banking results is still left. The big day is going to be tomorrow with HDFC Bank, Kotak Mahindra Bank. We'll get you the earnings expectation for the sector as a whole. Stay tuned.
Welcome back. The early morning dip has actually got bought into, and now the Nifty is up 100 points from the low point of the day. And what's leading the charge of the fight back is the Nifty Bank. That's up 200 points. That's closer to under 350 point recovery from the low point of the day. Sustainability of this is going to be rather important. But it's that time of the show where we get to our special segment, Quarter Se Quarter Tak, where we get your earnings expectations from each sector. Today, Abhishek joins us to tell us how Quarter 2 is likely to pan out for the banking names itself. Abhishek, over to you.
Well, Nigel, it could be a soft quarter for banks in Q2 FY25. Now, loan growth has slowed down to approximately 13% YOY from the 17.4% YOY that was there in Q1 FY25. The CD ratio, credit deposit ratio, remains high at about 79.6%, indicating that there is potential stress funding availability going ahead with respect to deposit momentum. Now, there are challenges in attracting retail deposits, prompting banks to rely on bulk deposit for growth this time around, which could actually weigh negatively on the net interest margins of the banks. So expectation is of us increased slippages and higher credit costs in certain segments such as microfinance, that is MFI, personal loans and credit card, which could hurt profitability. So the unsecured part of the lending business could hurt the profitability of the lenders. The outlook for net interest margin appears to be on a declining trend, now raising concerns over profitability. Anticipated deterioration in several key metrics like loan growth, net interest margin, credit cost, slippages and return on asset can be expected in Q2 FY25. The key discussion point will be the net interest margin trend. The reliance on bulk deposit could compress the net interest margin. Retail deposit has been a challenge for the system, so there is a need for strategies to enhance retail deposit growth. Credit risk management, now focus will be on managing the slippages and credit costs effectively. Overall, indication is of a cautious outlook for the banking sector in Q2 FY25, with several parameters suggesting a potential decline in profitability and credit quality as well. We have some of the estimates for Q2 FY25 coming in from Kotak Securities. SBI, the NI is expected to be up about 4% YOY and a decline of 0.4% sequentially. Net profit is expected to decline by 10% YOY and 24.3% sequentially. For Bank of Baroda, they expect NI to grow by 9% YOY and 1.5% sequentially, while net profit is expected to decline by 7% YOY and 7% quarter-on-quarter as well. For SDFC Bank, Kotak Securities estimates NI growth of 10% YOY and 0.8% sequentially, while they expect the profitability to grow by 2% YOY and about 0.4% sequentially. For ICICI Bank, they expect NI growth of 8% YOY and 1.3% sequentially, while net profit is expected to grow at 7% YOY and 0.9% sequentially. Back to you.
All right, Abhishek, thank you very much for that. So that's basically the expectations from the sector. Pranav Gundlapalli, Senior Analyst, India Financials at Bernstein. He's with us. Thank you for joining us, Pranav. So two questions. One, we've seen smaller PSU banks which have reported numbers over the last 2 days, and numbers have been at the margin good. Is that an indication for some of the larger peers there? And for private sector, should we take Axis as a template? Go on.
Okay, so I think the numbers for the smaller banks, Bank of Maharashtra, Central Bank, that report have been really good. But I wouldn't really take that as an indicator for the larger public sector banks, which have seen greater challenges on deposit gathering compared to the smaller ones. So to wait and watch for some of the larger ones to report in their deposit growth numbers. So I think for the public sector banks, the key to watch would be deposit growth, where there will be a divergence between the smaller and the larger ones. Coming to the private sector ones, I think at an overall sector level, the deposit growth is improving. I mean, much better than what we saw in say December last year or even last quarter. And therefore, the focus will be on asset quality. Now, if Axis is any indication, I think it does seem like we have a few more quarters of increased slippages left, even though it doesn't really get a lot worse than what we saw in the last quarter. So I think this quarter, the theme will be asset quality. Deposits, less of an issue, as we see that most of the banks that have reported so far have seen a good Q-on-Q improvement in deposit accretion.
Hi, Pranav. Good morning and good to see you in. Pranav, before we get back to the earnings, just wanted your word on the RBI action yesterday with regard to wrapping, Manappuram's subsidiary on the knuckles. And they also commented on these higher interest rates. How do you see this action? RBI seems to be coming down hard on some of these names.
I think it's a bit of fine-tuning of the pricing regulations on the MFI, right? So there are two parts to it. One is there has been concerns on the growth, and RBI has already taken several actions on it, be it in terms of raising these concern statements in various forums or even asking some of the banks to increase their risk weights on their MFI portfolio. So I think that is one part of this. The second part is where they did change the pricing regulations on MFI some time back. There was a fixed rate for some time, then they changed it to a cost of funds-based regulation, and they had a new regulation in place. And this seems to be simply a reaction to certain players not adhering to the norms. So I wouldn't really bucket this in the set of actions to slow down growth. This seems to be more a pricing issue. And given the nature of the segment, I think RBI has always been mindful of what rates get charged in that segment. So not a dramatically new type of action from RBI. The only concern we have from this is, given the size of the portfolio that's impacted, the four lenders put together is almost about $4-5 billion. Taking away that amount of disbursals could just worsen the asset quality. I mean, most of the lenders have already started dialing back on growth. So you take one more set of players out of the action, then you could see further worsening in asset quality. So that, to me, is the bigger concern. I don't think any of the larger players will benefit meaningfully from these four players stepping out for a while. So overall negative for the MFI segment, but I don't see this as an action to stop growth as such.
Unsecured, MFI, I mean, all hot pockets, right?
Yes.
Pranav, so how does one make money in financials? Where does one make money in financials? Or what will make money in financials is, I guess, is the right way to frame it.
See, I think if you look at, I think it depends on the time frame, right? So if you have a longer time frame, I think most of the fundamentals seem okay. I mean, in terms of profitability, growth, at a sector level or even at individual bank levels, I think there is still, at a very healthy level versus the past. So what you're going to get is a nice compounding growth. I think that's what is the base case right now. And for a re-rating, I think we are still several quarters away from any catalyst that can drive a re-rating, right? So from our discussions, there seems to be a wait for the bottoming of ROAs for these banks, which we think will happen in the first few quarters after rate cut, which means we are looking at probably middle of calendar year 25 before we see any big re-rating as such. I'm talking about the sector level as such.
Okay, all right. So most fundamentals, etc., look okay, but you got to take a slightly longish time frame, right? View out there. By the way, Pranav, just very quickly, the worry at the margin for markets broadly is, it's only 20 days, but is the festive season going to be strong from that perspective? From a lender's perspective, are you hearing anything at all?
Yeah, it does seem to be a lot weaker than what was expected. But given that we've had a slowdown in consumer credit, even leading into the festive season, I don't think this adds too much of additional negative into the expectations. Right? So a slowdown in consumer was expected, and there's not going to be any big respite from the festive season. So that's the way we see it.
Okay, all right, well put. Thank you very much, Pranav, for joining us and running us through some of that perspective as far as banks are concerned. We'll take a break. We put the focus on commodities with Manisha on the other side. Stay with us.
Make informed decisions with comprehensive analysis. Welcome back. Mitesh is now back with us on the show. Mitesh, what will the 10 a.m. calls be and what have you made of the first 1 hour of trade?
So I think, one, as we suspected, is the Bank Nifty, which is showing strength on the upside, but the overall structure for the Nifty still remains weak. The idea should be that the Nifty, I think, if it gives a pullback above 24, 750, 770, then I think, we'll have some kind of a reversal in the Nifty. Otherwise, it will be a choppy market with Bank Nifty slightly doing better than the Nifty. And even on the buying side, I have Axis Bank as a trading call. That's something which has turned around very nicely on the 2-hourly, 3-hourly charts. So buy here with a stop at 1160 for targets of 1220. And Bharti Airtel is something which I would take a negative view and it's showing signs of profit booking and weakness. So keep a stop at 1702, look for targets of roughly around 1645.
Okay, all right. Thanks, Mitesh, for joining in and giving us your call on the index as well as on both those two calls. Bharti looking weakish, while Axis looks like it's good for more. But let's turn our attention away from the equity markets and focus on the commodity space. Manisha Gupta joins us to help us out with what's going on there. Manisha, take it away.
Thank you for that, Nigel. Well, I'm looking at the gold prices because there's no stopping this one. We're trading at yet another all-time highs in the Asian markets right now. So 2709 is an all-time high. In the early Asian markets, we saw 2700 take away. And since then, it has been a $16 to $17 of a jump up that you can see in case of gold prices. Well, 2685 for some time has been a very stiff resistance, but that got taken off very easily in the overnight markets there. So above 2700 there. With this, we are up by nearly 2.5% for this week. We are up 5% on the month, and for this year we are up by 30%. The gold clearly is outperforming various other asset classes and many other commodities as well, and with 30% of gains, gold is giving you the best yearly gain in 14 years now. That's the kind of strength we've seen on this one coming in. Silver as well, not too far behind because we're looking at stronger gains onto that one as well. The support for the gold prices comes in from the fact that the European Central Bank for the third time yesterday cut rates by 25 basis points. There are more banks coming in, and you are also anticipating US Fed to cut interest rates by 25 basis points in the month of November. Going forward, it also is going to be about the uncertainty over the US presidential elections. When you pick all of those years, as and when there is US presidential elections, we have seen gold prices gain. And this time around, the uncertainty is just way too much. And then it also is about the geopolitical tensions. The war in West Asia has been adding premium to prices. The global central banks have been buying gold. And it's not just India which is buying gold right now in the physical sense, but the global funds on funds, ETFs, all of that also seem to be accumulating a lot of gold. The Western world actually is buying gold for the first time in a decade, the kind of way they're buying it. And then when you look forward, the forecast for the gold prices is much higher. Bank of America, Citi, and the LBMA meeting that just got concluded, all of them believe that $2,950 to $3,000 an ounce in the first quarter of 2025, if not earlier, is where you could be looking at the gold prices headed for. Silver also has continued to gain. Silver actually has outperformed gold with 34% of gains in this year until now. And the overall industrial metal as a pack also seems to be doing well today. On a week-on-week basis, we're still in the negative, but on a month-on-month basis, quarter basis, and YTD basis, we are positive for many of these base metal prices. And cementing those gains right now is the Chinese data. The third quarter GDP numbers coming in better than what the street was anticipating. And not just that number, when you look at the industrial output, retail sales, employment data from China, all of that has come in on the better side. So perhaps the China stimulus seems to be showing into numbers, and that has added some support to base metal prices. 0.5% to 2% of gains across industrial metals as well.
Thank you very much for that. Risk off equities, risk on gold. Brokerages see more than a 10% upside in gold prices from current levels. We'll get into a short break on that note. On the other side, we'll connect with Anurag Gupta of Havells India on their Q2 numbers. Stay tuned.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the
Welcome back. We're off from the session lows. At the lows, the Nifty had gone down to levels of almost 24,560. But again, there's some moderation from the top as well, from levels of 24,700 that we hit about 30 minutes back. Net, we're down close to about 0.3% on the benchmark indices. The mid-cap index has also recovered from the day's low. The mid-cap index is now down nearly about 0.5%. Wipro continues to be the top Nifty gainer. That's up nearly 5%. Axis Bank has now overtaken it. So Axis Bank is up 4.7%. Wipro is higher by nearly 4%. LTI Mindtree, though, is struggling with a cut of 5%. But Havells is on our radar. They reported a weak set of Q2 numbers. Margins were under pressure, but the company's top-line growth was quite strong. Anil Rai, Chairman and Managing Director of Havells India, is with us on the show. Thank you very much for joining in. So your top-line growth at 16% was quite strong. We've seen about a 23% growth in cables and wires, about 15% growth in electrical consumer, 17% in electrical consumer durables. Can you tell us whether this kind of momentum will sustain? And in the conference call, you also said that the festive demand has started off on a good note because of an early Diwali compared to last year. What are the early numbers in terms of growth rates?
I think, first of all, I must say that, we are satisfied with the performance of the second quarter, and we are quite hopeful that a good set of growth numbers would continue in the coming times. one, the markets should be doing well, but also the fact that we are investing continuously in our distribution enhancement, our product expansion. So all those things will definitely come in play and deliver a good set of growth numbers. As far as festival demand is concerned, Diwali is a bit earlier than this year as compared to last year. It has started on a positive note in the third quarter. If this trend continues, so we should be looking at a strong third quarter growth as well.
So just in the first 15 days, what's been the growth rate?
Well, it's difficult to pinpoint because, it's not a like-to-like comparison because of the difference in the days of Diwali. But I think generally, as they said, it has started on a stronger note.
Okay.
All right. Hi, Mr. Gupta. Good morning and good to see you in. This is Nigel on this side. And it seems the street wants to buy the dip from a stock market perspective because as we speak, your stock price has moved into the green. So let's get to the critical issue then, the margin front. On a blended basis, it was in high single digits this time around, 8% odd. But you're guiding that things could improve from here on. So could you tell us, second half of the year, will margins be better than the first half? Point number one. And we had Polycab, earlier on in the show, and they were talking about competitive intensity, coming to life in the past quarter. And the street is a little bit concerned about that. Have you seen the same?
Well, as far as second quarter margins are concerned, there are a couple of things which we would say that should normalize in the coming quarters. One was the advertising spend. Because of an early Diwali, advertising spends were higher as compared to last year, and hence that expanded the expenses for this particular quarter. Second is the fluctuation in the raw material prices, which was a very strong fluctuation, and that affected the margins of our domestic wires business. And I think going forward, this should also normalize mostly in the third quarter, but primarily fully in the fourth quarter as well. So I think we are looking at a better margins in the third and fourth quarter. As far as competitive intensity goes, I think it's there in every business and it's been around for quite some time. I'm not sure whether there's an increased competitive intensity, but that's what companies would do through their brand build-up and distribution enhancement and all these things. And I think that's something which has always been there in all our businesses.
Okay, all right. So you're not sounding too perturbed about competitive intensity, but just to push you a little bit on the margin front, we should get back to double-digit margins in the second half of the year, give and take everything, since the ad spends that were preponed will be out of the way. Commodity prices have softened up a little bit as well, and you'll get the benefit of operating leverage. Fair to assume 10-11% margins for the second half of the year?
Well, the way we look at it is, one is the core Havells business, where we always try and target between 13 to 14% margins. And then there is a Lloyd business, which can vary quarter to quarter. Third quarter, again, is a lower quarter as the second quarter is. And then the fourth quarter starts building up, fourth quarter and first quarter. So if we keep aside Lloyd margins, I think we're always looking to get a 13 to 14% margin in Havells core business.
So for Lloyd Consumer, you've seen good growth on a year-on-year basis, but your margins turned negative in the current quarter after being positive in Q1. What's the growth trajectory from here on for Lloyd Consumer and even on the margin front?
I think, as far as Lloyd is concerned, it's on a very strong momentum. We have seen a lot of expansion in contribution margins for Lloyd as compared to the last quarter also. So we've actually seen positive momentum in Lloyd as far as margins are concerned. But it's a growth engine for us. It's a very large market with other than air conditioners, we have low market shares. Air conditioners also, there's a huge scope for growth. So I think for Havells India company, we are looking at Lloyd as a very strong growth for engine growth in the coming times.
You want to quantify strong on a year-on-year basis, from year on for FY25 in comparison to FY24, FY26 onwards?
Well, usually we don't give guidance, and I think we'll retain that. And but as I said, 20% growth in the first quarter, quite a very strong growth, but that was actually a one-time, like more than 40% growth in the first quarter as well. So I think this first half has started off well. Hopefully, we should continue in the coming times.
For Lloyd's, I think your non-room air conditioning business, the non-RAC business, was performed better than the RAC business. So while you can't give us numbers, do you think this trend will continue?
No, I think RAC will continue to remain between 70 and 75% of the overall business, but that is for the year as a whole. The second and third quarter, as I said, usually is very low for AC business. But what is positive is we are seeing a good traction and growth in the non-AC business as well. So our washing machines, refrigerators, panels have started growing at a decent pace.
All right. Mr. Gupta, before we get back to the operational performance, there were some murmurs that maybe you're looking at some inorganic growth. Could you confirm or deny any of them? And, some of them were suggesting about some listed and unlisted companies. So is Havells on the prowl?
I think Havells has always maintained that we will continue to look at inorganic opportunities, though we believe that there is enough juice for growth in our existing core businesses as well. So we're always on the lookout, but I think I would not like to comment on any market rumors.
So in the second half of this fiscal year, could we hear about some kind of inorganic growth? Or do you think it's still in initial phases, so it'll be a few quarters ahead, if at all?
No comments.
Okay, all right. So if you have to give us a capacity utilization levels, then since you believe that organically itself you'll have enough of headroom, what kind of utilization levels are you all functioning at? And what is the Capex plan? And in turn, what could be the revenue potential for your business as of now with the current gross block?
I think, we have been regularly investing in Capex, and the only place where we found ourselves a bit lacking was the cables and wires business. Now the new facility at Tumkur has started operations last month. We have further committed for another 450 crores of expansion in our cables and wires business in that facility. So I think there's a lot of Capex planned, and capacity utilization, which was high in the cables and wires business, is now coming to normal levels. So we can expect decent growth in that segment. So we have committed almost 1,900 crores of Capex in the coming couple of years, out of which 1,000 crores will be invested in this year.
And this incremental Capex of 450 crore, which you've announced, this is to expand your Tumkur facility.
This is to expand the Tumkur facility, which should start operations sometime in the mid of 26.
Middle of 20. And you said the cables and wires capacity utilization is now at a fairly moderate level compared to the higher levels that it was earlier. What's the number?
That's true. Well, we have expanded our capacity for underground cables by about 25%. So that will bring down the capacity utilization to between 75 and 80%.
Thank you very much, sir, for joining in, and wish you a very happy Diwali. Hope you have a good festive season, personally and professionally. Let's just take a quick a quick look at some of the stocks which are in the move. And right on top of the charts is Wipro. Now that stock is up close to about 4%. Now Q2 was a strong quarter for Wipro. The company's revenues turned positive after 6 consecutive quarters of a decline. Secondly, they also managed to expand their margins after absorbing 1 month of a wage hike. So margins expanded for the third consecutive quarter, and this quarter it was up 30 basis points on a quarter-on-quarter basis. Deal wins were healthy. The large deal wins were the best that we've seen in the last 10 quarters at $1.5 billion. They also announced a bonus issue. But here the street was disappointed with the guidance. The guidance for the company was -2 to 0%, which means after seeing growth in Q2, the company is guiding for negative growth in the December quarter. They said it's on account of furloughs, it's on account of lower working days, and some pressure seen in the European business. But is the management being a bit conservative? I think that's what analysts are asking. It's a new management, and even in Q2, the company ended closer to the upper end of its guidance band. So, I think the way the stock is reacting, one, of course, it's also underperformed some of its larger peers since the IT revival rally started. So Wipro since June is up 26%, whereas stocks like Infy, HCL Tech have moved up close to about 35-40%. Valuations are on Wipro's side. So these are some factors which are helping the stock do well. Strong Q2, maybe the Q3 guidance is conservative, valuations are less than peers, and the stock compared to some of the other, the HCL Techs and Wipros of the world have also HCL Tech and Infosys of the world, it's also underperformed. So Wipro is right on top over there, but on the way down, you've got LTI Mindtree, and that is struggling in trade. So LTI Mindtree is down nearly 5%. Decent growth, but not as much as what the street was anticipating. The stock has now tumbled nearly 5.5% in Infy. Just take a look at Infosys. It's extended its fall. It opened with a cut of about 2 to 3%, and now Infosys is down nearly 4.5%. So big fall there. With that, it's a wrap on Bazaar from the entire team. Thank you for watching. Chartbusters is up next.
Startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions.
Manappuram Finance slips nearly 15% after the Reserve Bank asked the bank's subsidiary Asirvad MFI to stop the sanction and disbursal of loans based on concerns over pricing policy and other practices.
CNBC TV18 News Break is confirmed. The APM gas allocation to city gas distributors has been cut by 15 to 21%. CGD companies like Gujarat Gas, IGL and MGL, they say that this move will impact their profitability. Jeffrey says the sector could get derated from here on.
Wipro is bucking the trend in today's session, climbing as much as 5% on the back of a good quarter. The company sees growth after 6 quarters of decline in constant currency terms. The management tells CNBC-TV18 that they are one step closer to their aspirational margin band of 17 to 17.5%.
Infosys, on the other hand, slips nearly 3% after posting its quarterly numbers. Despite seeing a good quarter, there was no positive surprise. Deal wins for the quarter also came in a little bit weakish.
And Mazagon shipbuilder surges as much as 5% after the company will consider a stock split and a dividend announcement in their board meeting on the 22nd of this month.
Hello and welcome to Chartbusters. I'm Nigel and with me is Hormuz, and I'll tell you what, it's a Friday morning and the good news is the bulls will be happy looking at the screen because the dip has got bought into in today's trading session. The Nifty is up 150 points from the low point of the day. And the one that we pointed out earlier this morning, I recall in my morning chart, I said that the Nifty Bank could be the one that the bulls turn to. Pre-positioning ahead of big earnings tomorrow. Valuation-wise, well, there is some comfort on that front as well. And that could explain why we're seeing a big bounce from the lows. And if you just pull up almost the 50 and the 100 EMA, you'll see that now it's moved back above those levels. We had pointed out earlier today, right, that it had breached those levels. Nifty Bank is the one that's taken center stage. It's come to the crease and it appears it's batting for the bulls as we speak. But sustainability of this bounce is crucial.
Very important, right? And we spoke about this in the morning as well as been speaking through the week. Very important levels that the Nifty has to defend. It's made a new low though for the series. 24,564 is the new low, but it's the Nifty Bank, as Nigel was highlighting. Very, very important levels that it has to defend now at 51,500, taking the Nifty along with it from the lows of the day. So very, very important final few hours of this week that are coming up for the benchmark indices. We'll get to more on the markets in just a bit, but plenty of earnings conversations lined up as well, and Karur Vysya Bank is one of them. And the bank saw an improvement in its asset quality in the second quarter, although provisions saw some spike, while advances have seen a growth of growth on a sequential basis as well. To discuss the numbers further, we have B. Ramesh Babu, the Managing Director and CEO of the bank, who is joining in. Mr. Babu, good morning. Thank you so much for joining in. Your loan growth has remained subdued this quarter due to corporate credit. Now, what kind of loan growth are you penciling in for the second half of the year, and what does that do to your FY25 number overall?
Okay. Yeah, good morning. Good morning to both of you. In fact, when our March results were out, at that time itself, we have mentioned that because there is some sort of a constraint on the low-cost deposits what we are getting. So we wanted to rebalance the portfolio. That is the reason we wanted to grow more on the RAM sector and to some extent to reduce the portfolio under the corporate sector. That's why if you look at the total portfolio, the retail we have grown by 20%. So corporate we have consciously reduced it because low yielding interest rate accounts are there. Those cases we thought that the same amount if you put it under the retail, the yields are better, NIMs are better. So that's a conscious call taken by us. As and when the normalcy restores in the liabilities front, so we will be back onto the corporate front because there going back it's a interest rate sensitive, that one and all, we can go for that. So overall we would like to stick to between 14 and 15 overall, but RAM will be the focus area under that.
All right. Hi, Mr. Babu. Good morning and good to see you, Ben. So corporate, as a percentage of the book, I recall you had said it had come down from around 45% to the mid-20s. Where does it settle in at? And also earlier when you joined us, you told us for the year, the kind of loan growth you're looking at is close to around 14% with NIMs around 4%. You want to hold on to that guidance?
Yeah, as far as the loan guidance is concerned, I have conveyed. NIM is concerned, what a guidance we have given is for the next quarter, we will be around 4%. And the last quarter, it depends on the Reserve Bank of India rate cuts. If the rate cuts are there, accordingly, it may get moderated. Otherwise, we feel that the current trend may continue to some extent. We need to see. But we have a visibility as far as the third quarter is concerned. We will be around 4%.
Got it. And your loan growth will be 14%, right?
Yeah, between 14 and 15, but you need to look at it in a different way that way, because the focus of the bank is on the retail segment. The retail segment, if you look at it quarter on quarter as well as on the YOY also, we have grown by 20%. So there when we are yielding good result, Second thing is we do not want to stop the retail engine, because corporate engine, even if you stop it, again tomorrow you go back to the market, getting back into the market is pretty easy. Whereas in the retail, if the staff, they come out of the business, it's very difficult to push them back. That is the reason we want to continuously pump the resources into the retail till such time the position improves.
All right, and the corporate book you were telling us, where does it settle in at? From 45%, it's come down to 25%. Where does it move?
No, currently if you look at it, it is at 16% now.
16%,
maybe around
okay.
15% for the time being, but it may go back to 20% again once the CASA normalcy restores. The only single point is, I'll understand. So if you are getting majority of the time deposits, and the corporates, if they expect 9%, and the margin at 7.6%, if you're accepting a deposit and CRR, SLR, if you pay for that, hardly not even 1% you will be getting there. You have to pay the credit cost, other costs, everything is there. So it doesn't make much sense. The same money you need to put it in the retail. Once CASA position improves, we'll be back onto the corporate again.
Mr. Babu, your asset quality improved on a sequential basis this time around, but there has been a lot of concern over these unsecured loans and that having an impact on the asset quality of a lot of these banks. So part one of my question is, how much is unsecured loans as a percentage of your book? And B is, would that have any form of impact? Are you seeing any form of stress on that front?
In fact, to provide you a comfort, I can very well say our unsecured book is 2.04%. Out of that, the presentation also shows 1,000 crores is in the Amazon BNPL, which is a tested business model which has been going on for the last 4-5 years. If you look at the cohort loss also there, it is between 2 to 2.5. We have an FLDG of 5% from the partner there. So that way, literally, I do not have any sort of a loss or delinquency which we need to bear from our P&L in the Amazon book. Then if I take out that one, hardly my liabilities, unsecured book will be around 200 to 300 crores. That is performing well. There should not be any issue at all in this.
All right, very quickly, sir, if you could give us some guidance on your credit costs and slippages going ahead.
Yeah, slippage ratio, it will be around 1% annualized, but it can be lower also. So the credit cost is 75 basis points we have mentioned. But Nizal, here one more point you need to look at it. Credit cost on an organic basis, if I need to look at it, that may not be required. But we thought that when good times are there, we should not forget about the bad times. That is the reason sufficiently provisioning prudentially we have been making. That may look elevated credit cost, but it is not a real credit cost which can be postponed for a later date. But we are doing it today because the position is good.
Got it. And very quickly, if you could tell us your CD ratio as well as around 83%, where does this number stabilize at?
Yeah, it will be between 83 to 85. It will be ranging in that ratio.
All right. And yesterday, you had some moves coming in from the RBI when they're wrapping some NBFCs on the knuckles, Ashirwad. You have some co-lending models as well with NBFCs. Do you think that could, that could hamper your business?
No, we don't have any co-lending arrangement with these 4 NBFCs, what you have mentioned.
But any other NBFCs, since RBI could be coming down on the sector as well, or do you believe that your co-lending is safe? I mean, you don't see any risk to your business?
Yeah, co-lending we have with reputed partners there and all, time tested that way. And that way our NBFC exposure also, which used to be 8.5, we have brought it down to 5%. Co-lending is also one lending arrangement is with Chola and another arrangement with someone else. Otherwise, we do not have many such arrangements. So that way we are relatively insulated.
All right, Mr. Babu, thank you so much for sparing time and sharing with us your views on the quarter gone by. Wish you good luck for the second half of the year. Shifting focus to our special segment, we get you a few ideas for profit from Money Control Pro. Anubhav Sahu is joining in to talk about a stock he is tracking closely.
So today we are talking about HEG, which is the lowest cost producer of graphite electrodes and therefore can be a key beneficiary of further consolidation in the industry. So in recent few months, HEG has acquired more than 8% stake in GrafTech, which has 80% higher capacity. And unlike Indian players, GrafTech is vertically integrated. So while it is a treasury investment for now, it certainly seems to be a value bet and there is a scope for more. Additionally, structural demand for the electric arc furnace route to steel production is intact and it is seen as environment friendly. So on the back of new electric arc furnace capacities announced, additional electrode demand of 1 lakh ton is expected in next 3 years, which is more than 16% of global capacity ex of China. Now, further, HEG's growth optionality comes from its foray into green anodes, which find use in lithium-ion batteries. It holds a huge import substitution opportunity as such, because anodes are solely imported as of now. Lastly, company's utilization rate of 75 to 80% speaks about cost leadership in the down cycle. Now, that said, valuations are at a premium, and hence investors can add it in a staggered manner.
Thanks a lot, Anubhav. Well, for the time being, we'll slip into a short break. You come back, we'll continue our focus on stocks as well as on the markets.
Potentially do, or how soon, or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype. And the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
Open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective?
Back with us here on Chartbusters, shifting focus to Zomato now. The board is going to meet on the 22nd and to mull a fundraising via QIP. Nimesh has picked up some exclusive details around this. Nimesh, tell us more.
Well, Amos, this is what I've picked up, that, as you rightly pointed out, there's a board meeting on 22nd to consider a fundraising via QIP. What I understand is the company is likely to raise close to 8,500 crores, which is $1 billion, is what Zomato board might approve the fundraising via QIP. Now, there is a technical reason why this is going to be significant for Zomato. The reason is very simple. If you look at the shareholding pattern, the FI plus FDI holding in Zomato is over 50%, and the domestic is less than 50%. After this fundraising, my sense is that the domestic holding will go up and the combined FDI and FI holding will fall below 50%. And after that happens, once the fundraising is done, I understand the company is likely to write to RBI to cap the FI holding at 49%. Now, this will have a very significant impact on the not only on the structure in terms of FDI and domestic and FI holding, but it will also mean ease of business as far as the e-com business of Zomato is concerned. So that's the reason why this is what I've picked up, that the fundraising will be close to $1 billion, 8,500 crores, and this will be essentially done to reduce the FI holding below 50%. We've written to Zomato for an official comment. We're waiting for a response from them.
All right, Nimesh, exclusive details there coming in from Zomato, the board meeting that is coming in now for on the 22nd. Shireen Bhan is also joining us on the show for this. Shireen, is a significant board meeting lined up for Zomato?
Yes, it seems that way, and I think as Nimesh has just broken, this was something that we were all wondering about. Given the cash that Zomato is already sitting on, what was the reason behind this fundraise? And I think Nimesh's story makes eminent sense because, given the aspirations that Zomato has now to take Blinkit forward and really grow Blinkit, the FDI restrictions will be a constraint and will be a spoiler. So with this QIP announcement coming in and the possibility of Zomato actually being able to lower its FDI holding, that would then open up a room for Zomato to be able to grow Blinkit without the added restrictions that the FDI policy on e-commerce puts in. So I would imagine that this now starts to make sense. And what I am also given to understand from my sources is that this is something that has been on the cards. There have been representations made to the government about this because remember, Zomato has Indian founders. It's headquartered here in India, but at the end of the day, the government cannot be guided by anything else but the FDI shareholding. So I think it is prudent that this is a decision or this is a consideration for Zomato at this point in time, given the fact that it is really looking at building out Blinkit, which is the reason why we've actually seen this kind of bump up as far as Zomato's valuation is concerned. So this now starts to make eminent sense, and I'm wondering if we have reactions there with guests on the possibility of
we do have Anil Talreja. We do have Anil Talreja, the partner at Deloitte India, and Mohin Ladha of Khaitan and Company, who are joining us to discuss this further. Gentlemen, good morning. Thank you so much for joining in. Mr. Talreja, the first question I would like to ask you is this fundraise that Zomato is planning to do now, is to this e-commerce policy. What does that help now with this, if that does take place? How does that ease things up for Zomato going forward?
Well, from a sector point of view, I think the challenge always was the FDI restrictions, as rightly mentioned by Shireen. I think what is important is there is some amount of clarity insofar as the regulations are concerned. I think that's one thing which is behind our back, because that was also a concern. Multi-brand, single brand, I think what can do, who can do, all that is sorted. And I think the sector overall has been growing pretty well. So if you look at FY23, our e-commerce sector was actually valued at almost $80 billion. So there's been an increased amount of growth. Finally, I think what is also important is ultimately everything is for the purposes of the consumer. Now, consumer spending has increased, and we've noticed that it has significantly gone up even after the revenge buying post-COVID. So if there is going to be a huge amount of demand from the consumers, then I think the companies will certainly have to follow the regulations, but they will also have enough potential to grow. Given that there is, a continuous ask, and it's not necessarily the larger cities, it is also the tier 2, tier 3 cities, which I think one has to focus on.
Yeah, you're absolutely right, Mr. Talreja, in pointing that out. Let me also bring in Mohin Ladha into the conversation. Mr. Ladha, many thanks for joining us. As I pointed out yesterday when the announcement was made to the stock exchanges about Zomato's QIP, we were wondering as to why they would need funds at this point in time, given the cash that they're already sitting on. But what my colleague Nimesh is now picking up, and it does, as I pointed out, make sense, is for Zomato to be able to unshackle itself from the restrictions on account of the FDI policy for e-commerce, especially as it goes out there and builds on its Blinkit ambitions. How do you see the possibility of this move and the logic and rationale behind it?
I think Shrin, there are two separate regimes by which foreign investment is permitted. And I'm not sure if your question is directed to the fact that FIIs or FPIs would now be investing, and that's the reason for this fundraise. Is that what your question relates to?
No, my question relates to the fact that under the FDI policy governing e-commerce, there are restrictions on group entities and how much they can transact with each other. There are restrictions on, for instance, only operating as a marketplace and not as an inventory model, etc. So, from that perspective, do you believe that it will allow a greater degree of freedom for Zomato Blinkit to operate as it grows its footprint?
Yeah, I mean, honestly, the restrictions are very clearly diverted towards the fact that one should not be able to facilitate a multi-brand retail or single-brand retail, as Mr. Talreja also mentioned, through this structure. Only a model, which is a marketplace model, is something that's permitted, really. So, I mean, those restrictions continue to apply. And those need to be, honored by anyone who's using a similar structure. Portfolio investment, on the other hand, is a separate regime, and you have an additional limit through which portfolio investors can really invest, which then gets capped at the FDI limit unless you've reduced it otherwise.
That's right, and this was a consideration, if I remember correctly, even as far as Zomato's IPO was concerned. But from an industry perspective, and we've really seen this big quick commerce boom, Mr. Talreja, let me start by asking you, in the past year and a half, in fact, now consideration on the part of the government to say, look, how do we slow this down? Can we slow this down? What is the impact as far as modern trade is concerned? Of course, we've just heard from Zepto unofficially that they're looking at additional fundraise, in addition to the funds that they already raised. But it, of course, requires immense amount of cash. But from a Tory standpoint, perhaps bringing the FDI holding in Zomato under 50% would provide a greater degree of flexibility?
Well, Shireen, I think the way I look at it is there is a significant amount of clarity which today is there. So there's no confusion in terms of what should be the percentage stake. But I think what is the driver for all of this? The driver appears to be largely the growth aspiration of the companies. And the growth aspiration typically comes as to what is the feel in the market. When we are seeing companies prosper, that's where they're deriving their valuations from. That's where they're deriving their investors from. And whether it is, single multi-brand inventory-based, the market-based model, or it could be even manufacturing. I think it all depends on what is the model, the financial and the business model that the company adopts. So just to give you an example, if you look at a company that is completely catering to quick commerce, as you said, which is a 10-minute delivery or a 5-minute delivery at the doorstep of the household, and has the potential and the capacity to meet that promise and doesn't do things wrong, I think then there is enough potential for this company to grow. And the funding, the shareholding pattern, the source of the funding simply then follows. That's how I have seen in many conversations I've had with companies in the quick commerce space.
Shireen, if I can ask you, with regards to Zomato, as even the guest pointed out about the shareholding pattern, the Chinese ownership has also come down considerably in Zomato. The last holding I was checking, Ant Financial owns only just 2% stake in Zomato now. They were owning more than 10% at one point in time. Will that also mean that the scrutiny on Zomato comes down from a regulatory point stand?
While it has been a concern and a consideration, I think across the board, all of the startups that did have significant amount of Chinese holding, including Paytm, etc., have consistently over the last years been trying to bring that down. So I'm not sure whether that is a likely factor, or a significant factor in this decision, but one will have to see. But I want to go back to Moin, and Moin, just to sort of again build out the case for this. For instance, I am given to understand, like many other Blinkit also has aspirations as far as private label and so on and so forth is concerned. So, just from a business model point of view and from the ability to be able to make choices to build out the ecosystem, so to speak, how do you see this move?
Your holding to a certain percentage also is driven by various other factors in terms of how what's the real intent of growth, what's the real intent of keeping the restrictions at bay, and it's maybe not only driven by FDI restrictions. Maybe there are other plans. I mean, I've seen more than one company who wanted to ensure that the control doesn't pass on to the FPIs, and they want to limit at least that control because there is another aspect. The moment you cross that control to foreign investors, then any downstream transactions you do or any future growth transactions you do, that also is subject to the same restrictions of foreign direct investment. On the other hand, if you're Indian owned and controlled, then whatever downstream transactions you do, which is like when you're buying any subsidiaries or other businesses under you, that's not subject to the FDI restrictions. So really, this limit gives flexibility to a company to be able to then explore sectors which may have greater, FDI restrictions or FDI regulations, because then you're treated as if you're doing investment as an Indian. The moment you pass the control to foreign investors, that flexibility goes away. Maybe that's possibly one of the intent, really.
Is an important aspect that you bring to the table. One will, of course, have to see how this pans out. And of course, this is source-based information that Nimesh is picking up at this point in time. I would imagine that we will have more details once the decision is taken and we hear from the company. The company, of course, is in a silent period at this point in time with their results awaited. And so we have not heard back from Zomato to the CNBC-TV18 query just yet. Many thanks, Mr. Talreja and Moin, for joining us here today. Appreciate your time. And of course, we will check back in with you as we have more clarity on the way forward.
All right. Thanks a lot for joining in and taking us through that conversation. So Zomato will be the stock that we'll be tracking for the next few sessions as well till we get some confirmation on that front. Well, as we were having that conversation, the Nifty briefly went into the green. We're still down close to around 15-20 points or thereabouts. The Nifty Bank, that's the one that's firing all cylinders. We'll wrap up on this edition of Chartbusters, but you don't go anywhere. Trading Hour comes up next.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that. So and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, something which is close to my heart. So they're also very committed a significant portion of a capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Hello and welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. The Nifty is back above 24,700, having recovered nearly 150 points from the lows. It's still in the red, but the cuts are not deep now. Just 34 points gone in the Nifty. The Sensex is down close to about 170 points, 0.1, 0.2% lower. It's banks, autos and metals where you are seeing that bounce back. Banks in particular, it's now approaching a 300-point gain on the Nifty Bank, and Axis Bank top honors. ICICI Bank has been strong this week with a near 2% gain. And then autos, right? Bajaj Auto is still in the red, but some of the others like Tata Motors, Eicher Motors are now back in the green.
And that is something that has come in after a big fall that we saw in last 3 trading sessions, right? Nifty Auto has definitely been an underperformer this week, but we started with sharp cuts, and the recovery in Bank Nifty is definitely notable. 150 points recovery on the Nifty, and we have some of these names from the Nifty pack, or I would say Bank Nifty, big contributors. ICICI Bank, HDFC Bank, both of these stocks are at the day's high right now. HDFC Bank is still in the red, but we've seen some recovery coming in from the lows for that particular name. The other names, as Reema mentioned, metals are doing well. We have something like a JSW Steel, Hindalco. All these stocks are leading to the recovery that we are seeing from the lows currently. So look at that. Metal index is up around 0.5% right now. But while we are talking about this good show coming in from the lows or good recovery, we have to speak about IT, right? Because so many numbers yesterday. It was a busy evening for you, but Wipro really stood out.
Wipro stood out for the way the stock has reacted. So Q2 was very strong for Wipro. The company's returned back to growth after 6 quarters of a top-line decline. So revenues were up 0.6%. Margins expanded for the 3rd quarter, and they expanded despite the company absorbing 1-month impact of a wage hike. Deal wins were healthy. The large deal bookings were the highest we've seen in the last 10 quarters. Bonus issue of 1:1. The street was disappointed with the guidance. The guidance for the December quarter stood at -2 to 0%. But here the question that analysts are asking is the new management being conservative? So typically Wipro always reported numbers in the middle of the guided band, fairly accurate. But now you have a new CEO. And even in Q2, the company's actual revenues turned out to be closer to the upper end. So maybe there is a bit of conservatism which is built in. So that could be reason number one, which explains the up move that we're seeing in the stock. Secondly, valuations for Wipro have always been cheaper than peers because the company struggled on growth. And thirdly, even since June, which is when the IT rally began, Wipro has underperformed the likes of HCL Tech and Infosys. So therefore, maybe there is a little bit of a catch-up taking place.
Okay, so it's a lot about the catch-up as well that we're seeing today on Wipro. But let's talk about City Gas distribution space, because the stocks are seeing big cut, be it IGL, Mahanagar Gas, Gujarat Gas, falling lesser than the other two, of course. But the impact here is lesser than the other two names. So the news is that MGL and IGL, they've gone ahead and confirmed that APM gas allocation to the sector will be cut sharply by 20% to around 50%. The earlier level was around 72%. This is due to 3 reasons. One is the lower gas production coming in from lower fields, gas requirements from new city gas distribution companies, and gas required for Opal Petchem, which is a plant for ONGC. So more gas will be required there, and that's the reason low gas is given to city gas distribution companies. Now remember, domestic gas is a raw material for city gas distribution companies. So if they are getting just 50% from domestic sources, 50% will have to be imported. And that is a chunk which is priced higher than domestic gas. And that is why both these companies say that this will impact profitability, and they are in discussion with key stakeholders to minimize the impact. The impact would be in terms of their margins or volumes. So Jeffrey says that assuming the shortfall is filled by imported LNG, EBITDA per SCM will fall between 2.3 to 3 rupees per SCM for all these 3 companies, which is almost a cut of around 20 to 30% versus Q1 levels. 6 to 7% price hike will be required for margin neutrality. If that happens, volumes will be impacted, and sector derating is likely on the back of that. ICICI Securities says that around 4.5 to 6.2 rupees per kg of price hike in the CNG segment will be required, because industrial or PNG will still get 100% allocation. The impact will be seen on CGDs. If the price hike is not taken, the EPS impact could be anywhere between 20 to 32%, highest being for IGL, MGL around 20%. But the assembly elections upcoming, that could limit the ability to take price hikes, and that is something that could impact their earnings. On the flip side, ONGC could could benefit because now it's getting higher gas for one of its petrochemical plants, and 4 MMSCMD would be the amount that they will get for this. The 4 MMSCMD translates to 7 to 8% of ONG's standalone gas production. This, with the improved pricing, if that comes by, it will increase the EPS by 2%, and it could be a structural upgrade as well, according to MK. So it would be positive for the upstream company like ONGC, but definitely the big cut that we are seeing in city gas distribution companies indicates there could be either margin or volume issues for these companies, and that's why that big cut in the stock prices.
And, since we've broken the story, also the stocks have been under pressure for the last 2 days. So pull up a one-week chart, a Mahanagar Gas or an IGL, you would see that it's not just today. The stocks have been under pressure over the last 2 days. We will chat with Probal Sen of ICICI Securities later on in the show to decode the impact of this. 11:40 is the time for the discussion. Get into a break and come back.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube.
Welcome back. You're still tuned into Trading Hour. We spoke about the equity markets. Important to talk about the commodity space as well. Manisha is joining in today, and today we are focusing on crude oil. Manisha, a big fall here?
Oh, well, yes, even as we are looking at all-time highs in gold and good gains in the industrial commodities, what hasn't done well this week is the crude oil prices. We're down by 6%, and this is the low, biggest weekly decline that we have seen in last 6 weeks coming in for the crude oil prices. We did start the week with almost $80 a barrel, and we are holding around that 74-75 mark on your screens. From the lower side of the level, there is a bit of a gain, and this is after the Chinese numbers coming in slightly on the stronger side. China is the largest consumer of crude importer as well, and with the strong numbers coming in, we have seen some support come into the prices there. Also, when you look at the recent statements coming in from the Middle East, those have eased the concerns about immediate supply disruptions or escalation of a war in Middle East, and that has led to prices come off their highs as well. The main thing that the street is looking at is the global demand growth concerns for this year and the next as well. When we started this year, the street did believe that the China numbers will finally stabilize and you will look at higher numbers. That hasn't happened. Having said that, with the kind of numbers that we are working with, Citi came out with a report overnight, and they believe that 0.9 million barrels per day of a demand growth is what we've seen in this year, and their expectation is 1 million barrels per day in 2025 as well. This is exactly what IEA also had mentioned within this week as well, 0.9 for this year and 1 million barrels for the next year. The higher numbers are continuing from OPEC, even as OPEC has cut demand growth expectations for a third straight month. Their numbers are still on the higher side at around 1.9 million barrels per day for this year, and slightly lower at 1.6 million barrels per day in the next year. So this is all about supplies, higher inventories, spare capacity with OPEC at around 5.5 million barrels per day, and then of course no supply disruptions really. So that continues to weigh onto the markets going forward.
Thank you very much for that. Get into a break. We'll come back and get chatting about the NBFC sector. Post the recent RBI action, names like Manappuram General Finance have fallen close to about 12-13%. Kaitav Shah from Anand Rathi Institutional Equities joins in next.
The first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype. And the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with.
Welcome back. You're still tuned into Trading Hour. Big moves from heavyweights in the Nifty pack. Axis Bank is one of them. This is on the back of its Q2 performance. Abhishek Kothari is joining in with all the details.
Well, going into the result, over the last 1 week, Axis Bank stock price was down about 4-5% on a week-on-week basis. So, post 11% underperformance to Bank Nifty in last 3 months, Citi has now closed the 90 days downside short-term view on Axis Bank. With reference to the performance of Q2 results, it was a bit of mixed bag that has come in from Axis Bank. Advances growth of 11.4% YOY is perhaps the lowest in last 12 quarters. Now, core operating profit that's declined on a sequential basis, that is for the first time in last 5 quarters. Net interest margin has come in at 8-quarter low of 3.99% versus 4.05% in the previous quarter. In this, there is a one-off of 5 basis point in Q2 FY25. Treasury income of 1,111 crore, that's provided cushion with reference to the bottom line on earnings of Axis Bank. With reference to the P&L versus our poll, NI was below our poll, PAT was ahead of our poll. Now, brokerages say that bank used one-off gains to lift their contingency provisions. Core revenue growth stays muted but should improve going ahead as deposit growth improves over the next few quarters. So valuation with reference to price to adjusted book value of 1.6, 1.7 1-year forward basis looks very attractive to them. So Citi has a neutral rating and they have cut the target price to 1,290 from 1,320 that they had earlier. DAM Capital, Morgan Stanley and Nomura have buy or overweight rating, and the target price ranging from 1362 as high as 1442. Back to you.
Okay, that's Axis Capital. What about Manappuram General Finance? That's where we are seeing the biggest fall today. Can you tell us a little bit more about the RBI action on its subsidiary Asirvad MFI, and how significant is it to its overall operations?
Well, RBI has taken action against select NBFCs who are especially operating in the MFI segment. So they have directed 4 NBFCs to stop sanction as well as disbursals of loan from October 21st. So 4 NBFCs, the names include Asirvad Microfinance, Arohan Financial Services, DMI Finance as well as Navi Finserv. So they have asked Asirvad MFI to stop sanction and disbursals of loans. Now it is a subsidiary of Manappuram. Action is based on concerns which are observed in the pricing given to the customers with reference to excessive pricing being charged by them to the customers, and they are not adhering to the regulated guidelines as well on the pricing of the loans. So NBFCs were found to be in non-adherence also on the assessment of household income and considering the repayment obligation in respect of their MFI loans, that is microfinance loans. So deviations were observed by RBI with reference to evergreening of the loans, that is top up of loans, conducting of a gold loan portfolio, disclosure requirement of the interest rate and the fees that they are charging to the customers, as well as outsourcing of core financial services. Back to you.
Okay, all right. That is about Manappuram, a big fall that we're seeing on that stock as we speak. In fact, speaking at the CNBC-TV18 Banking Transformation Summit on August 30th, Reserve Bank Deputy Governor Swaminathan defended the business restrictions imposed by the central bank on airing entities and said these decisions are never taken easily, adding that the central bank's goal is to ensure financial stability and not to hinder business operations. Listen in.
The decision to impose business restrictions is never taken easily. Strong supervisory actions are brought in only after careful on-site examinations, off-site data analysis, and extensive engagement with the regulated entities concerned for remediation, oftentimes stretching into several months. Our primary goal is to ensure the stability and integrity of the financial system and not to hinder business operations.
To talk more about this development, Kaitav Shah, lead BFSI analyst at Anand Rathi Institutional Equities, is with us now. Kaitav, first, have you lowered your estimates on Manappuram General Finance? If yes, by how much? How long do you think this will take to resolve? And what is the advice that you're giving now to if someone owns Manappuram General Finance?
So our traditional view on single product companies has not been very positive. Scale comes with multi-products. Single gold loan companies where we've never been very positive on. We don't cover Manappuram Financial, but from a perspective of competition also, there is a lot of competition from other NBFCs as well as banks in this space. So we always prefer from a top-down perspective, companies which are multi-product and are firing on all cylinders with different products, not just one.
Okay. Kaitav, does it impact the IPO of Asirvad MFI in any way? Do you think it could be delayed or there could not, the approvals could take longer than they are already?
It should get delayed, ideally, till the time this clarity emerges. Given the past instances of several other NBFCs which have undergone some amount of remediation, it takes typically 6 months to a year for everything to come back to normalcy. In this case, the wording is slightly more harsher than in other case, but the remedy process is typically 6 months itself. We also have to look at all this in the light that RBI has become stronger. They have a lot more data analytics now than what they did, let's say, 5 years back. And as a result, this is probably going to be for some time the case to be for a lot of NBFCs stroke banks, the oversight by RBI till the time some of the nuances within the lending space become more normalized.
So if it takes at least 6 months, right? At the bare minimum, it should take 6 months. It could even be longer. What's the hit to the overall business?
I think Asirvad for Manappuram was constituting roughly around 25% of the business, 20-25% of the business. With no incremental disbursement, you can assume that growth will be zero for next 6 months, and the book could come off a bit, and that would impact at least 5 to 10% on the overall growth numbers.
Okay, 5 to 10% impact on overall growth numbers, and it forms around 25 to 30% of the book. And of course, it'll take 6 months to see some clarity that emerges as well. Kaitav, thank you so much for joining us today with your take on what's happening with Manappuram. So it looks like it could be some time before we see full recovery and full impact of this action as well. We'll slip into a short break. Up next, we'll discuss the way forward for the market with Sunny Agrawal of SBI Securities. Stay tuned for that.
one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, in the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, you know, because I still haven't yet found the cause that I really want to support, as in, like, you know, something which is close to my heart. Yeah, so there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Sunny Agarwal from SBI Securities is now with us on the show. Sunny, we've had a few misses in terms of large cap earnings this week. So whether it's Bajaj Auto or Nestle, Infosys, there were no fireworks even in Axis's numbers. It's just pre-positioning, which is helping the stock do well. Any of these stocks are stocks that you were recommending, and now what have you made post the earnings that we've got?
Good morning, and thanks for having me on the show. I think, definitely the earning growth momentum has slowed down. So if you take a broader picture, Nifty earning has nearly doubled during FY20 to 24 period, and now during the next 2 years, definitely the growth will acceleration will slow down, and the consensus is that 12 to 13% kind of earning growth will be seen. Coming to the current quarter numbers, yes, definitely there has been a disappointment or no fireworks across the various sectors. But having said that, I think the Bajaj Auto commentary has been misconstrued by the street that the first half of the festive season was a week, but we have to keep in mind that second half is still remaining. And at the same time, many product launches from a Bajaj stable like Freedom. At the same time, CNG exports are reviving. So I think post correction, I think Bajaj Auto is something which we would like to add in our portfolio from a long-term perspective.
Okay, so you would like to add Bajaj Auto from these levels. Any other themes that you're looking at from a long term? Because you said FY25 or the next earnings that we look at will be a little subdued. But any themes that you want to play on right now?
Yeah, so definitely, I think there are many smaller sectors where we feel that earnings growth will be in the north of 20% CAGR. Case in point, railway wagons, where we have seen a kind of 20 to 30% price correction from the top. So all the three players, whether it's Texmaco, Titagarh or Jupiter Wagon, so we have seen 30% price correction. At the same time, all the three players are sitting on a robust order book. Industry tailwind is pretty strong. So the number of freight railway wagons are likely to double in the over the span of next 4 to 5 years. At the same time, all these players are venturing into the forged railway wheels manufacturing, Vande Bharat train. So I think post this correction, railway wagon is the one theme which we like. Then a few auto ants name which are predominantly a powertrain agnostic player. So companies like SJS Enterprises, or for that matter Precol, or for that matter Garware High Tech Film, wherein basically their dependency on whether the vehicle is EV or ICE doesn't matter, and ultimately the premiumization and improvement in better product demand from the consumer is something which is driving the growth story. And in addition to that, metal products, so basically metal companies or product companies which are catering to the infrastructure sector, a case in point a wire rope segment, or for that matter structural steel tube industry. These are the few sectors which we like from a medium to long term perspective.
Sunny, you just said like how Bajaj Auto is a stock that you would look at. The commentary is misconstrued. So therefore, if it's correcting, you've seen a bit of a fall, you'd like to add it, to your portfolio over the longer term. Any other such stocks where we have seen a correction and now it's looking attractive? Would you like to name some stocks?
So, in addition to Bajaj Auto, I think I would like to go ahead with telecom sector. So, although we have not seen a very significant correction in names like Bharti or for that matter Bharti Hindalco, I feel telecom as a sector will continue to deliver a kind of mid-teen earning growth over the next 2 years. And again, that's the sector to be in. We have seen a recent increase in prices. So on a YOY basis, I think telecom sector will continue to deliver a decent kind of earning growth. And in addition to that, a few capital market players which are focusing on wealth management side. So companies like Nuvama or for that matter 361. So these are the few players which I would like to add.
You also have some of these QSR names, jewelry, fashion and watches that you're looking at. You think consumption as a theme is something that we can look at current levels? Because even there we talk about elevated levels. Nestle's earnings generally were not very strong. We have Tata Consumer coming out. What are the trends suggesting?
Again, I think QSR as a segment anyway was not doing well since last 6 to 8 quarters. And now we are hopeful that second half is likely to be a better quarter, at least in terms of SSSG growth. And on the low base, all these companies should start delivering. We have already seen that their expansion in terms of store network has not corrected significantly. So any uptick in the demand on QSR discretionary spend can definitely aid in the earning growth of this QSR as a sector. And within this pack, I would like to go ahead with players like Jubilant Foodwork or for that matter, Devyani International. Moving on to the other consumption themes like jewelry. So we have seen a very strong provisional update from all the jewelry players. And again, with the wedding season ahead of us, I think jewelry as a sector continue to look good. And again, there we have got a coverage on Senco Gold. So Senco Gold is the one top pick among the jewelry player, which we like from a medium to long term perspective.
Okay, thank you, Sunny, for throwing light on the way to approach the market from here on. Get into a break. On the other side, we'll put the spotlight on these city gas distribution companies. IGL, MGL, Gujarat Gas, all of them under pressure after a sharp cut in the gas allocation to the sector. Probal Sen of ICICI Securities joins in next.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
Welcome back. Well, we've seen a further recovery on the Nifty. It is up 30 points in the green now, very close to that 24,800 mark at the day's high, and it is again led by the Bank Nifty. The Sensex 2 is in the green. Mid-caps have recovered sharply. It's a 46-point downtick on the mid-cap index, but still, it is at the day's high. What is leading to these gains? Look at Axis Bank. It's up almost 5.5% right now. Despite those mixed set of numbers, the positioning and the brokerage calls make this stock go higher today. We do have the ICICI Bank stock as well, which is doing really well. So this is about what's happening at the benchmark level. But in the broader market, city gas distribution space, these stocks continue to be under pressure. Let's get in Probal Sen, the energy analyst at ICICI Securities, to analyze what next for these names. Probal, good morning. Thank you so much for joining in. Do you think there's a further downside we could see from here on? And what is the outlook now, considering that there's still uncertainty on price hikes? If they do take it, there could be impact on volumes, right? So how do you look at the entire space now?
I think the issue really is the quantum of the cut that has been announced at one go. One has to remember that in any case, the quantum of gas allocation on APM basis is being cut fairly regularly over the last couple of years. If you really go back, it was probably closer to 85, 86% till a year and a half ago. And now it is, it is at about 70%. So a gradual reduction is something that has been absorbed by the companies without it impacting volumes too much, because the differential between CNG prices across major cities and for petrol and diesel continues to be fairly significant at about 38 to 50, even 38 to around 45% as per our calculations. So I think passing it on over a period of time is something that is definitely doable, and we do believe that that is something that's going to happen. Having said that, obviously a 20% cut creates a requirement of around 4 to 6 rupees per kg of hike in CNG to keep the margins at the same level, which may not be feasible to do at one go. And therefore, our sense is that for the next couple of quarters, margins are definitely going to probably remain under pressure for all the three CGDs, less so for probably for Gujarat Gas because of its lower dependence on domestic and CNG for overall business, but definitely for NGL and IGL, there is definitely a pressure that's going to be there. I don't subscribe to the thought process that this can lead to a sector derating, because at the end of the day, this is something that was going to happen maybe over the next probably 12 to 18 months, which has happened at one go. Now, the only caveat here is further allocation reduction in the near term should not happen, because that then obviously puts even more pressure on margins. I think that is something that will need to be seen and monitored. If this is the one-time hike and remains at this level for the next 6 to 9 months, I think that the companies, the CGD companies, can gradually pass it through without hitting volume growth to any huge extent. So that's how we are looking at it at this point of time.
Has it ever happened earlier that the allocation has gone below this 50% mark since the time the APM mechanism has come on board since 2014?
No, not at all. I don't think that we have seen this kind of a level. But then to be fair, the level of 70% was also something that was not seen before the last couple of quarters. So it's something that's been gradually happening. The fact is that this production, the earmark production for APM allocation, is from extremely old fields, and with the introduction of the 20% premium on well interventions rather, even in existing fields, that has come about. Pricing for all gas was going to continue to go up. The question really is how fast is the cost increase versus how fast the market can absorb the increase in prices. I think that is something that will be important to monitor going forward. So definitely, the next 3 to 6 months are going to probably see a lot of pressure in terms of earnings. But one will really have to see how these companies pass on the cost increases and how LNG prices fare for the next 6 to 12 months, because that is really the only alternative that these companies have to sort of manage their margins and costs. So I think those two will be key monitorables. But I think the correction that has happened today, I think probably takes care of the kind of impact that one sees. We would remain buyers on Mahanagar gas and Gujarat gas, particularly from these levels.
Yeah, I was just going to ask you that next. What would you do with these names currently? Prabal, if you can quickly tell us, is this positive for ONGC now that a portion of gas production would be going there for the Opal Petchem plant?
I mean, frankly, Opal is something that has been seeing, big losses. If memory serves, FY24 also saw them reporting a PBIT level loss of somewhere around 4.5 to 5,000 crore. If I look at their gas consumption of around 4 MMSCMD in total, assuming that they were paying somewhere around $10 to $11 an MMBTU earlier, given that the reliance was on imported gas, that would have been a burden of somewhere around 5,200 odd crores on an annualized basis for gas costs. If they start getting all of this gas at $6.5 to $7, that burden reduces by somewhere, easily by about 2,500 crore. Add to that the fact that they've converted a lot of the debt into equity, and the interest cost burden annualized to, I think, more than 3,000 crore should also reduce to a certain extent. So definitely, I think Opal can probably see the path to profitability becoming a little bit easier, specifically because on the end product side, they can't really do too much about the pricing softness that continues to be there on the petrochemicals.
Okay, take that point. Thank you so much, Prabal, for joining in with your insights. The ONGC stock, by the way, has recovered sharply from the lows as well. So this sector continues to be in focus. As we slip into a short break, a small programming note. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18's Market Movers Forum, 3 p.m. onwards on the 24th of October, featuring guests like Ramdev Agrawal, S. Naren, Nilesh Shah and others to help your portfolio prosper this Diwali.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype. And the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is insane, absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
Open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager,
how giant?
Big.
Welcome back. Well, from the broader markets, the wires and cables segment is one which is under pressure. KI Industries reported numbers 2 days back. It's been under pressure since then, and Polycab and Havells now are in focus. Upasana is joining in now with what the management commentary looked like and what were the key takeaways from Q2 earnings. Upasana.
Well, three key players in cables and wires segment, that is KI Industries, Havells, Polycab, have reported their Q2 FY25 numbers. Now, let us look at what are the key trends seen in Q2 by these companies. Now, margins for all these three companies were under pressure, and the companies have indicated that high volatility in the commodity prices impacted their EBITDA margins. Companies couldn't pass on the cost increases to customers due to copper LME price movement. And companies have also said that the festive season shift led to advancement of advertising and promotion spends to Q2 due to early onset of festive season. Companies are expecting margins to normalize in upcoming quarters as commodity prices have started to soften a bit. Now, on the revenue growth front, the revenue growth remains intact for all these three companies. KI Industries reported a revenue growth of 17% on a Y-on-Y basis, which was in line with the street estimates. Havells reported a revenue growth of 16% on a Y-on-Y basis, which was above the poll estimates. And Polycab India reported a revenue growth of 30% on a Y-on-Y basis, which was again above the poll estimates. So strong revenue growth coming in. Now, companies have given a very positive commentary on the festive demand. They say that the demand is healthy and festive season has started on a good note. Demand has been distributed across the regions, but mainly rural has started to see a demand uptick from here on. It expects demand momentum to continue in the upcoming quarters is what the companies have highlighted. Now let us look at the stock correction from the recent highs. KI Industries is down about 17%, Havells is down about 13%, and Polycab is down about 9% from its recent high. And in terms of valuation picture, KI stands 42.2 times, Havells stands around 57.1 times, and Polycab stands around 43.1 times.
All right, Upasana, thank you so much for giving us that lowdown on the segment. Let's move on with that. In an exclusive conversation with Shireen Bhan, British Airways CEO Sean Doyle said that India remains the airline's second largest market and that they plan to do much more expansion in the India's exciting aviation space. Listen into a slice of that conversation.
How important is India for British Airways today? And what's the aspiration, what's the ambition in terms of market share? Because it's still fairly small in comparison to the aspiration that you have.
Well, I think India is our second biggest market. It is strategically very important. We have a lot of links from a trade and a diaspora perspective. We think air service is a very critical catalyst for the growing economic relationship that's emerging between the two governments. But also we employ a lot of people in India. We have 2,500 people who work for British Airways here. And in fact, yesterday I had the privilege of opening up our new engagement centre down here in Noida. So we have a great team here. They're very much part of the British Airways family. And they make the experience in British Airways, very, very, I think, comfortable and fit for purpose for the Indian market.
So, you talked about this being your second largest market and a very strategic market for you. Now, what is that going to entail in terms of future investments, in terms of future hiring, and in terms of future expansion, from a connectivity point of view?
We're investing $7 billion in modernising British Airways, and that's well underway. You will see more and more of our new product on the Indian routes. Our Club Suite, which is an award-winning business class experience, is now on nearly every route, and by the time we get to the end of next year, nearly all of our flights will have that experience. We're also investing in new technology, so a fantastic digital experience. And of course, we're modernising our IT infrastructure. But generally, whether it's the digital experience or the onboard experience, we've very, very ambitious investment plans. And, we're only starting in British Airways on this very extensive modernisation programme.
I'll talk to you about the modernisation programme in just a second, but let me labour a little bit more about the Indian market. And, if you look at the IATA data as well as the IATA forecast, India is being positioned as one of the fastest growing commercial aviation markets in the world today. From that perspective, what's the kind of demand outlook that you foresee?
I think that's obvious. Even compared to China, I think Indian travel per capita is about 1/10 of what we see in China. So the growth is going to be exponential. I think everybody will want to serve the market. I think it's a very exciting time for international operations into India, but also for the domestic market. But I think India is a very important strategic market for anybody who's serious about international aviation.
All right, with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years. The specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like, there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that. So, Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, something which is close to my heart. So there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Stocks stage a smart recovery after an early slide. Financials and metals are prominent gainers, even as IT and FMCG drag. Mid-caps underperform.
Axis Bank gains despite a slowdown in loan growth, a compression in margins and a high credit deposit ratio as valuations stay attractive. The stock's recent underperformance aids the move.
Wipro turns in a strong show and announces a bonus issue as well, but offers weak guidance. Infosys delivers on expectations but offers little in guidance to spur optimism. LTI Mindtree falls short of revenue growth expectations.
Zomato's board will meet on October 22nd to consider a fundraise. The move is puzzling given its big cash hoard. A likely motivation is to gain operating flexibility by paring foreign holding to escape FDI restrictions, say experts.
And the Reserve Bank of India asks 4 non-banks, including Manappuram-owned Asirvad Finance and Sachin Bansal-steered Navi Finserv, to stop sanctioning and disbursal of loans from the 21st of October. The stricture follows violation of loan pricing guidelines. Manappuram Finance is down over 12%.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Hormuz Vatakia. Well, it's turning out to be a session where we're just about consolidating. Yes, there is a recovery, but what stands out today is the Bank Nifty, which is up around 1% courtesy Axis Bank, which is at the high point of the day, up around 5.6% at this point, probably setting the precedent for all of the other banks that will be releasing numbers in the next couple of days. Well, just to put it into perspective for Axis in particular, Hormuz, I was going through a couple of statistics. What seemed to stand out is the asset quality. And overall, before that, despite reporting what was an overall sluggish set of numbers in terms of credit growth, etc., Nomura has said it was a steady quarter amid muted expectations. Coming to the asset quality, the total slippages, based on what they've reported, was lower on a Q-on-Q basis, and recovery and upgrades was higher on a Q-on-Q basis at around over 2,000 odd crores. So that's probably what has aided the stock, which has jumped to around 1,200 odd rupees. But
at the high point of the day is Axis Bank, the top gainer on the Nifty this afternoon. But yes, some very important final few hours of the week lined up for the markets. The Nifty has had a very, very sharp recovery from the lows of the day. 24,564 is the low that it has now made for the series, and the bulls will be hopeful that this is the bottom, at least for now, for the index. Now nearing the levels of 24,800, the Nifty Bank, the principal contributor, almost 850 points off the lows of the day, nearing those very important levels which it had closed on Tuesday, which was around 51,900. So 52,000 on the upside becomes the key level to watch out for on the Nifty Bank as well. What is also doing well other than the Nifty Bank are metal stocks. The Nifty Metal Index is up over 1% in today's session. So banks and metals leading the gains. Most of the other sectoral indices are also seeing some bit of gains today. Autos are staging a bit of a rebound after the sell-off that we saw yesterday, but offsetting those gains are IT and FMCG stocks. So Infosys is leading the downside on the index after the results yesterday, and on the flip side it's Wipro. So IT is leading the downside and offset by banks and metals.
Yes, absolutely. But let's in fact drill a little deeper into a couple of those top movers now. City gas distributors are in focus today on the back of the APM gas allocation cut. As you can see on your screen, there are steep cuts which have come into a lot of these stocks. Sonal is here with the details on this. Sonal.
Thank you for that. Well, yes, it's finally been confirmed that the government has gone ahead and they've cut the allocation to city gas distribution sector by 20%. The earlier number was 72%. This is the steepest cut that we've seen in a long time. And this is due to lower gas production from lower fields. There is gas requirement for newer CGD companies and gas requirement for Opal Petchem plant from ONGC as well. So that's around 4 MMSCMD of gas that gets diverted there. Both IGL and MGL in their press release have indicated that this will have material impact on their profitability, and they are in conversation with the stakeholders to minimize the impact of this particular cut that has come by. As I said, there would be material impact on the earnings if the cut is not, if the price hike is not taken. So Jeffrey says that assuming the shortfall is filled by imported LNG, because now domestic gas is only 50% of their sourcing, they will have to import gas from outside, which would be priced at a higher price of by around 50 to 60%. The EBITDA per SCM would fall by around 2.3 to 3 rupees per SCM, which would be around 20 to 30% fall versus Q1 FY25. That would mean that that they will need to take 6 to 7% price hike. If they do that, volumes could be impacted. According to Jefferies, this could lead to a derating in the sector. ICICI Securities says maybe not a derating, but next 3 to 6 months, there could be an impact on margins. They will need a price hike of 4.5 to 6.2 rupees per kg. If the price hike is not taken, the earnings impact could be anywhere between 20 to 32%, highest for IGL, and MGL will also see an impact here. But the assembly elections could possibly limit their ability to take price hikes going forward. In a third view, MK says that ONGC could benefit now because the gas production or the gas sourcing is going to Opal Petchem plant. That is around 4 MMSCMD, and this will add 7 to 8% of ONGC's standalone gas production. This will also mean an EPS upgrade of 2% annually, and this will be a structural upgrade that ONGC and Opal Petchem plant will see. Profitability will improve there. But yes, it's come as a setback for these city gas distribution companies because either they miss out on margins or on volumes.
Massive setback indeed. MGL, IGL both seeing double-digit losses in today's session. So thanks a lot for that. But Axis Bank, we were just speaking about that. They are surging. The shares of that bank are surging today after the results. Abhishek is joining in with more details. Abhishek.
Well, it was a mixed bag coming in from Axis Bank. However, going into the result over the last 1 week, the stock was down already 4 to 5%, factoring in weak results as per investors' estimate. However, the results have been fairly mixed bag. So, post 11% underperformance to Bank Nifty in past 3 months now, Citi has closed their 90 days watch list that they had created with respect to downside in the shorter term for Axis Bank. In terms of business momentum, advances growth was weak on a YOY basis. It was at 11.4%, which is one of the weakest that you are seeing in last 12 quarters. Now, the core operating profit declined on a sequential basis, that is quarter on quarter, and it is for the first time in last 5 quarters that the core operating profit has declined. Net interest margin is at 8-quarter low of 3.99% versus 4.05% in the previous quarter. 5 basis point decline in net interest margin as per management is a one-off. So, treasury income was at 1,111 crores, and that actually aided the earnings or the bottom line of the bank. So, with reference to the PNL to our poll, NI was below our poll and PAT was ahead of our poll on account of the huge treasury gains that they have recorded. Brokerages remain bullish on Axis Bank. They say that the bank has used one-off gains to lift the contingency provisions. Core revenue growth stays muted but should improve in the second half of this fiscal. So, valuations as per them are price to adjusted book value of 1.6 times 1 year forward remains very attractive and reasonable to them. So, apart from Citi, which has a neutral rating, DAM Capital, Morgan Stanley and Nomura remain bullish on the stock. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on Axis, that stock up around 5.5%. But Sonal is still with us. Prestige Estates is also on our radar today. This is on the back of a Q2 business update. The stock, as you can see, is under pressure. Sonal.
Well, that is because it's disappointing. The YY numbers that we look at, the pre-sales has almost halved, 43% lower on a YY basis to come in at 4,023 crore rupees. Sales volumes at 3 million square feet, that's a fall of 56% on a YY basis. However, average realizations have gone up, that's up around 33%, and that explains why pre-sales decline is not as much as the volume decline. The plots average realization is down 1.5%. That's the plotted development that the company does. The collections have gone up by 4%, so that's a positive, of course, that the cash flows are doing well. The company says that they saw a healthy mix of geographies in this quarter. Bengaluru was at 51%, Mumbai has taken a lead here, 26%, and Hyderabad is at 21%. And the new projects that they have entered into, the one at Mulund and the Raintree Park, accounted for more than 50% of total sales this time around. But looks like there is an impact because last year was extremely strong for the company. The upcoming launch will set the stage for strong finish to FY25 according to the management. We'll have to understand, of course, what went wrong this quarter. Could be because of the Shraddh season and other impact as well. 3.03 million square feet of projects were completed in the quarter according to the management, and during first half, the project launches totaled around 10.05 million square feet. There were 5 new projects that the company launched. Maybe the impact or the sales of it would come in the second half, but yes, it was a weak operational update which came in from Prestige.
And it's showing in the stock price as well. Sonal, thanks a lot for joining in. 2.75% lower. There is Prestige Estates near the low point of the day. Time for a short break. Next up, we focus on IT and the stocks that are moving on either side of the spectrum after their Q2 results. Stay tuned, back on the other side.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation.
Back with us here on Halftime Report. On to some IT earnings now, starting with Infosys. Delivered on expectations but offered little in guidance to spur optimism on the street. Rima is having more details on this. Rima.
Indeed. So it was a good quarter, but there was no positive surprise in the Q2 numbers. And plus, remember, the stock had run up so much. Since early June, the stock is up close to about 40%. So from here on, you needed a positive surprise to take the stock price higher. Now, quick run through of the Q2 numbers. Revenue growth was strong. Dollar revenue growth up 3.8%. Constant currency revenue growth 3.1%. On expected lines, the company upped the FY25 guidance. It now stands at 3.75 to 4.5%. But again, even this guidance is a bit cautious, I would say, because, if you have to achieve the middle end of the guidance, say closer to 4.2%, the company needs to deliver no growth in Q3 and Q4. That said, the BFSI revenue growth was fairly upbeat. Morgan Stanley says that you can expect a slight stock correction in the stock price in the near term, but they would use any potential corrections to build on position. Citi says there are certain forward-looking indicators which makes them neutral. One of them is that the large deal wins on the last 12 months basis is down 7.4%. Headcount up quarter on quarter, but still down 3% year on year. And the guidance implies no growth in Q3 and Q4 at the midpoint. Back to you.
Okay, all right, Rima, thanks very much for that. So that's on Infosys. But staying with the IT space, Wipro reported what was a good set of Q2 numbers. It beat estimates, but guidance for the third quarter has disappointed. In fact, we also spoke to the management of Wipro to discuss the numbers and the way forward. Listen in.
We factored in the furloughs, we factored in the number of days of working in this particular quarter, and also we factored in for Europe in terms of the slowdown that we have experienced. Based on these three factors, we have kind of guided between that range. Having said that, we do have momentum across the markets, include, for example, Americas, across sectors we see a good pipeline. Also APMEA, we are seeing good pipeline, and we'll continue to stay focused on executing to that. As far as furloughs are concerned, if you look at this quarter last year, I think it was very similar. So it's not something which is out of the ordinary. It's very similar. Specific to Europe, like I said, it's a few client-specific ramp downs that happened, which actually impacted our growth. But having said that, we continue to see the deal pipeline and deal momentum in Europe. I think the focus is on winning them, and this is
across the countries that we operate in Europe and across the industries that we operate in Europe.
Infosys and Wipro opposite reactions to their results. Time for a short break. Up next, Sudeep Shah of SBI Securities joins in with some trading strategies. Stay tuned. Back on the other side.
Of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it.
Carefully.
Welcome back. Well, in the green for the mid-cap index at this point as well, so up around 89 odd points. Good time then to get in a quick technical check. Sudeep Shah joins in to discuss what he's strategizing at the end of the week. Sudeep, hi, welcome to the show. Well, if you could just start with giving us a sense in terms of what your strategy would be for the Nifty, considering that, it's been sluggish, down 0.6% for the week.
Yeah. Good afternoon. See, what we've seen today is that the index has broken down below its key support zone, which was closer to 24,900, 24,950. And although we've retested the lows of 24,560 and have rebounded now back to 24,800, I feel that 24,900 would now remain an important resistance on the upside. 24,900, 24.
It seems to have lost the line there with Sudeep. We'll try and reconnect with him again. By the way, the market continues to be where it is right now. Axis Bank still trading 5.5% higher. Eicher Motors has now sprung up to the highest point of the day, 3.5% higher for that stock as well. So autos are staging a bit of a rebound after the sell-off that we saw yesterday. Eicher is up 3.5%. Tata Motors is now up 2.5% in today's session. Metal stocks continuing to do well. Tata Steel, JSW Steel trading with gains of 1.5%. So good going overall for the index. A very, very sharp recovery from the lows of the day, almost 250 points now. And Sudeep is back with us on the line. Sudeep, you are making a point on the Nifty. You're saying 24,900 is a resistance. So complete that bit and also couple that up with your stock recommendations as well.
Yeah. So sorry. Honest, I feel that 24,900, 24,950 would act as this resistance, and crossing this zone, we could see 25,200 once again. So one should wait for 24,900, 950 to cross, and on the downside, 24,650 will now act as an important support. What we feel is that Bank Nifty could still continue outperforming Nifty, because in the last few days where we have seen Nifty sliding fair bit, Bank Nifty has held on to this levels. So overall in Bank Nifty, we feel 51,500, 51,450 would act as an important support. On the upside, levels of 52,300, 52,500 could be visible. Stocks that we like at this moment are MCX. Now, the first reason like MCX out in the last few days, when we have seen a significant cut in the large caps, in the mid caps, this stock has held on to its key support zones. All the dips closer to 6350, 6400 have been bought into. So we feel that this is in a fair bit of uptrend, and till the levels of 6430 holds, MCX could continue its up move up to 6700. So this can be bought with a stop loss of 6430 for a target of 6700. The second stock that we like is NALCO, National Aluminium. Now here, what we've seen is that while there was an intermediate fall in the metal stocks, NALCO even fell but recovered much faster. So there's a outperformance which is visible against the metal index and against the broader markets also. So here the daily, weekly and the monthly charts all are hinting towards a strong uptrend, a structural uptrend. So we feel that this could be bought with a stop loss of 226 on the downside and a target of 240 on the upside.
Okay, all right, Sudeep, we'll let you go on that note. Thanks very much for joining in and taking us through that. Well, we'll take a short break. But up next, we'll discuss the way forward for the market. We have Manish Jain, Head of Fund Management, PMS and Equity Advisory at Centrum, joining in with his view.
misguided assumptions about what it could potentially do or how soon or, whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many. And I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips or, AI first and so on and so forth. Today, as you look at your business, as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype. And the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is insane, absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, near the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that. So and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, something which is close to my heart. So there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Carefully.
Back with us here on Halftime Report. Manish Jain, Head of Fund Management, PMS and Equity Advisory at Centrum, is now joining in to discuss the way forward for the markets. Manish, good afternoon. Thank you so much for joining in. What are you telling your clients as of now, because of the volatility that you're seeing in the markets currently? Do you expect that you would wait for a further fall before you ask your clients to nibble in, or do you think that this fall has been decent enough to start nibbling in at lower levels?
Yeah, so the point is that, at some point of time, this was bound to happen. It's not something which is very, very surprising, given the kind of rally we've had in the last year or so. Market had already delivered somewhere close to 30% sort of a return. So 5% kind of a pullback from those levels is actually healthy. It's something that is warranted. And we do believe that in the near term, in the next 1 or 2 months or thereabouts, the markets is going to continue to remain sluggish, largely because of 2 reasons. One is the result season that is unfolding in front of us is clearly a mixed bag so far, and we are not expecting anything great. I think from an overall perspective, this result season is going to be by and large in line with what we had seen in Q1. very low single digit sort of a overall profit growth from a Nifty perspective. Now, if that is going to be the case, and plus the fact that sector rotation is now starting to get underway, where we are incrementally going to see a little bit of a movement which is going to happen away from banks and a little bit of a movement which is going to be away from autos and more towards IT, more towards FMCG, then this is a good time actually to pick it up. I don't think the market is going to correct further from here onwards in a meaningful manner. But I think from a near-term perspective, it is going to remain sluggish. It's going to be a very sideways, range-bound sort of a movement, which is going to happen in a 1,500-point zone, right? 26,000 points on the higher side and 24,500 on the lower side. So we are already kind of at the lower end of the band in our view. And from that perspective, if somebody has a 3-year horizon and want to build up a position, this is actually a good time.
Okay, all right. Well, Manish, hi, welcome to the show. What's your reading in terms of what we are seeing when it comes to the FIIs? They've been continuously selling for the entire month of October. Yes, DIIs have mitigated majority of the selling, but nonetheless, that seems to be weighing on the market. What's your reading?
So FIIs have been a little iffy, the flows, a little iffy for the last 3 years odd now, right? 2022 was as bad as it could have gotten. And I think given the liquidity that has come into the equity markets, the domestic liquidity that has come into the equity markets, I think that's actually been good enough to mitigate it. 2022 was a landmark year, right? The FII selling was at an all-time high. And yet Indian equity markets, Nifty was pretty much one of the very few global indices, frontline global indices, which actually delivered positive return that year. And this is despite the extent of selling that we saw. So I think FII flow importance in the overall context of things have been reducing, and I'm not going to read too much into it, primarily because mutual funds are still kind of sitting on a very huge cash position. So that liquidity is waiting on the sidelines to come through, and the fact that SIP flows continue to remain strong. But given that rate cut cycle has started in the US, I think global flows towards equity should pick up, specifically more from an emerging market perspective. So kind of remain a little optimistic over there.
You know, Manish, a lot of people would ask you which are the pockets that you should invest in. I'll flip the question for you. Which are the pockets do you think one should not invest in at this point of time? Because given the kind of run-up that a lot of these sectors have seen, despite having corrected 30, 40, 50% from their highs in this recent sell-off, they are still expensive in terms of trading above their 5-year average valuations as well. Is there a sector, or are there sectors that you're telling your clients to stay away from at this juncture?
See, I'm not looking at valuations at this juncture. It's more of a growth market than of a value market. 2022 valuations probably would have been more important than growth. So now from a growth perspective, I'm not really bullish on autos, and I'm not really very bullish on banks. And these are the two sectors where we've been continuously cutting our weight. Autos primarily because A, the valuations have run up very sharply. They are very expensive. And second is that the inventory pipeline, particularly on the four-wheeler side, is at a very, very uncomfortable levels, right? So that's a combination over there. And banks largely because I think in a rate cutting scenario, deposit mobilization is going to be a challenge. Credit growth has been coming off, which basically means that even if you are able to maintain NIMs, then you're looking at a 10, 12, 13% sort of a PPOP growth regime as compared to 20% plus that we've seen. So particularly on the large cap bank side, I think better to stay away and move the weight more towards NBFCs at this juncture.
Okay, all right. Move towards NBFCs at this juncture. So that's the word coming in from Manish. Manish, we're going to let you go on that note. Thanks very much for joining in and providing your perspective on the markets. We need to take a short break, but as we do that, a small programming note as we slip into a break. As we prepare to ring in the festivities this Diwali, tune in to CNBC-TV18's Market Movers Forum, 3 p.m. onwards on the 24th of October, featuring guests like Ramdev Agarwal, S. Naren, Nilesh Shah and others to help your portfolio prosper this Diwali. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Let's put the spotlight on cables and wire companies in our Insight Edge segment. How has the performance been of some of these companies in Q2 FY25? What are the key takeaways from all three of them in terms of the industry as well as company specific? Upasana joins in our Insight Edge segment. Upasana, over to you.
Well, three key players in cables and wires segment, that is KI Industries, Havells, Polycab, have reported their Q2 FY25 numbers. Now, let us look at what are the key trends seen in Q2 by these companies. Now, margins for all these three companies were under pressure, and the companies have indicated that high volatility in the commodity prices impacted their EBITDA margins. Companies couldn't pass on the cost increases to customers due to copper LME price movement. And companies have also said that the festive season shift led to advancement of advertising and promotion spends to Q2 due to early onset of festive season. Companies are expecting margins to normalize in upcoming quarters as commodity prices have started to soften a bit. Now, on the revenue growth front, the revenue growth remains intact for all these three companies. KI Industries reported a revenue growth of 17% on a YoY basis, which was in line with the street estimates. Havells reported a revenue growth of 16% on a YoY basis, which was above the poll estimates. And Polycab India reported a revenue growth of 30% on a YoY basis, which was again above the poll estimates. So strong revenue growth coming in. Now, companies have given a very positive commentary on the festive demand. They say that the demand is healthy and festive season has started on a good note. Demand has been distributed across the regions, but mainly rural has started to see a demand uptick from here on. It expects demand momentum to continue in the upcoming quarters is what the companies have highlighted. Now let us look at the stock correction from the recent highs. KI Industries is down about 17%, Havells is down about 13%, and Polycab is down about 9% from its recent high. And in terms of valuation picture, KI stands 42.2 times, Havells stands around 57.1 times, and Polycab stands around 43.1 times.
Upasana, thanks a lot for that. And most of these companies still trading above their 5-year average despite these correction. Time for a short break. On the other side, Manisha Gupta will be in conversation with Ajoy Chawla, the CEO of the jewelry division at Titan. Stay tuned, we'll be right back.
Informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day.
Carefully.
Welcome back, and joining us on the show is Mr. Ajoy Chawla. He's CEO, Jewelry Division, Titan. Mr. Chawla, hi, thank you so much for joining us. And another day and another all-time high for the gold prices. How is the festive demand, considering that the prices continue to run one-way side?
Festival season is all looking good, poised for, I'm hoping for very good growths. We saw very good sentiment surveys initially, where people had very positive response towards jewelry buying this year. We do that every year in the few months leading up to festive, and it was even higher sentiment than last year, notwithstanding the gold price. Of course, gold prices have gone up even further in the last couple of months, and even after the custom duty reduction, thereafter international prices of gold have gone up, and consequently now the price of gold is even higher than what it was pre the custom duty drop. So notwithstanding that, we believe it should be a good festive season, but we'll wait and watch. It's an early start. It's been a good start so far. I would say certain parts of the country doing better than others, but this Dussehra weekend was good, and even the regions which were lagging a little bit behind compared to the other regions have started picking up well.
All right, that's good to know. But Mr. Chawla, what is it that Tanishq or Titan as a company is focusing on right now? And what are the kind of new launches that the street can anticipate from the house of Titan this season?
Yeah, we're looking at different segments. The main campaign has been around Navrani, the new collection which has been launched. And this is an ode to royalty, a celebration of the Tanishq woman, who in our minds is a queen of her own. She is the queen of hearts. And this is a celebration and an ode to her, as well as the royalty. Some of the trends that we picked up early on when we were briefing this for this collection was seeing the opulence and the celebration of opulence for special occasions, be it big weddings, be it certain shows which were on OTT platforms, and also in the fashion week. Based on these cues, we picked up the fact that women are very interested in expressing herself in a elaborate manner, especially during festival and for wedding occasions. And that's how the idea of the Navrani collection got created. Our designers, of course, have had fun. We have tried to create a collection which is got that opulence, but not necessarily at very high price range. So we have launched products which are in glass kundan, and faceted glass kundan, a lot of meenakari work. So all the craftsmanship and the glamour is there, but the price points are fairly competitive. In fact, we've tried to keep the weights low, and therefore the belly of the collection is between 3 lakhs to 7 lakhs for a typical set, though the price range for a simple earring could start from 1 lakh, go all the way to up to 14 lakhs for a 150-gram set. So the other segments that we have launched are regional collections, which is for Tamil Nadu, Andhra Pradesh, Telangana, and the West Bengal markets. Those were based on more traditional motifs and traditional interpretations of traditional jewelry.
Mr. Chawla, as you told us that there's various stuff being done, and Navrani, of course, is a campaign that you're working with right now. But tell us on how many total number of new designs are you displaying this festive season?
About 2,000 new designs have been created. In a given store, you may not have all 2,000. You may have 1,000, 1,500, depending on the type of store, the size of the store. In a big store, in a mega store, as we call them, and flagship stores, you'll find possibly most of these 2,000 visible.
Mr. Chawla, also about the natural diamonds then, and we've seen prices correct. You've had a tie-up with De Beers also very recently. How is the demand trend seen in natural prices this festival season, and what are you putting out on offer for clients?
Natural diamonds have done well even in Q2. Our buyer growth in natural diamonds or diamond-studded jewelry has been in fact, slightly better than the overall buyer growth. We reported an overall buyer growth of 11% and a value growth of much higher for Q2 in the stock exchange filing. And the studded buyer growth has been, a little better than the 11% buyer growth that we reported. So, and this is across price bands, whether it is below 1 lakh or 1 to 2 lakhs or 5 lakh plus. So, the interest in natural diamonds and diamond-studded jewelry continues to be high. In fact, even for this festive season, we have brought in a lot of fresh infusion of new designs, and especially in the 1 lakh to 5 lakh range, where we feel that there was a greater need to infuse some freshness. And lots of new products have gone into the market. In fact, close to about 150 to 200 new SKUs have gone in this price range alone. And I'm not including Mia in this. Mia, if you add, it'll become even much more.
All right. Just coming back to the higher gold prices, can't take our eyes off that. How is the exchange for new jewelry doing? I mean, that is a segment that always tends to pick up even more when the gold prices are rising up. And these days, it's an all-time high almost every day. So how are the exchange numbers looking like?
Exchange continues to be a big lever for us. In fact, that's one of the ways in which we are telling customers that they don't need to shell out too much money from their pocket. During festive, there is purchase for self as well as for wedding-related purchases because offers are good. So exchange actually tracks very well and very closely with wedding purchases because the quantum of jewelry purchase is high. So we are, in fact, launched a festival. We are launching a festival of exchange program and an outreach to customers starting this weekend, wherein we are also sweetening the exchange offer as well, so that people can come in and bring in their old gold. We believe that exchange will continue to play a very big role. We already see around 40 to 43% of our sales comes through exchange jewelry, and that has continued well. Having said that, certain customers prefer to hold on to their gold and not in a way exchange because they feel gold is a good investment. But there are many customers who are very happy to see that they are seeing a fantastic return on their old gold and very happy to take back something which is very new.
Well, absolutely. Mr. Chawla, thank you so much for joining us, and we wish you happy festivities and good sales going forward as well. Well, that's about the jewelry market there, where you have new trends, higher prices, but newer designs, offers, and of course, exchange festivals as well coming in for this season. But with that, that's all the time on Halftime Report. Business Lunch will take all the action forward.
What are the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. Somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype, and the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving
Stocks stage a smart recovery after an early slide. Financials and metals are prominent gainers, even as IT and FMCG drag. Mid-cap relatively underperforms. Axis Bank gains despite slowdown in loan growth, a compression in margins and a high credit deposit ratio. As valuations stay attractive, the stock's recent underperformance adds to the move. Wipro turns in a strong show and announces a bonus issue but offers weak guidance. Infosys delivers on expectations but offers little in terms of guidance to spur optimism. LTI Mindtree falls short of revenue growth expectations.
Zomato's board will meet on October 22nd to consider fundraise plans and they will be mulling on that. The move is puzzling given that it's a big cash hoard and a likely motivation to gain operating flexibility by powering foreign holding to escape FDI restrictions, says experts. RBI asked for non-banks including Manappuram owned Ashirwad Finance and Sachin Bansal stirred Navi FinServ to stop sanctioning and disbursals of loans from October 21st. The structure follows violation of loan pricing guidelines, the Manappuram Finance stock types. Hello, good afternoon. You're watching Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at what the market is doing. Nifty has staged a very sharp recovery from the day's lowest point. Like you can see at one point of time, 24,582 levels is what it was trading at, and now at 24,582 to 24,823 is what the recovery is coming at. 0.3% of gain is what the Nifty is holding on to. When you're looking at it in terms of the top movers for the markets today, what is dragging and what is not doing well today is the IT name. So Infosys is down and out. HCL Tech, ITC, HUL and Britannia under pressure. While among the gainers, we do have the banking side. So ICICI Bank, Axis Bank, Tata Motors, as well as NTPC also is something that is doing well. Top sectoral losers is FMCG and IT under pressure today. But let's move on and talk about Wipro's numbers. They beat the estimates, but the guidance for the third quarter, that came in as a disappointment. In conversation with the company's top brass after the release of the second quarter earnings, Srini Pallia, CEO of the Indian tech giant, commented on the slowdown in Europe and how that played out in the recent earning release. Also, the CFO, Aparna Iyer, also commented on the company in terms of a step closer for the aspirational margins that they're looking at. Let's listen into what more they have to say.
We factored in the furloughs, we factored in the number of days of working in this particular quarter, and also we factored in for Europe in terms of the slowdown that we have experienced. Based on these three factors, we have kind of guided between that range. Having said that, we do have momentum across the markets, include, for example, Americas. Across sectors, we see a good pipeline. Also, APMEA, we are seeing good pipeline, and we'll continue to stay focused on executing to that.
We are one step closer, in Q2 towards that aspirational band that we had laid out of 17 to 17.5. We're very encouraged by our performance in Q2. We expanded 35 basis points. This is after absorbing 1 month of salary increase that we rolled out in September. All the levers that we've been working through the last few quarters are paying off.
Wipro managing to hold on to gains of 4%. But let's talk about a stock that slumped in trade, that's Manappuram Finance. And this is after RBI action on its subsidiary, Ashirwad MFI. Abhishek is joining in with us to give us more details on that. Abhishek?
Well, we need to begin with, RBI has taken action against select NBFCs which are especially focused on the microfinance sector. So they have directed 4 NBFCs to stop disbursals as well as sanctions of loans to customers. These 4 NBFCs include Ashirwad Microfinance, Arohan Financial Services, DMI Finance, as well as, Navi FinServ. So Ashirwad Microfinance will have to stop, sanction and disbursals of loans. It is a subsidiary of Manappuram, and that is why Manappuram is in focus and the stock is weak in trade today. Action is based out of concerns that are observed by RBI with respect to pricing policy, that is the interest rate being charged to customers. It is found to be excessive and not adhering to regulated guidelines. So NBFCs were found to be non-adherence with respect to household income as well as consideration of repayment obligation in respect of their MFI loans. So RBI has said that deviations were found also in the evergreening of loans, that is top-up of loans, conduct of gold loan portfolio, disclosure requirement with respect to interest rate that is being charged and fees that is being charged, and outsourcing of core financial services to the outsiders of these lenders as well. Back to you.
Thank you so much for that, Abhishek. But let's move on. And speaking at the CNBC-TV18 Banking Transformative Summit on August 30th, the Reserve Bank Deputy Governor Swaminathan defended the business restrictions imposed by the central bank on earning entities and said that these decisions are never taken easily, adding that the central bank's goal is to ensure financial stability and not hinder into the business operations. Listen in.
The decision to impose business restrictions is never taken easily. Strong supervisory actions are brought in only after careful on-site examinations, off-site data analysis, and extensive engagement with the regulated entities concerned for remediation, oftentimes stretching into several months. Our primary goal is to ensure the stability and integrity of the financial system and not to hinder business operations.
Let's move on. And the government has suggested significant tweaks to the RBI's draft bank dividend circular released in January and bats for value creation in bank stocks rather than high dividend payouts to shareholders. Sapna is joining you with us to tell us more details on that. Sapna?
Well, the government has sought significant tweaks to the draft circular that the Reserve Bank had brought out, to receive comments on its dividend policy for banks. On 3 to 4 aspects, the government has communicated its views. Number one, the government may not be totally in favor of the capital adequacy ratio as one of the benchmarks that RBI has suggested for dividend payouts. That's one. Second, also having a net NPA ratio up to 6% in any given financial year for a dividend to be paid. The government feels that this may be too relaxed a condition. Also, the net NPA range moving within a band of 1%. The government again thinks that this is way too relaxed. It should be a tighter band of 0.5%, for those dividend payout ratios to be worked out. So on both these two elements, these two important aspects that RBI has suggested as the benchmarks for future dividend payouts, the government has had basically differences. The third but not the last, return on assets. The government wants return on assets to be included as one of the criteria for declaration of bank dividends. And going forward, the government basically wants, value creation to be reflected in the bank stocks and not in terms of hefty payouts in the form of dividends to shareholders. So this is where the matter rests. We have not really heard anything from RBI so far on these draft norms. We'll have to wait and watch and see if the regulator comes up with something further or not.
Thank you so much for that. But on that note, we're going to take a short break. But after the break, we'll put the focus on Zomato, as Zomato's board will be meeting on October 22nd to consider a proposal for fundraise. And we'll get you exclusive details on this story. So stay tuned in.
Thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that. So Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, something which is close to my heart. Yeah, so there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Welcome back. You're tuned into Business Lunch on CNBC-TV18. Shifting focus to the aviation space, the stock of airport operator GMR Airports is lower after the Supreme Court has decided to hear the Airport Economic Regulatory Authority's plea against the airport's fixing cargo and ground handling charges. The Supreme Court, while rejecting the plea by Delhi, Mumbai and Bangalore Airport, said that the plea by the AERA is maintainable. Earlier, TD-SAT order had been held that the airport operators have flexibility in determining cargo handling charges. This order was challenged by the AERA, which had claimed power to regulate the cargo and ground handling charges. So yes, keeping an eye on GMR Airports. Let's move on. And Indian Airlines have been plagued by the spate of Hawks bomb threats, with over 30 flights being disrupted over the last 4 days. The government is looking to crack down the Hawks threats, and sources tell CNBC-TV18 that the Aviation Ministry is considering strict norms for the perpetrators, which may include placing them on the no-fly list. The Aviation Ministry is also examining rules in other nations and exploring legal amendments to curb the Hawks threat menace. Let's move on. And in an exclusive conversation with Shrimban, British Airways CEO Sean Doyle says airlines should take appropriate action in situations like this. Listen in.
Indian aviation companies today and the regulator and the government is dealing with. In the last 4 days, we've had a situation of 20 plus hoax threats, bomb threats, which have not turned out to be, fortunately, true. But you've had them disrupt airline schedules. You've had them disrupt customer, travel plans. And it's a huge economic cost to an airline as well. Now, how do you deal with this at BA? I mean, how often is this an issue for you?
I think we've well-established protocols, not just at BA, but internationally with airports to deal with these kind of threats. And there is a kind of an assessment you do to understand whether it's a threat that, leads to the grounding of an aircraft or whether it's not something that's credible. I can't really comment on Air India's situation other than I think, airlines have to take the appropriate action that they feel is the right thing to do, and I would support whatever decision they take.
But is the threat assessment done at the airline level, or is it done in conjunction with the regulator as well as the
airport
security
and the
agencies?
airline and the security agencies will be, very much involved And we use all of the assets that are at our disposal to make the assessments.
And is there an escalation that you've seen in this sort of a threat?
I haven't seen something on this scale in quite a while, but I couldn't really comment on, the specific issues here because I'm not close to it. But other than we've well-established protocols that we enact to make sure that, we stay safe.
Okay, on that note, we're going to slip into a very short break. When we return, we'll talk about Israel because it has confirmed it eliminated the Hamas chief who was the mastermind behind the October 7th attacks. More on this news after the break.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards. Investing.
Welcome back to Business Lunch on CNBC TV18. Let's focus and talk about Zomato. The company's board will be meeting on 22nd of October. They will be mulling a fundraise via QIP. Sources tell CNBC TV18 that the company is likely to approve the fundraise of around 8,500 crore rupees. to cap the FII holdings at 49% and raise domestic holdings above 50% in order to gain the operating flexibility by parting foreign holding to escape the FDI restrictions. Earlier, we also spoke to Anil Talreja of Deloitte and Moin Ladda of Khaitan & Co. to learn more about what would it mean for the company. So let's listen in to what they had to say.
Well, from a sector point of view, I think the challenge always was the FDI restrictions, as rightly mentioned by Shireen. I think what is important is there is some amount of clarity insofar as the regulations are concerned. I think that's one thing which is behind our back, because that was also a concern. Multi-brand, single brand, I think what can do, who can do, all that is sorted. And I think the sector overall has been growing pretty well. So if you look at FY23, our e-commerce sector was actually valued at almost $80 billion. So there's been an increased amount of growth.
The moment you cross that control to foreign investors, then any downstream transactions you do or any future growth transactions you do, that also is subject to the same restrictions of foreign direct investment. On the other hand, if you're Indian owned and controlled, then whatever downstream transactions you do, which is like when you're buying any subsidiaries or other businesses under you, that's not subject to the FDI restrictions. So really, this limit gives flexibility to a company to be able to then explore sectors which may have greater, FDI restrictions or FDI regulations, because then you're treated as if you're doing investment as an Indian. The moment you pass the control to foreign investors, that flexibility goes away.
And moving on to updates in the ongoing war in West Asia, Israeli Prime Minister Benjamin Netanyahu announced that Israeli forces in Gaza have killed Hamas leader Yahya Sinwar and the architect of the October terrorist attacks. The last year, according to the IDF spokesperson, Israeli forces identified 3 Hamas militants moving from house to house yesterday when Sinwar fled into the building on his own. The military sent in a drone that identified a masked man with a wounded hand who has been identified as Sinwar. A video from the drone released by the IDF shows a man sitting in a destroyed building, his face covered with a cloth, possibly to hide his identity. And as we wrap up on the this edition of Business Lunch, here's a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers, industry leaders, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be a part of the conversation that is shaping up the future of business and innovation. Reserve your stop today.
Leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and
influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody's
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me is Ekta Batra. Well, recovery, that definitely is the theme today. We've seen a sharp recovery across the indices. Nifty is above the 24,800 mark right now. And we've seen a 100-point uptick on the Nifty. Midcap's doing well as well. And it's really the Bank Nifty which is firing away today, Ekta.
Hi, Sonal. Yes, absolutely. And courtesy Axis Bank, the kind of move that we've seen for Axis Bank is really what has fired up the market. So despite that poor set of numbers, I think the street really likes, at least it was better than what the street had anticipated. And separately, the asset quality didn't look too bad on a sequential basis. But besides that, we do have Wipro, which is outperforming. So it's up around 4%. We have some amount of buying coming in for Tata Motors and Eicher Motors and ICICI Bank, which is the other one which is doing well today.
Okay, so we'd start the show with the top headlines, then a lot lined up on the show as well. Stocks stage a smart recovery after an early slide. Financials and metals are prominent gainers, even as IT and FMCG drag. Mid-caps relatively underperform.
Manappuram Finance nosedives in trade after the Reserve Bank asks the bank subsidiary Asirvad MFI to stop the sanction and dispersal of loans on concerns over pricing policy and other practices.
CNBC-TV18 Newsbreak has confirmed the APM gas allocation to city gas distributors has been cut by 20%. CGD companies Gujarat Gas, IGL and MGL say that this move will impact profitability. Jeffrey says a sector derating is likely.
Real estate developer Prestige Estates is under pressure as the company's pre-sales see significant drop in Q2, while sales volume also declines by over 50% year-on-year. Management says upcoming launches are poised to scale up the performance.
Ajmera Realty is gaining in trade today as company allots shares worth 225 crore rupees at an issue price of 711 rupees a share on preferential basis.
Okay. Okay, well, that's the update in terms of the headlines of the market. Well, it's definitely a very active day today, especially for the Bank Nifty. But separately, we have the mid-cap index, which has managed to recover. As of now, the advanced decline ratio still is on the declining side. So 1,800 stocks advancing to over 2,000 stocks, which are declining on the Bombay Stock Exchange. Let's see whether there's any kind of improvement as the day goes on. But let's focus on our segment mid-cap movers. We have with us Vamakshi to take us through the mid-caps that are moving around in trade. Vamakshi, over to you.
Well, absolutely, Ekta. Several notable movers in the trading session today. The mid-cap index, as you can see, has recovered from the day's low and is now close to the day's highest point. Let's first look at some of the top gainers. Well, we have on our radar Mazgaon Dock. That stock is up 9%. Anand Rathi, which recently reported numbers, is continuing that up move, up nearly 5%. Motilal Oswal as well as Tejas Networks are some other stocks that are surging over 6%. But apart from that, there are some losers as well. Let's look at IGL as well as MGL. A news flow out here, and given that news flow, we have both of these counters trading nearly over 10% lower. Timken India is the next big one, now down nearly 4%, and Manappuram Finance is also reeling under tremendous pressure, down nearly 13%. Lots of stocks reacting to their numbers as well. We have Quick Heal that is reacting to its weak set of numbers, down nearly 6%. Elecon, 5 Paisa, Tanla Platforms are some other counters that are declining after the companies release their earnings. But CEAT, on the other hand, that's the stock that is moving up in trade after declaring its results. There are several volume-led moves as well. DOMS is gaining on the back of very strong volumes. BEML as well as Havells are some of the other names.
Okay, all right. Thank you so much for joining in with those names. So I'm actually some interesting ones there which have been seeing a big move on either of the sides. Let's talk about some more individual names which are doing well in trade today. We spoke about AB Real Estate yesterday. There was a Nomura initiating coverage. The stock is up another 3.5% right now, and that is a stock which has continued to do well. It's already up around 2 times in last 2 years, and another 3% added on there. Anand Rathi is one of them, up 5%. We do have CEAT after it reported numbers. That stock is up 3%. SRF is up 3%. Remember, there was a downgrade that came by yesterday, but today the stock is up around 2.5%. So across the board, we're seeing some major moves coming in the mid-cap index. Ajmeera Realty, the preferential issue, is something that the street seems to like, so 5% higher there. And you know, it's the mid-caps where the advanced decline ratio is still in favor of the declines as we speak. But individual movers, we are seeing big moves there.
Yes, absolutely. Well, that's what's taking place in terms of the markets now. But let's concentrate on one particular stock. LTI Mindtree is down 4% in trade on the back of their Q2 numbers. The company's revenue growth has fallen short of street expectations. Our colleague Reema Tendulkar spoke to Nachiket Deshpande, the COO of LTI Mindtree, began by asking him on the outlook for Q3 and the near term.
We will expect a moderation in the growth. We basically, as we called out, our business growth momentum will continue. We're confident of that momentum continuing in Q3 as well. It just would get a little bit moderated because of furloughs and fewer billing days.
But apart from furloughs and fewer billing days, are there any other sectors, geographies where there are some warning signs, some weakness?
No. We're actually seeing the momentum continuing in Q3 as well.
Okay, fair enough. The annual wage hike gets rolled out in Q3 and Q4, and you have quantified that it will impact your margins by 200 basis points. So what are the exit margins looking like for LTI Mindtree?
So we don't give the guidance on margin, but typically you would see that in the quarter that we roll out the wage hikes, the full impact will come in that quarter. It will get offsetted with continued operational efficiencies and the initiatives that we continue to run. So there will be some recovery of that margin in quarter, and the subsequent quarter we will be able to recover a higher portion of that. It's the usual cycle that continues. So we don't guide for margin, but you'll see the wage impact will be probably the highest in Q3, and its impact will reduce in Q4 as we are able to recover a little bit more.
Healthcare and BFS delivered very strong growth for you. Healthcare at 5.9%, BFS at 4%. Will the momentum continue? Are we likely to see a sustainability of these kind of growth rates?
On BFS, we are confident because our growth in BFS was very broad-based. It did not come from few accounts, but it come, top 10 or 15 of our BFS accounts shown good signs of growth, and hence we're confident that momentum will continue in the Q3 as well. On the healthcare side, if you see our numbers, it includes healthcare, life sciences, and public services. So we had a little bit more growth on the public services side, but which was also very deal specific. So it isn't broad based. So we wouldn't look at the similar growth rates in Q3 for that portfolio.
You've also called out softness in a few travel and tech clients, particularly clients who are dependent on Boeing for delivery, where you are seeing softness. How much did that hurt your revenues in Q2, and how long will this weakness last?
So within our consumer portfolio, it is sort of the broad industries as part of that. Within that, the travel and travel tech companies, especially customers in the US, they continue to have a significant challenges in keeping up with their revenue profile because the deliveries are delayed for them. And we expect that softness to continue for a few more quarters till they see the upside. But our hospitality portfolio has grown very well. And within that portfolio, we also have real estate services. Now that, given the mortgage rate related issues, they continue to see some softness with rate reductions happening in the US. Hopefully that sector will start to see some turnaround in the subsequent quarters.
What's the contribution purely of travel and travel tech to your overall revenues?
We don't separately call that out as an individual sector, but it's part of our overall consumer business.
Are you confident that you will be able to end the year with top quartile revenue growth as you've seen in the past?
I think the aim is to continue the business momentum. Rima, the top quartile, whether we achieve at the end of the year or not, also will depend upon how the overall sector does. But we're confident that the momentum that we've seen in these 2 quarters, we should be able to carry that into Q3, Q4 as well.
Okay, 6.5% cut on LTI Mindtree. That's the management commentary. But for now, we'll slip into a short break. When we come back, we'll be joined by the management of Keystone Realtors. We'll discuss their Q2 business update on the other side. Stay tuned for that.
They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype, and the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, in the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So and Kailash gets really excited with the foundation. I'm also investing.
Welcome back. You're still tuned in to Mid-Cap Radar. It's a good time to get some corporate conversation going. Let's welcome Baman Rastam Irani, the CMD of Keystone Realtors, to discuss their Q2 FY25 update, which was good this time around. Their pre-sales were up 129% on a YOY basis. Sequentially, it was higher as well. The area sold as well was up 184% on a YOY basis, 89% on a sequential basis. Mr. Irani, good afternoon. Thank you so much for joining in. Well, it's been a good show in Q2, and this is at a time when the industry otherwise has seen a quarter-on-quarter and in a YOY decline as well. Can you tell us which are the projects which led to this growth? How much came in from the Thane project? Any new launches that contributed this time?
So thank you for having me on the show. And yes, you're right. We've more than doubled our pre-sales over last year as of right now. And we've done about 700 crores of sales in this year. At the same point of time, if you look at our half year, we're well above our guidance, and that's exactly what we're happy with. We're coming into a fantastic quarter now, and we expect the sales to be bumper in this quarter as well as in the last quarter of the year, which is the cyclical nature of our business. We're doing extremely well. We've launched 3 new projects in this quarter, and more importantly, we've launched our plotted developments, which are actually a higher ROE projects that we are taking on. And we've already guided that we will be growing our plotted developments as well, because we believe that the markets are totally ready for branded developers to be able to give plotted developments in the city, because land has always been something that people have wanted to invest in, and our project in Kasara is seeing a great amount of interest.
Okay. All right, Mr. Irani, thanks very much for joining in. Well, you're sounding extremely bullish in terms of future sales, but I just wanted to understand what the on-ground situation is, because in the past couple of days, we've heard that, two-wheeler sales might not be as robust as anticipated in the festive season. There's a slowdown in terms of purchases or, in terms of customer sentiment when it comes to companies such as Nestle as well. And obviously, the pre-sales haven't been as robust for all real estate companies. So are there any chinks in the armor which are showing now when it comes to demand, which you might be concerned about?
We will have to watch and see, but as of right now, with Diwali around the corner, we've seen a great amount of interest during Dasara. With Diwali around the corner, we are actually gearing up to boost the sales in this quarter. And as a matter of fact, I don't think what you're saying would apply to us, primarily because pre-sales have been extremely strong, and even the customer interest, the walk-ins that we've seen in the last quarter and even in this quarter right now, with our launch coming up, we are seeing great amount of traction on ground, and our teams are absolutely I would like to say, totally charged up to be able to take care of the sales that is going to take place. But yes, I've been reading the reports about the pre-sales of the two-wheeler industry, and I can only say this, that they were at all-time highs, and even if they had to kind of mellow down a bit, it must have been because of Shraddh period earlier. But during Diwali, I'm certain that we will again see a great amount of growth taking place.
Sure, but isn't that the case for the real estate space as well? But
No,
nonetheless,
real estate obviously is classified, like I told you, Mumbai is only 9 markets in one. And if you look at the way we are poised, we are in the higher end projects that we've launched in Warsaw is seeing a great amount of buying interest. Our project in Polycab is seeing a great amount of buying interest. The project that we are nearly completing in Prabhadevi is seeing a great amount of buying interest. And maybe it is this consumer base that is doing extremely well. I'm also pleased to say that Thane, where we had the launch in this last quarter, we saw a sizable amount of sale take place, and we are not seeing this happen to our projects as of right now, is all I can say.
Okay, so Mr. Irani, you spoke about Thane project seeing good response. How much of that project is sold, and do you think the entire project will be sold this year itself? And what's the launch pipeline looking like? Will you look at other markets? You're primarily in the MMR market, looking at redevelopment projects. Do you think any other geography interests you as well?
You've asked me so many questions, and I'm happy to answer them all. So start off with Thane sales. Look, I don't think we'll sell off the entire thing in 1 year. That is never our plan. Like we've guided in the past, once we launch a project, we usually sell about 35% of the stock in the first 6 months, which is what more or less our numbers are showing that we've done. After that, it's a sustained sale of about 40% through the life of the project. And these projects are about 3.5 years because they're high rises. And then about 20% of the sales we try and keep closer to the date of completion, and then finally on completion itself. But I want to state out here that, at Rustomji, the brand aura and our on-ground research has been so strong that once a project is launched, we've always seen success in it. And with these launches that have taken place, I'd like to give it an example of a rocket that is, already been put into space, and we are definitely on the orbit of success as of right now.
Okay. Give us a sense in terms of the festive season sales. I'm sure there might be an uptake if you could compare it on a year-on-year basis in terms of the trends that you're seeing, Mr. Irani. And also on pricing, how much pricing power do you have on your projects now?
So let's start with your last question. I'm not someone who believes in or even desires to get the highest price. We are all about business plans because, we are an organized company. We really need to see volume in terms of sales. And towards that, your second question, what do I see as an uptake in this particular season of Diwali? The buying interest is huge. Pre-walk-ins have been extremely good. Consumers are, walking towards and trying to get a quick buy into our Verdant Vistas, which is a luxury project that we have launched in Thane, where larger apartments having Verdant Vistas being the kind of views that we have out there, and with the first time on many of the features that are being provided into buildings. So we are seeing a great amount of buy out there. I would say that this Diwali we will see an uptake of more than about 15% over at least the last Diwali also.
Okay. So, since I asked you so many questions, I think you missed the part where I said, what are the launches looking like in the second half? Because you spoke about bumper second half expected. And does that indicate that you'll be able to actually cross your pre-sales guidance of 3,000 crore rupees that you had given us earlier?
So fingers crossed on that one, but yes, we've already launched 5 of the 8 projects that we had guided for the year. We had said 2 projects per quarter. We had already launched 5 projects in the first half year. So yes, we are well online for that. And new projects always bring a new amount of buying power or rather selling power to our sales teams. And I'd like to say again out here that plotted developments and luxury outside of the immediate city itself is something that we are looking at that will boost our ROEs hugely. And we've seen great amount of sales take place in Kasara, and we are looking at more lands in that in the plotted development kind of portion that we will do.
All right, Mr. Irani, always a pleasure. Thanks very much for joining in and speaking with us and giving us your perspective and talking about the Q2 update. Well, that's on Keystone Realtors. That stock, in fact, is up around 2.5% for the week. It's rallied around 13% this year. We'll take a short break, but as we do that, a small programming note as we slip into that break. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18's Market Movers Forum, 3 p.m. onwards on the 24th of October, featuring guests like Ramdev Agrawal, S. Narain, Nilesh Shah and others to help your portfolio prosper this Diwali.
Yahya Sinwar is dead. He was killed in Rafah by the brave soldiers of the Israel Defense Forces. While this is not the end of the war in Gaza, it's the beginning of the end. To the people of Gaza, I have a simple message. This war can end tomorrow. It can end if Hamas lays down its arms and returns our hostages. Hamas is holding 101 hostages in Gaza, who are citizens of 23 countries, citizens of Israel, but citizens of many other countries. Israel is committed to doing everything in our power to bring all of them home. And Israel will guarantee the safety of all those who return our hostages. To those who would harm our hostages, I have another message. Israel will hunt you down and bring you to justice.
Welcome back. Well, complete turnaround for the markets at this point in time. We have the Nifty, Mid-Cap Index, Bank Nifty, as well as the Sensex, all four of these indices which are trading in the green as we speak. We have the Bank Nifty, which is at the high point of the day, and the Mid-Cap Index, which is rallied around 187 odd points. The advance decline ratio, let's see whether there's any kind of improvement by the time we close trade. That's all the time that we have on Mid-Cap Radar. Your stocks once we're back.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI.
A very good afternoon and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Like we've been pointing out, there's been a recovery which has taken place in terms of the markets. We have the mid-cap index which is at the high point of the day and the bank Nifty, which is the reason why you've seen the kind of rally that you have today. So we have the likes of Axis Bank, which is really led from the front. So Axis Bank is the top gain on the Nifty. It's up around 6% but separately, besides that, we have ICICI Bank, which is due to release its numbers, up around 2.5% as well. So there's buying across the board. HDFC Bank up around 1% and a couple of others seeing good amount of buying. HDFC Life, for example, has rallied around 2.6% this week, is up and about in today's trading session. Hi, Vinny.
Hi, Ekta. Good afternoon. Yes, surely turning out to be a good afternoon today. At least by the end of the week, we're seeing some green on the screen. So yes, keeping an eye on that, mid-small cap also have started performing well, recovered from the day's lowest point. Only red coming in is from the IT and the FMCG side. So some of these big IT names is what we're keeping an eye on. Infosys is under pressure. HCL Tech, keep an eye on that. And HUL, Britannia, among the FMCG names, which are seeing some bit of a pressure and some bit of a red today, and that's bringing down in terms of subduedness for the FMCG pack. But on that note, let's get started with all your stock-related queries today, and we have our experts for today. We have Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, head of technical research at Prabhudas Leeladhar, joining in with us this afternoon. Very good afternoon to both of you all as well, and I'm going to start with the first query for today. We have Deanshu who's writing to us from Pune. He's holding 750 shares of M&M Financials at a price of around 325 rupees per share, making some loss over here right now. He wants to know whether he should book his losses or continue to stay invested. Shaina, I'm going to come to you for this one. What's the word on M&M Financials?
Well, I think the first quarter was a bit disappointing when we saw the numbers, and I think the softness is likely to continue into the rest of the year. Basically, even RBI is, coming in with a lot of strict norms for NBFCs, especially for unsecured loans. So to that extent, there will be some impact on M&M. Also, tractor sales, as we're seeing lately, there has been some bit of softness. So to that extent, and the valuations of M&M Finance are, in my view, a bit stretched compared to its peer group. So I would prefer that, the investor moves on to some maybe direct bank. You could look at something like HDFC Bank, ICICI Bank, even some of the mid-cap banks. I would prefer that to NBFCs for the current couple of months.
Okay, fair enough. But what's your thoughts, Vaishali, in terms of the technicals for M&M Financial? It's not done much in the past year odd.
Yes, hi, good afternoon all. So I would say, actually, technically speaking, M&M Finance has corrected quite a bit, right from 340 to now at 290 levels. And currently, it is at a very crucial support, taking support at 200-day moving average. And when I'm looking at the weekly chart, I don't think there is anything to worry for now. Because I guess once this support is respected, there could be a bounce back. So I think not in a hurry. If one needs to exit, at least exit for a bounce coming up to 320. And from there on, we can have a relook. If it retesting 340 levels, I think it's ready for a takeoff for higher targets. So I would say at least wait for a bounce and then let's decide.
Okay, all right. Wait for a bounce and then decide. As you can see, the stock has not done much in the past 6 to 12 months, just about higher by around 1 to 2%. But we do have Mohit, who now writes to us from New Delhi. He holds 30 shares of ITC, which he's bought at around 260 odd. So he's sitting on a good profit on that one. He's asking if he can buy more shares. Shaina, what would your opinion be on the fundamentals? Do you think, numbers are around the corner? So what would you suggest from that perspective?
Yeah, after a nice rally, we've seen a bit of correction, profit booking that we've seen in ITC. The numbers I expect to be quite okay. Even first quarter numbers were okay. 6% growth in volumes, 6% growth overall with in cigarette business, with 50% coming from volumes, 50% from average realizations. I think that could continue on. FMCG also should do a little bit better in the current year with demand picking up. The best, I think, part of the next quarter I would see is the hotel demerger. It is likely to take place. So an investor, in my view, can add at current levels and hold for maybe, price target of 550, or at least hold till the demerger happens.
Okay, that's the view on ITC from China. But Vaishali, what's your view on the technicals? I remember that at one point of time, we used to see ITC locked in that range of 200 to 300. Then it moved past that very quickly when it started going up. And now again, in the last 1 year, that 400 to 500 range is where it's managing to hold on to. Nothing above that. What are this technical indicating in terms for ITC?
I agree. This is not a trader's favorite stock, but to those who are ready to hold for long term, it is a very good stock. And currently, it has again come close to the previous support of 460 levels. Today's low was also 470. So I would say this makes a very good buying opportunity because long-term trend also, if we see, is very much intact. And this dip, I would say it's a good support that one can consider buying more.
Dip is something that someone can consider buying more at. But let's move on to the next query. We have Rupa Ganguly who's writing to us from Mumbai. She holds 20 shares of Ola Electric at a price of around 80 rupees per share. Wants to know the future prospect for her investments, considering the recent complaints that have been coming in against the two-wheeler Ola Electric issues have been going, as well as we've seen the stock also underperform, post its listing that we're seeing. Shaina, what's the word on Ola Electric? What should the viewer be doing now?
Well, yeah, a lot of negative sentiment has sort of, hit the stock, and we've seen a lot of correction happen post the listing. I wish, Ola Electric had sort of focused on customer satisfaction and, put in place its customer centers, service centers before this whole thing sort of unwound. The negative news has, sort of hit the market. At the same time, I think they have announced that they have got plans of setting up over 1,000 centers, service centers across India. And they are going to use the money that they raised from the IPO for both research and development, the new batteries. I think there's a lot of competition that will be there and also come in future. But at the same time, given that its market share in the electric scooter business is, major market share, it's got more than 35% or around 35%. I would say that a long-term investor can remain invested for the longer term.
Okay, all right. Well, Vaishali, not much in terms of the technicals that you can share with us on Ola Electric. But from the auto space, what would you recommend, considering that we've seen a correction in the likes of Bajaj Auto, which was quite steep this week?
So I would say still, I would focus on Tata Motors, which is technically very well corrected and a very good support level. I would also look at Mahindra and Mahindra for now. So let's see, I think too early. Today is the first day that we are witnessing a bounce. So, but currently in today's market scenario, these two stocks look quite favorable.
Okay, all right. Well, now we have Pankaj, who writes to us from Chandigarh. He holds 40 shares of HDFC Life, which he's bought at around 500 odd rupees. He wants to know if he should remain invested or not in HDFC Life. So currently he's sitting on a good profit when it comes to that particular stock. Well, in terms of Shaina, in terms of the numbers, it was a robust set of numbers. The net profit was up around 15% on a year-on-year basis. What's your recommendation for HDFC Life? Is it a stock that one would hold on to?
Well, if you saw, yeah, I agree with that. At the same time, you saw margins were lower than what the overall market expected. There was a 200 basis point lower margins that came and lower than what was expected. And what I believe is that while the growth remains robust, the management commentary remains robust going forward. In terms of pure valuation, if I compare it with its peer group, let's say like SBI Life, it is much more expensive. So and especially the insurance sector in the shorter term, I would say over the next 2-3 quarters, is going to see some bit of softness because we've had certain policies that have come in place for surrender value as well as taxation. Some impact is going to be there on growth overall compared to the previous years. So what I would believe is that, if you want to be in the segment in insurance as of now, then I would say SBI Life looks more attractive because of the pure valuation. And also I would say that if you don't want to be in the insurance segment, then, pure banks, even HDFC, AMC, or some of the other private sector banks look interesting at current levels.
Okay. That's a word coming in there from Shaina on HDFC Life. But Vaishali, what's your view on HDFC Life?
Well, I would have a bit of a different view because, technically, in spite of all the choppiness, this stock is holding very strong. So that implies some inherent strength that this is holding on very well. So chartically speaking, right now, I feel the trend is very much intact. I was also looking at the weekly chart. We still have upside projections of say around 900, 850 to 900 from here on. The highest high the stock has witnessed is 770, 780. So if not for higher targets, at least till 770 one can hold on, and then we can have a relook. So for now, it is definitely a positive stock.
Okay, a positive stock. Well, for the markets, it's holding up very well. Just to put it into perspective, there will be a lot of banks that will be reporting their numbers in the next couple of days. So we do have Kotak, which will be reporting along with HDFC Bank tomorrow. So that'll be reacting on Monday. But down the week, next week, we do have ICICI Bank, which will be reporting numbers as well. So I think that'll be important to watch out for. It'll be the other corporate bank, which generally moves in tandem with what Axis reports or the other one reports. So let's see what takes place in the banking space. We'll take a short break. We'll answer more queries on the other side. Stay tuned.
Let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business, as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype. And the moment there are financial incentives attached to anything, AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is absolutely insane amounts of hype, not just India, globally. But beneath the hype, lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with. We have one small little open source AI system running on one server.
You're the big open source guy, right? The big
Only
believer.
Open source.
Only open source, yeah.
So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it, tool out of it in no time. So it's commoditized to death already. And it's only been 3 years, the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, So, and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, like, something which is close to my heart.
Welcome back to Your Stocks on CNBC-TV18. We still have with us our experts for today, Vaishali Parekh as well as Shaina Mukaddam, who will continue solving all your stock-related queries. Let's move on to the next query that we have today, and that is from K. Sachin, who's writing to us from Hyderabad. He holds 2,500 shares of Yes Bank at an average price of 43.9 rupees per share. He wants to know whether he should continue to hold this or book his losses. Currently, Yes Bank is trading at around 21 rupees per share. And if he has to book his losses, where should he invest the amount in? Shaina, what's your view on Yes Bank?
I would say he can average at current levels. Reasoning being that the valuations are pretty attractive. In terms of price to book, it's about 1.6. If you look at the performance fundamentally of the bank, if you compare it to 1 year prior, net NPAs have come down to 0.5. It was almost 1 a year back. You have CASA improving. It's almost about 32%. So I think fundamentally, both in terms of loan growth, deposit growth, fundamentals are strong. Balance sheet is also improved. And the kicker would be, the M&A activity that happens, because the bank is looking to offload something like 51% of its stake at a higher valuation. They're talking of $8 to $9 billion. So I would say, it's not without its risks for the longer term, but I would say that you can hold it for now and average.
Okay, all right. And technically, how you place Vaishali on it?
So technically, I would say that yes, it has corrected so much and in deep oversold. So for a bounce back, yes, it is a good buying opportunity. But I would have a different view, because I would say that rather get into a bank which shows clarity, confirmation. So right now what I'm looking at is SBI Bank, even Axis post its results and technically very well placed. These are quite sure to give us a good return from here on, considering the overall banking scenario. So yes, I would always say maybe for a trading bet, Yes Bank can be considered. But I think for a conviction trade, these could be the better ones.
Okay, all right. Well, we now have Sushil Kamble, who is on the line from Mumbai. He has investments in Latent View Analytics. Sushil, hi. What is your query?
Yeah, hi. I'm holding the Latent View shares and Zomato software shares, both in Latent View 4000 and Zomato software 1800 quantity.
Nucleus software?
No, Sonata software.
Sonata. Okay.
Yeah. Okay. I would like to know. I can hold them for 6 months. So, I need expert opinion on this.
Okay, all right. Well, let's start with you, Shaina. What would your view be on the fundamentals of both Sonata software, if you look at that stock as well as Latent View?
Of the two, I think Sonata looks better at current levels. Latent, the balance sheet is very strong. But if you look at the time from since it's, the IPO came about, I think 3 years back, the stock has really not given you any return. And in my view, while the balance sheet is strong because of the funds they raised, even if you look at the remaining couple of quarters or maybe a year, shorter term, the valuations are so expensive that I believe that further time correction is likely to, take place, and the stock may continue consolidating at current levels for some more time. Look at the valuations. It's 30 times turnover and it's 50 times EV by EBITDA 1 year forward. So I think for the next 1 year, it will continue to consolidate. Not to say that it's not a good stock. Only thing, I think everything is there in the numbers, the valuations.
Okay, that's a view from Shaina. But on the technicals, Vaishali, Latent View and Sonata software, what are you making of it? Any of them looking interesting? What should the viewer be doing right now? Continue to hold this?
So yes, I would start with Latent View because I'm looking at the weekly chart, because since the horizon is for a longer period, I would say the stock is at pretty much a good support. But the conviction comes once the stock moves above 510, 520 levels. So that would give us a further more conviction that yes, it's ready for a further upward trajectory to go towards 550 to 580 levels. So this is how I would look at Latent View. And I think according to me, we need to wait for, and once it crosses 510, I think the person can add even more. Talking about Sonata, yes, the long-term trend is quite intact, but this stock has got a lot of hurdles at around 696, 700 levels. So I guess continue holding. Once this moves past 700, look for higher targets of 800, 850. So both are quite similarly placed in the technical front, but yes, it's a hold.
Okay, it's a hold. Well, we now have PC Achaya, who writes to us from Bangalore, holds 150 shares of Bajaj Housing Finance, which is bought at 177. Long-term investor wants to know what to do with this particular counter. Shaina, over to you on this one.
I think it's pretty expensive, despite the correction that we saw from its high. I still believe that valuations are very expensive for housing finance company compared to, its peers like a HUDCO, PNB Housing, LIC Housing. I think to that extent, those are better opportunities for the shorter term, maybe 6 months to 1 year. Those would probably give you better returns. And also the overall space has become very competitive. That is why I would be a bit reluctant to give such high price to book valuations to, Bajaj Housing, and I would suggest a switch.
Okay, a switch from Bajaj Housing. Vaishali, on the technicals, Bajaj Housing, what is your view on this? Your viewer has bought it at 177. So should they hold or sell? What are you seeing on the technicals?
Well, the data is too less and it's still continuing to be on a downward trajectory. So not much to say, but I'd rather say since it's already in an oversold, consider 130 as the support. If 130 levels break, then it is calling for further corrective move. Till then, just hold for a bounce to exit.
Okay, all right, Vaishali as well as Shaina, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective in terms of what's taking place in terms of the markets and queries that we had. Well, for the markets, it's turning out to be a great session now. We have the mid-cap index, which is up around 0.4%, and the advanced decline ratio has improved. So let's see whether there is further improvement in the next 1 hour on. The bank Nifty is really the toast of the market today. So financials are leading from the front. So up around 1.67% for the bank Nifty. IT continues to sulk. LTI, Mindtree, Infosys, both those stocks are down anywhere between 4 to even 6% at this point. ITC also showing a bit of pressure along with HUL and Nestle. So FMCG continues to be under pressure at this point in time. And that's what's taking place in the markets. We have Axis Bank, which is really holding the markets up at this point. And let's see, maybe a couple of these pharma stocks not doing too badly as well. That's all the time that we have on this show. But do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing will up next.
There also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
the Hang Seng, that's holding on to gains of almost 0.6%.
A mixed set of numbers coming in from Axis Bank, but more on the weaker side.
The Nifty open interest PCR is now fallen to 0.65.
The Nifty Bank, yesterday it had a weakish close, but that could provide a glimmer of hope.
We do have momentum across the markets, include, for example, America.
RBI has come down very harshly on some of these subsidiaries.
It's about 0.33% cut on the Nifty, 24,671.
We would beat our own guidance as far as top line is concerned.
If this trend continues, so we should be looking at a strong third quarter growth as well.
$1 billion is what Zomato board might approve the fundraising.
The Nifty is back above 24,700, having recovered nearly 150 points from the low.
You know, we're investing $7 billion in modernising British Airways, and that's well underway.
We believe it should be a good festive season, but we'll wait and watch.
We'll have to wait and watch and see if the regulator comes up with something further or not.
Well, recovery, that definitely is the theme today. We've seen a sharp recovery across the indices.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and we are looking at a very, very nice bounce from the day's lows, 300 plus points on the Nifty, and of course, much larger, 650 point bounce from the day's low for the Nifty Bank as well. So that kind of a day, holding on so far so good, and we're back at about 24,880. This is the last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good afternoon.
Hi, afternoon. Unexpectedly good, right? Yesterday you were complaining that how, we didn't get any indications that it's going to be such a down day. And today, well, things have turned around.
Well, that's right. I think the emerging markets itself have done well today because the Shanghai market as well ended with a gain of closer to 2.5%. So maybe by the end of today, the FI figure hopefully is not as large in terms of a sell number. And maybe, in fact, the net institution number as well could be mildly positive or could be flattish, just going by, the screen that we're looking at. But it's a good day.
It's a good day. By the way, in China, I think they've announced some other measures today. There are some, I think they've cut rates for second mortgages. So there is some additional stuff with the margin, but now it's become like almost every second day, something or the other, but small stuff keeps coming, and that's keeping investors interested there. Now, for the market here, for the Nifty, in the morning, we were kind of making the point that it was looking oversold. But one was still skeptical, and one could not really say, especially because of the 200-point fall out of nowhere, which we saw yesterday, whether some of these indicators would work. One which, for example, we discussed was, the Nifty open interest PCR, that's the put-call ratio, which had fallen to a level from which generally we've seen a bounce over the last couple of years. It's just one indication. You can look at the relative strength index, you could look at, the swing levels. So a combination of these factors was looking like it was too oversold, overdone in the very near term, and you've got that bounce. You've got a nice, decent bounce. Now, holding on and building on to these this bounce that we've seen, I think that is another matter entirely, which I think becomes a little more tricky. So what's the mood like? I mean, it's certainly not exuberant. But is it very pessimistic? It's not very pessimistic. It's just kind of wait and watch. Trading, of course, lots of earnings which are coming through. Just look at the reaction on earnings or news flow for that matter. 5, 10, 15% in some cases. So it's, a very large sort of day on both sides. It's not just sort of a reaction one time. Look at something like a Polycab, 7% cut, full 7% recovery. And a few others as well, which we will talk about as we go along. But for now, I think we've bounced nicely. Hopefully, we don't fall below that October level and the 20 weekly, which is about 24,650, which we did break below in the morning. And we kind of keep our head above water. So I think that's what we can hope for as we wrap out over the next 1 hour, this day and this week as well. Rima.
Though unfortunately in stocks like in Infosys, there is no recovery. Stocks are still floundering near the day's low, down close to about 4.5%. Even in names like a Manappuram Finance, that's still down 13%. City gas distribution companies, Mahanagar Gas, IGL, these stocks too are pretty much down where they were since morning. So nearly 10% gone on most of these stocks. But let's quickly run you through what's happening in the large cap screen. So on the way down, we spoke about Infosys, but outside of that, the entire FMCG pack is weak in trade. Remember, the pre-Q2 updates or even numbers from Nestle indicate weak consumer demand. Asian Paints, Britannia, Nestle, HUL, ITC. These are stocks under pressure. Tech Mahindra, which reports numbers tomorrow early in the morning, also going into its earnings a bit subdued. On the way up, Axis Bank. Axis Bank was weak going into Q2 numbers. Numbers were okay, and the stock has reacted positively. Wipro, good Q2, weak guidance, stock up 4.5%. ICICI Bank is leading from the front. HDFC Bank, which was down 1.5% in the opening, is now up close to about 0.8%. So big recovery seen in HDFC Bank. And that's one of the reasons why the Nifty Bank itself is pushing towards a 900-point rally. And auto names too have largely bounced back. So today the bounce back is led by names like an Eicher Motors, Tata Motors, but even a Bajaj Auto, which in the morning I think was down nearly 2.5%, is now pretty much flattened out, just down close to about 0.3%. But you know, the advanced decline ratio is still even steel, right? 1:1.
Well, that's right. And it's a good session, but we're not out of the woods. You know, one will have to say that because we are seeing a bit of a bounce in today's trading session. And just one quick point about pre-positioning. You know, for Axis Bank, if you saw yesterday's final tick and you saw the open interest built up in the final 90 minutes, it was massive. So there were a lot of shorts in the system. And because of the shorts in the system and nothing so negative came out of it, in fact, the numbers are pretty much okay, the stock has seen a big bounce because the shorts are scampering for cover. On Infosys, the last few sessions, the way the open interest went up, the delivery-based buying as well is what we are seeing. And these numbers are not bad. The problem is there's no big positive surprise and there's nothing really great out there. And because of that, we're seeing unwinding of position. So in both these two, it's a perfect example of pre-positioning that we're seeing on both these two stocks. The other one I'm looking at is the Nifty Bank. And at the start of today, I had made this point that if you're looking for a glimmer of hope, it could come in from the Nifty Bank. Yesterday, it ended under the 50 as well as the 100 DMA. Today, it's conquered both the 50 and the 100 DMA. And now it's very, very close. It's around 150 to around 200 points away from that 20 DMA. That comes in somewhere around the 52,400 odd mark. So we're very close to that mark. Crucial level. If the Nifty Bank can get closer to that mark, well, the bulls will feel good. And then maybe, in fact, we could see a bit of a short squeeze because as we have been mentioning, the FIs are net short on the index. In the last few minutes, we also had Hindustan Zinc's numbers that flashed for you on the screen. Looked pretty much in line on the top line on the EBITDA front as well. And the float in the market for Hindustan Zinc is only around 2.5% or thereabouts. So those numbers look quite okay. The stock hasn't done much. It's come down to around the 510 levels because the promoter entity went ahead and did some dilution a little sub those levels. So that's been in a bit of a range. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, what's your take? Would you be building shorts on this sort of a bounce, or do you think we could extend this rally a little bit more, maybe towards the 25,100 odd mark?
I think one the good thing, Nigel, good afternoon, is that we managed to climb above the 24,800 750 zone, which was an important support area. Yesterday closing was 24,750 right there. And today opening was lower, but we managed to bounce back. Now, what is the maximum which I'm looking at from this bounce back is, I think, 25,200, which is where the last two, pullbacks was sold into. So maybe around those levels can be revisited. And given the fact that we didn't break 24,800, 750, I think we're back to that range of 24,750 on the downside, about 25,200 on the upside. So the market continues to, show some resilience around the lower levels. That is a good thing. But till we cross 25,200, I'm not sure of a reversal. So we'll assume that we are going back into the range.
Any last hour strategies?
So I think on the stocks, banking names are looking good, and Canada Bank is something, which has made multiple lows around this 102 mark. So I think we'll buy that with a stop at 101.5 and look for a pullback to about 109, 110 kind of levels on the upside. The other stock is State Bank of India. That's also, getting slightly stronger. It's now trading above yesterday's high. So buy here with the stop at 810 for targets of around 845.
Okay, got that. Let's get to Axis Bank then. That's clearly the big mover of the day on the back of the Q3 performance. Abhishek joins in with the fine print and the way forward, what brokerages expect from Axis Bank going ahead.
Well, Rima, to begin with, going into the result, the stock was down 4 to 5% over the last 1 week. Hence, post 11% underperformance to Bank Nifty in the last 3 months. Citi has closed their 90 days downside short-term view on Axis Bank. So, with respect to the results, the advances growth was 11.4% YOY, one of the weakest that you are seeing in last 12 quarters. Core operating profit declined on a sequential basis by 0.4%, which is the highest decline that you are seeing in last 5 quarters. Net interest margin came in at 8-quarter low of 3.99% versus 4.05%. In this, there was a one-off of 5 basis point over there. Treasury income that aided the bottom line. It came in at 1,111 crore, which compares to about 406 crore in the previous quarter and about 100 odd crores in the same quarter last year. So, with reference to the PNL versus our poll, the NII was a miss. However, on account of treasury gains, the PAT beat our poll. Brokerages remain bullish on the stock. They say that banks used to use the one-off gains to lift the contingency provisions over there. Core revenue, however, has remained soft for them, despite the fact that they have muted business growth this time around. They expect business momentum to gain pace in H2 FY25. So, valuation multiples of price to adjusted book value of 1.6, 1.7 on a 1-year forward basis looks very attractive. So, DAM Capital, Morgan Stanley, Nomura all have a buy and overweight rating. Target price ranging from as low as 1,360 per share to as high as 1,442 per share. Back to you.
Thank you. And what about HDFC Bank and Kotak Mahindra Bank? Big day tomorrow. In the afternoon, we should get numbers from both of them.
Well, HDFC Bank has given a highlight with reference to the business momentum, which showed that CASA ratio has declined. However, LCR, that is liquidity coverage ratio, has improved for them. Their entire focus seemed on the credit deposit ratio, which they are trying to bring it down. So the key things to watch is that the net interest margin is expected to remain almost flattish on a sequential basis, especially by Kotak Securities, Morgan Stanley, as well as Citi. Remember that in the previous quarter, the net interest margin was at 3.47%. Now, slippages are expected to remain stable. Morgan Stanley estimates a slippage of 8,000 crore versus 7,900 crore in the previous quarter. So, credit cost is expected to improve on a sequential basis. Again, Morgan Stanley estimates 9 basis point decline in credit cost on a sequential basis. Asset quality is expected to remain stable or improve on a sequential basis. Management commentary with respect to how they see the business momentum going ahead will be watched very closely. Now, our poll suggests NII growth of 9.9% and PAT growth of 1.9%. On Kotak Mahindra Bank, the focus will entirely be on the business momentum, that is the deposit growth as well as the credit growth. Net interest margin can come under pressure. Morgan Stanley estimates 27 basis point decline on a YY basis and 7 basis point on a sequential basis decline in net interest margin. So, you need to watch out for the low cost deposit momentum. Last time it was around the 43.5% in Q1 FY25. Slippages and asset quality will be seen closely. Morgan Stanley estimates slippages of 1,630 crores, which compares to 1,352 crore in the previous quarter. Again, Morgan Stanley estimates credit cost, about 75 basis point, which is up by 32 basis point on a YY basis and about 15 basis point on a sequential basis. So, management commentary and outlook will be important. And another event to watch out will be the update on the RBI ban that they have on the digital as well as unsecured lending. Our poll suggests NII growth of 11% YOY and PAT growth of 10% on a YOY basis. Back to you.
Yes, I remember just last week, I think there was this buzz about the RBI ban getting lifted in the stocks. Kotak Mahindra Bank stock had done very well. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, joins in. Sudeep, would you go out there and buy Axis Bank, or what would be the pecking order? We're still awaiting numbers from the other three, even ICICI Bank, but Axis Bank?
Yeah, one can buy Axis Bank if somebody has a slightly longer time horizon. There is absolutely no problem. The numbers were pretty much in line with what the market was expecting. But if I have to put the order as you are asking, I think I will put HDFC at number 1, ICICI number 2, and Axis at number 3. That would be my pecking order. HDFC, we are very positive. I think, if you look at the valuation historically at what valuation HDFC was quoting vis-a-vis its peers and right now where it is, I think HDFC comes out as an attractive proposition. Of course, we'll have to wait and watch the numbers which they announce tomorrow. Same is the case for ICICI. But as far as ICICI is concerned, they have consistently, beating analyst estimate quarter on quarter for a very long time. We can expect them to continue to do very well. I think that's one business which is in a pretty solid momentum. We have to watch as far as the deposit mobilization numbers, as well as the credit growth numbers, and also the management commentary for both HDFC as well as ICICI Bank. But, if I'm looking at a long term, I think my pecking order will be HDFC, ICICI, and then Axis.
Fair enough. Let's talk about IT now. You're seeing some big moves in IT names. So on the way up, it's Wipro, and on the way down, it's Infosys and LTI Mindtree. In fact, LTI Mindtree has also turned negative now on a year-to-date basis. With a 6.5% fall, LTI Mindtree is down in 2024. So it's given up all its gains. So it's a big laggard. Now coming to Wipro. Now Q2 was strong. The company reported a revenue beat. Margins expanded. They could absorb the wage hike impact. Their deal wins were the highest that we've seen in the last 10 quarters, at least the large deal wins. There was a bonus issue. So the street liked all that. And they're looking past the dismal Q3 guidance. Also bear in mind that Wipro is the cheapest amongst the large cap peers, trading at 23 times forward multiple, whereas in Infy, even after the correction, is closer to 26 times. And plus, since the rally began in June, Wipro has lagged a bit compared to peers like in Infosys and HCL Tech. So that's the reason why Wipro is doing very well. Infosys, the numbers were fine, absolutely fine. The Q3, the full year guidance was also in line. The stock is just retreating after running up. So since June, considering the stock had gone up nearly 40%, there's just some profits being taken off Infosys. But other than that, brokerages continue to remain bullish on Infosys. They believe the stock is best placed to ride the discretionary spending uptick. And in all the numbers, we've seen a recovery in BFSI, and the management sounding optimistic that the BFSI recovery will continue. So the brokerage view is that Infy is best placed to ride that, and therefore they would use the correction to buy. But today, after a 40% rally from June, you've seen the stock retreat a bit. Now, LTI Mindtree is where you are seeing a bigger correction. The stock is down nearly 6.5%. Here again, the street was bullish because they get 35% of their revenues from BFSI. So the hope was that things, would show an uptick. But this quarter, revenue growth was lower than what they did in Q1. That's point number one, and even lower than what they had, what the street was anticipating. So there was a miss on the company's top line, even as margin performance was fairly strong. The company did guide in their interview with us that in Q3, growth rate will moderate, largely on account of furloughs and lower working days. But the BFSI momentum is still very much intact. Sudeep, so the question is that now you're not going to get any more big Qs for the next 3 months, right? We've got all the big numbers. Now you're getting into that slower quarter. So for the next 3 months, how do you expect IT stocks to, pan out after the kind of rally that we've already seen?
I think one thing is pretty certain that BFSI has got a tailwind behind it. And companies having a skew or having a significant part of the business coming from BFSI will definitely benefit. We have seen that getting played out in Infosys, to an extent in Infy as well. At some point of time, it's bound to play out in LTI Mindtree as well. So I think this is one theme which I think will work for medium to long term. As far as Wipro is concerned, I think, the new management, Mr. Palia, he has, tried to err on the side of caution. So the guidance he gave was pretty conservative, and market probably didn't like that too much. So there was a bit of a correction post the result announcement, but the results were better, and I think things are picking up now. And I strongly believe that the guidance was really conservative. So overall, I think if I have to look at, again, a pecking order here, I would put amongst the large IT companies, Infosys on the top spot. I think they are best positioned to benefit out of the discretionary spending, BFSI spending increasing. I will probably put Wipro at number 2 at this stage. That doesn't take away anything from TCS or HCL Tech. But today, sheerly based on the valuations and where they are, I think my pecking order will be Infosys and Wipro.
Okay, got that. Sudeep, just a few days ago, we had discussed Nalco, and I remember we were talking about how alumina prices have been very, very strong, and that's what's going to hold Nalco in good stead. But for today, let's focus on Hindalco. It's buzzing today as Crown Holdings, who is one of Novelis's top customers, delivered their results. Now, in the past quarter, Crown has delivered 5% growth in global beverage can shipments. And as per Crown, the Brazil, Mexico, Europe and USA, all of them recorded growth of more than 5% or even more. Now, Crown Holdings' result is a positive read-through for Novelis. Remember, Novelis's Q2 numbers, well, it could be affected by the floods in Switzerland. The management has already guided that they could be hit by close to around $30 million net impact. But things can start building up for the second half of the year. That's because the UBC, or the used beverage can or scrap spreads, that has started recovering. That, in fact, is up close to around 20% in the past 2 months. It's roughly around $800 per ton. So for Q2, Novelis's EBITDA per ton could be around that $500 per ton. But it could recover to $525 per ton in Q3. And in Q4, it could further recover to around $550 per ton in Q4. So Crown Holdings, those numbers were good. It's a positive read-through for Novelis. Hopefully, the offtake is good. And because the spreads are expanding as well, Novelis could be anticipating a better recovery from Novelis in the second half of the year. Sudeep, what's your view? Metals on the whole itself have seen a big bounce today. But one of the factors that are helping Hindalco could be this. Your view on the aluminium pack, Hindalco, Nalco or Vedanta? What's the pecking order?
Nigel, I think I've been bullish. Last time when we discussed, I said I'm positive on the entire aluminium value chain, which includes Nalco, Hindalco, as well as Vedanta amongst the larger listed players. Now, specifically on Hindalco, if we have to talk, I think we have to realize one fact that globally, in multiple industries across the spectrum, I think use of aluminium is increasing in one form or the other. Whether we look at the transition from IC to EV, and the massive change in the weightage, massive change in the weightage as far as aluminium is concerned. Look at the modern gadgets. Look at the modern, the drinks. You're talking about beverage cans. Pretty much everywhere the use of aluminium is increasing, and that is a structural change which we are witnessing. Now, under these circumstances, while metals are an extremely volatile category and keeps fluctuating based on what's happening in China, how the US interest rates are moving, and a whole lot of other factors. But structurally, aluminium is on a good state and the entire value chain will benefit. That's what our belief is. If I have to pick one stock at this stage, probably, just sheer because of tactical reason, I'll pick Vedanta because the demerger is in the works, and that will, I believe, have significant value unlocking opportunity for the shareholders. Of course, you can't discount the regular dividend which the company keeps giving to ensure the ultimate holding company benefits in receiving dividend and repaying their debts. But as a shareholder, you benefit as well. So Hindalco tactically is best positioned at this stage if you have a 6 months plus kind of a view. But if you want to take a longer view, I think Nalco and Hindalco are better positioned. So amongst the three, if I have a, let's say, 1 year kind of plus horizon, I would go for Hindalco. And then after that will come Nalco and finally Vedanta. But if I have a 6 month horizon, Vedanta definitely.
I believe Mr. Agarwal as well is in town. So, we'll have to hear some kind of sound bites maybe from what Mr. Agarwal has to say as well.
By the way, Z Entertainment, there the numbers. I was just, seeing on the screen that Z Entertainment stock price has skyrocketed. Net profit has gone up 61% on a year-on-year basis. I think even in Q1, the company had focused a lot on cost cutting, which had resulted in a margin and profit beat. And perhaps that's something that's continued even in the current quarter. Net profits up 61% to more than 200 crore rupees. And that
but I saw some one operating,
EBITDA.
But operating revenue, EBITDA is down 4, and operating revenue is also, I thought, was a little subdued, which just came, right? So maybe
margin 16%.
16, which is better. Yeah, but the stock is completely, smashed up. So it's coming off lower levels. But yeah, I mean, for now, it's looking like a good set of numbers. On the face of it, the headline numbers seem to be much better at this point. Sudeep, we'll leave it there. Thank you very much for joining us. We'll take a break as well. Markets are right there, about 100 points. I mean, lots of other stories we want to talk about. City Gas, what's happening there. And of course, some more earnings which are expected maybe in the next couple of hours. Sridhi Bhattacharya, Edelweiss Mutual Fund will also be with us on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. and award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform?
Investing.
Welcome back. City gas distribution companies are amongst the big losers today. This is on the back of the APM gas allocation cut. Sona joins in to explain more. Sona.
Well, all these city gas distribution stocks, they are under pressure because MGL and IGL have finally confirmed that the gas allocation has been cut by 20% to around levels of 51%. This is due to lower gas production from lower fields, gas requirement for new CGDs, and gas required by Opal's petchem plant, that is by ONGC. They say it will adversely impact their profitability, and they are in conversations with stakeholders to ensure the impact is minimum. This will, of course, impact their earnings. So let's talk about what brokerages are making of this. Jeffrey says that assuming the shortfall is filled by imported LNG, now they will have to take imported LNG because domestic allocation is just 50%, the EBITDA per SCM will fall by around 2.3 to 3 rupees per SCM, which is around 25 to 30% of their Q1 EBITDA. They will require a 6 to 7% price hike for margin neutrality, but there could be an impact on margins and volumes because of that. They think a sector derating is likely. ICICI Securities doesn't think that there will be a sector derating because of this, but for the next 3 to 6 months, there will be margin pressure that the companies will go through. A price hike of 4.5 to 6.2 rupees per kg is needed, and if that price hike is not taken, the EPS impact for all these three companies could be anywhere between 20 to 32%, with IGL seeing the maximum impact of around 32%. But they also think that assembly elections that could limit their ability to go ahead and increase prices sharply from current levels. Morgan Stanley says that this lower allocation for cheaper domestic gas is positive for upstream players like ONGC, Oil India and GAIL. City gas players will raise prices by 5% over the next few weeks and in calibrated basis over the next few months. But they say limited impact for IGL and Gujarat Gas on the volume growth. This is a view which is different from other brokerage. They say industry volumes on CNG in terms of margins is lower for IGL. So there will not be a big impact on margins for IGL as such. And for Gujarat Gas, only 25% of the volumes are coming from CNG. So even they don't get impacted so much. The maximum impact should be seen for Mahanagar Gas. MK says ONGC will benefit because they will get higher gas allocation for Opal of around 4 MMSCMD, and this translates to 7 to 8% of ONGC's standalone gas production, and higher gas prices could also raise EPS by 2% annually, and this will be a structural benefit for them. Different views coming in from brokerages on city gas companies now.
That Maharashtra point, Sonal, thank you very much for that. The Maharashtra election point is interesting, but I think I'm not sure how much it will limit, but if it limits more MGL, I'm assuming Mahanagar Gas, which operates, of course, here in Mumbai. Tridi Bhattacharya is with us. He's president and CIO of equities at Edelweiss Mutual Fund. Trideep, do you own any of the names, IGL, MGL, Gujarat Gas? And is it a bit excessive? 10%, 12% cuts today. What's your sense?
Yeah, I think, first of all, thank you for having me on your show. I mean, as the proximity to elections, as you pointed out, is one of the drivers, but also I think this shows the pricing reforms that were due to happen is finally flowing through. Fortunately, we have none of these. We are actually we hold some of the upstream companies in the oil and gas segment, and in general being underweight the oil and gas space. So by and large, our portfolios are relatively have escaped unscathed from today's price move, if you may say so.
Hi Trideep, good afternoon and good to see you. I think a couple of your portfolios are tilted towards private sector banks. Their time has come, you believe?
So clearly, valuations are in their favor, and that one sector which has actually kind of not done particularly well in the past. So we would and hence they are rallying on the back of this. But actually, what we find is financials, particularly which will benefit from potential global rate cuts and in a rate cut regime, would actually stand to do better if you take a slightly longer term view of the 12 to 18 months time frame. The expectations heading into the results for banks were on the lower side, and against that, the numbers that have come so far are just about a tad better. So I think a mixed, and that's the reaction that you are seeing in the share prices today. I mean, more generally, this result season has been more about where expectations were pegged at and how the results turned out to be, more than in absolute terms. You can see the case in IT and in the positive direction, and in negative direction, some of the stocks which had high expectations priced in.
What about Bajaj Auto? It's a part of, I think, your FlexiCap fund. It makes it to some of your funds. What did you make of the kind of, what the management had to say about the festive demand? Some people believe the comments are a bit misconstrued, and therefore they would use the opportunity to go out there and buy it if you have a longer term view. How would you approach Bajaj Auto and what we've seen?
Yeah, so I think this is what I meant heading into this result season. Two-wheelers in the context of autos had done particularly well. And some of the stocks were quoting at meaningful valuation premium. And hence, on the back of that, when their comments on festive season weren't particularly taken constructively in the context of the street, and all the premium that the stock enjoyed got taken away in the course of a day. However, it is a little Bajaj Auto specific, given that it is factual number. Two-wheelers as a pack would still continue to do well relative to the autos, and hence, given this opportunity, we have taken advantage to probably add to two-wheeler sector in general. But within that, we are mindful of which stocks we go for.
By the way, the other pack is this entire wire and cable pack, which generally is lower. Polycab spoke with us today. It's staged a very smart rebound. KEI, I think, still under pressure. Havells there as well. Amongst this sort of pack. Again, I mean, the context is that all these stocks have done so well, right? That's essentially the backdrop. Do you own any view here?
Yeah, so I think we own some of the stocks that you mentioned. Can't get stock specific though, but I would say that fundamentally speaking, things are headed in the right direction. It's a question of where the expectations got to. I think the expectations with regards to margins, particularly, despite companies' guidance of being in a narrow range, went ahead of themselves. And hence, in this quarter, whether you look at all the three companies that you talked about as they reported, they talked about commodity pricing related margin impact, and hence the shares took a knock. But what we draw comfort from is that if you look at the wire and cables component of their revenues, that did quite well in high double-digit growth rate. That means that the underlying economic momentum is in the right direction. The commodity price movements take a bit of time to flow through the financials as they are passed on, and hence will come through in subsequent stages. So structurally, we are positive in wire and cables segment from a medium-term standpoint. The stocks have done phenomenally well. Opportunities like these are actually welcome for investors like us to increase our positions in the right ones.
All right, Trideep, what are you making of the two big IPOs that have been announced? One is Hyundai and then the other one is Vare. On Hyundai, people are a little skeptical whether or not it will get subscribed. It did get subscribed. Do you think it's a case that could play out, that it could have a subdued listing and then, the stock could do well from there? Unlike what we saw with Bajaj Housing, that had a blockbuster listing and the stock has come off from there. Any view on the Hyundai IPO as well as Vare? So much of excitement about solar modules, solar cells as well, and it appears the companies have a bit of a runway. How much of it is in the price is the issue? Your take.
Yeah. So my sense is investing is actually better done once staying out of excitement. With regard to some of the auto stocks which are getting listed, we have a fairly comparable stock which are in the listed domain, has been listed for a couple of decades, which are quoting at a meaningful discount. We generally tend to take a more deep-rooted view with regards to these things, as to if there are better alternatives available in the markets which are listed, where we have the track record, we tend to go with them rather than live with the excitement. Again, on the renewable energy side, we are looking for cleaner plays, so to speak, to take exposure. And again, some of the IPOs that you mentioned are coming through in that domain, particularly make it interesting. I can't get stock specific here, But I think all of these, the 2 points that I would make to your viewers is that while these are new areas, I think cash flows and valuations are 2 parts that we look carefully. In renewable companies, the companies that make cash flows are the ones that we are more positive on. And valuations, if we find a listed company which has been there for a good while versus a new IPO, we would tend to stick with the old war horses because they seem to have seen few more wars.
Okay, Trideep, thank you very much for joining in. It's time now to get to our D-Street chat, and Nimesh is standing by with an insight into what dealing rooms are saying. Nimesh.
I remind a smart pullback, but again, it looks like it's a pullback from very oversold levels. Need to see whether this can sustain. And there is a question mark on the sustainability only because there is very aggressive FI selling for the last many days. Even today, I understand the FIs are better sellers. The buy sell is close to 1:2 on the sell side. So that, again, the data would be quite interesting as to how the flows have been from the large institutions. I think what's fighting for the bull is the bank, if the Nifty Bank Index up 1.5%. But again, it will have a big impact on Monday because HDFC Bank and Kotak Bank will report the Q2 earnings over the weekend. So that will have a big impact on the Nifty Bank as well. On the other side, you've seen some bit of profit booking in IT names. But again, understandably so, the stocks have rallied pretty hard before the earnings. So a bit of profit booking there. But I guess, the momentum clearly seems to be on the downside. Yes, we have seen a bit of a pullback. But the question is, can it sustain?
No, absolutely. Nimesh, in terms of individual names, what are you picking up?
Well, so the first stock on my list today is Gujarat Fluoro. Well, the stock is down today, but off late you've seen a big rally in that name. It was part of my charter list a couple of weeks back as well. I understand the company is very close to now raising funds in the subsidiary business, which is the battery chemical business. There, I believe, fundraising is going to happen very soon. So that's something to track in Gujarat Fluoro. The second stock is Nicto Tiles. It's locked at 5% upper circuit, been buzzing in the last couple of days. There is a large block, nearly 3.5% equity got changed hands in today's market. I understand it was a clean out trade from a leading ARC. They were having a large chunk. The final 3.5% got sold today. And additionally, I understand the company is very close to raising funds via preferential issue very soon. So that's the trigger in Nitco Tiles. The third stock is Manappuram Finance. We've been saying since morning the stock is reacting pretty hard on the downside, down almost 15% in intraday. But we've seen a bit of a small recovery. While from an institutional point of view, there is very aggressive selling. But I understand some HNI investors have nibbled a bit at lower levels in Manappuram Finance today. And the last is Kotak Mahindra Bank. I'm highlighting this because the earnings are tomorrow, and just one day before the earnings, I understand there is very aggressive selling at the leading FIDs. So expect delivery-based selling in Kotak Bank today.
Nimesh, this Gujarat Fluoro, I think you'd mentioned earlier as well, right?
Yes.
The share price has run up sharply. I mean, from 3,500 to 4,600. So the chemical battery business is going to be spun off, and investors brought in. Any idea what kind of investors, what valuation, etc.?
Well, Prashant, I don't know whether it will be spun off. It's a 100% subsidiary of Gujarat Fluoro right now. They may still raise the money in the subsidiary business itself, which is the battery chemical business. I'm told the valuation that this business will get from some market investors is close to around 25,000 crores. The current market cap of Gujarat Fluoro is 50,000 crores. So half of the market cap they're deriving from this battery chemical business itself. The indication is that maybe the company is going to raise close to 2,500 crores, 2,400 to 2,500 crores at a valuation of close to 25,000 crores at a enterprise value. So could be a significant deal. The fact that it's 100% subsidiary and they're unlocking value. But you rightly pointed out, Prashant, since last time when I highlighted this, the stock is already rallied $1,000 odd. So whether you'll see a bit of a sell on news rally, not too sure. But from a value unlocking point of view, they are going to raise close to 2,500 crores. In terms of investors, I understand a large sovereign fund is one of the key investors there. A couple of big family offices are going to put in money into the battery business. So market names are coming in. Valuations is good, but need to see whether whether it happens to be selling news at least in the short term. But a good value unlocking in the battery chemical business.
Okay, thank you very much for that. By the way, names like SJVN and Inox is surging in trade. There's a sudden spike in these two names in very large volumes. Look at Inox. It's almost approaching 1 crore share in terms of traded volumes. And Motilal Oswal has been a big mover, 11% up today and 27% up this week. So in a weak market or volatile, weakish market, Motilal Oswal continues to see buying. Get into a break. On the other side, as always, we'll get you a few BTST calls. Maybe you can take it for the weekend.
journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Yahya Sinwar is dead. He was killed in Rafah by the brave soldiers of the Israel Defense Forces. While this is not the end of the war in Gaza, it's the beginning of the end. To the people of Gaza, I have a simple message. This war can end tomorrow. It can end if Hamas lays down its arms and returns our hostages. Hamas is holding 101 hostages in Gaza, who are citizens of 23 countries, citizens of Israel, but citizens of many other countries. Israel is committed to doing everything in our power to bring all of them home. And Israel will guarantee the safety of all those who return our hostages. To those who would harm our hostages, I have another message. Israel will hunt you down.
Okay, welcome back. There's about 15 minutes to go for market closing. Mitesh is with us with what you should be doing for buy today, sell tomorrow, or sell today and buy on Monday trades. Mitesh, what's on your radar?
So, Prashant, I have in fact 2 buy calls, the BTSC as you rightly said. Z, I think, post the numbers has given a very strong reversal. And this level I have also bought it today, so there's vested interest in a small quantity. At a price of 132, 132.5, I would recommend a short-term trading buy with a stop at 129 for targets of 140, maybe in good case scenario, even 150. And BTST kind of a position on Bata, which is reversing after a long underperformance. Today has given some kind of a breakout on the short-term charts. So Bata is a BTST with a stop at 1455 or just below it, 50% below it, and look for a target of 1485.
Thank you very much for that. We'll try and get more color on the financials of Z Entertainment, but the stock is higher in trade. Now, Polycab deserves mention because it opened straight away with a cut of about 7 to 8%, and now the stock has flattened out. There was a conference call at 12 o'clock. Upasana joins in with some of the key takeaways which could have resulted in this intraday recovery.
Well, Polycab has reported mixed set of numbers. Revenue was above estimates while PAT was in line, and it was a big miss on the margin front. But management commentary remains quite upbeat. Management is confident of achieving 20,000 crore revenue by end of FY25, which was targeted by FY26 earlier. It has also guided EBITDA margin range between 12 to 14% for FY25, and the management expects export contribution to revenue to increase to 8 to 10%, which is currently around 6.5%. It says that the FMEG will continue to deliver some losses this year, but the management expects it to turn positive by FY26. Well, company has also highlighted that first time in many quarters, wires growth has outpaced the cable growth. The growth in wire segment was 2x the growth seen in cable segment. The volume growth for wire is around 20 to 25%, while that of cable is early teens is what was seen in Q2. Now, company says that it has participated in government tenders for optic fiber worth 50,000 crores, and the company expects order finalization soon to happen going forward. Company has also highlighted that it has optical fiber manufacturing capacity, contribution of which is very low right now.
Right, well, the stock has moved into the green as we speak. Thanks a lot for that, Upasana. Sudeep, you want to come in on this one?
As Polycabs is concerned, I think the margin is a challenge. We did see that same thing pretty much in Havells. So I think, the entire industry has got into a position where the volumes have been decent, but the margins are under pressure. But the commentary in both the cases have been good. We do expect post-monsoon a lot of construction and business activity to pick up and gather momentum in the second half of the current fiscal. So I would not really worry too much about the margin slippage in both the companies. And I'll wait and watch what happens in H2 of the current fiscal. The volume of sales growth for both the companies is quite reassuring. Let's wait and watch.
Okay, wait and watch is the call on this one. Sudeep, any comment on these recyclers, Gravita, Ganesh, Ecosphere? They have done very, very well. I think both these two stocks in the last 1 year have doubled, and they're already rallied before that. Any view on either of them?
Absolutely, Nigel. Gravita we like. I think this is the leading lead recycling company, and they are getting business from all over the world. And beyond lead, they are getting into other item recycling as well. As you rightly said, the sky is the limit as far as these companies are concerned. And I think we're just seeing the trailer as far as this recycling business is concerned. It's going to be a huge, huge business going forward, considering the focus on environment globally. And Gravita has done well, selected the right segments, and now diversifying also. While the growth in lead recycling is significant, they are looking into the future and diversifying into other item recycling as well. So all right steps are being taken by Gravita, and we do like Gravita even at current level for long-term investment point of view.
Okay, all right. Sudeep, just stay with us. We'll just slip into that break. Before we do that, just pull up a couple of stocks. Concord has recovered considerably from the low point of the day. The quarterly update or the half-yearly update wasn't very impressive, but that stock has seen a bit of a bounce. Tata Chemicals as well was getting a bit of a drubbing in the last couple of days, but that stock as well has popped up in trade. So I think both of them should come up for you on the screen as we speak at the high point of the day. Slip into that snappy break, come back, we continue our focus, and we'll wind down markets for this week.
To justice.
Well, just 5 minutes to go to wind down this week, and it's good to see that we'll be ending on a positive note. Today was a make or break session. If we breach that 24,500 mark, well, the bulls will be feeling quite subdued. But they bounced back, so that's good news. Another stock that has bounced back is Zee Enterprises. Rather good set of numbers. It looked pretty good, but Vamakshi is joining in to dissect those numbers for us. Vamakshi, over to you.
Well, Nigel, it's an operations-led beat for Zee Entertainment. Revenue came in nearly 18% lower, but this is only 4% lower as compared to what the street was expecting. This softness is largely being led by their ad revenue, which came in nearly 8% lower as compared to estimates. Subscription revenue was more or less in line, but other sales and services missed the estimates by almost 31%. EBITDA, however, came in much higher, came in at 323 crores. This is a nearly 20% beat as compared to estimates. EBITDA margin too was expected to come in somewhere around 13%. This has come in much higher at almost 16.15%. Net profit has come in at 209 crores for the company. This is again a nearly 50% beat as compared to Bloomberg consensus estimates. Largely, this operational performance beat is being driven by the company's control on its costs. When we look at the operational costs, it has gone down by 26%. Employee benefit expenses too have dipped by almost 12%, and so on and so forth. Ad expenses and other expenses as well have seen a bit of a decline. The other key positive this time around was that Zee Networks All India TV network share inched up higher by 100 basis points to 17.4%. This is after the company had seen a dip in the first quarter, so again that bodes well for the company. Their digital EBITDA loss to narrowed to 158 crores as compared to 177 crores of loss that we had seen in the last quarter. However, the macro ad environment still continues to be subdued, but the company says that they've performed much better as compared to some of their peers. They've maintained their guidance. They're targeting 8 to 10% overall revenue CAGR with the current portfolio, and they still aspire to deliver industry-leading 18 to 20% EBITDA margins. So overall, it's a good set coming in from Zee Entertainment.
Absolutely. Sudeep, Vamakshi, thank you for that. Sudeep, any thoughts? Zee?
Fantastic set of operational numbers. They have really tightened the belt. And, in spite of really the ad not picking up that much, I think they have delivered a commendable set of numbers. Of course, the valuation was really, really attractive. So today's kind of increase in price was on expected lines on the back of these set of numbers. Yes, somebody a bit aggressive can enter Zee and wait for the pickup in the ad revenues. With the election season in Maharashtra and some of the key states, I think the ad revenue, chances of it going up is also bright. Let's wait and watch. But from an aggressive investor point of view, good buy at current levels.
Good buy at current levels. By the way, these brokers, the two best performing stocks, Sudeep, this week are Motilal Oswal. I just checked. It's up 28% this week. Angel is up 15%. Angel, of course, after the results, it moved really sharply higher. Any thoughts here?
Well, I think I always wonder, Prashant, why Motilal Oswal is not moving up. Because, what affects Angel, Zerodha, and the other players, India Infoline, was that almost zero brokerage, which naturally is changing. B, I think a huge portion of FNO in their revenue mix. So, Motilal Oswal doesn't get impacted significantly by these changes. And definitely, it has got all the components. It's not a single vertical business. It's got multiple verticals which caters to multiple segments. So the potential of cushioning or weathering any dip in any segment is significantly higher for Motilal Oswal. So I have been recommending always buy into Motilal Oswal for a long-term perspective on financial services, and I maintain my view.
You maintain your view. Got it. Sudeep, we'll leave it there. Thank you very much for joining us and running us through what you make of the market and, where we are right now and lots of individual stocks. Have a good week and we'll see you back again. So actually, it's a week where the Nifty has not done very much. The Nifty Bank, the mid-cap and small-cap indices have not done very much. If you just take Friday to Friday, they're all slightly up or slightly down. Bank Nifty, though, I think it's a little more pronounced. The Nifty Bank ends Friday to Friday with gains of about 1.8%. So that stands out. And if you want to take a look at sectors in terms of what did how, you basically, I think, two or three sectors stand out. Autos, the auto index down 5% for the week. And of course, outsized contribution of Bajaj there on the downside. That was a big cut through the course of the week. And of course, then you look at metals. The index was down 1.7% for the week. FMCG as a pack was down about 1.7%, and pharma was down about 1% as well. And little attention was paid to PSU banks, but the Nifty PSU Bank index ends up 1% Friday to Friday. So some of these smaller banks which have reported, and of course Axis then yesterday, they've all been good. Banking numbers so far, have to say, have been pretty good. So I think those are also some things which we need to take note of. But it was a day of very large single stock moves on the back of earnings and of course news flow. News flow related names are all sitting as distribution cuts, and of course everything else largely earnings related in terms of what we saw. That kind of a week where the indices kind of were sluggish most days, except of course today's sharp recovery from the lows, and we end on a slightly tentative kind of a note. Bulls will go home with some amount of relief that they were able to defend at lower levels, but we'll have to hold on to some of these levels on the Nifty Bank, etc. as we come back next week. We're of course also getting closer and closer to US elections, and of course the fact that Donald Trump is ahead in the race now, what are the implications? I think markets will also start to take that into account, and we'll sort of get you some perspective as we go forward. I think we'll take your leave here on this edition of Closing Bell. Thank you very much for staying with us. Editors Roundtable is going to come right up. Stay with us.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody is allowed to try. They have access to capital. When they make mistakes, they are forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita, and I think that benefits the entire country overall.
Let's talk about the future in the context of what everybody is talking about, AI. So let's get down to it, and I'll start with you because I know that you believe, and I think I tend to agree with you that some of it has been misguided assumptions about what it could potentially do or how soon or whatever. Some of it you also believe is plain intellectual dishonesty in the claims that are being made by many, and I'm not talking in the Indian context, but in general at this point in time. I mean, everyone is AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of this?
There is insane amounts of hype, and the moment
Markets see red for the third week in a row, clocking its longest losing streak of 2024. Financials, though, buck the trend to outperform. The Nifty Banking Index rising nearly 2%. On this week's edition of Editors Roundtable, we'll decode the week on Dalal Street, we'll review the IT earnings, and put the spotlight on oil marketing companies. I'm Reema Tendulkar. With me are Nimesh, Prashant, and Nigel, and we also have in the house Mahesh Patil, CIO of Aditya Birla Sun Life AMC. Hi, boys.
It's
Friday.
Full house today, so all four plus the guest also. Yes, it's like a full house.
No, I think
Action-packed week, right?
Action-packed, and I think Friday it really got to a crescendo, right, with the market selling off and then sort of rising sharply. But I think, Reema, it's just I think we've gotten to a phase that markets are getting a little tired, right? Because you've run and you've run and you've run, and now because if you think about it, some of the big factors which people started talking about, earnings growth are slowing down. Many have been talking about it for a while. It's just that markets take their own time to get to a level where they're getting it, because there is no problem in global markets, right? Global markets are super strong. Actually, if anything, there is re-acceleration. There is, especially in the US, there is thinking that maybe 50 basis points was a mistake. You don't need 50 basis points. The economy is so strong. So it's just, a little bit of profit taking and that kind of thing.
Yeah. I think markets tiring. I think that verdict we'll hear from Mahesh, but it was a tiring week. I mean, it was a really.
Earnings season chalu hua hai. Why are you tired?
But just imagine, I mean, Nimesh. Start of earnings season. Normally only Reema's in center stage, right? You only have tech to look at the initial part. This time you have tech, Sunny Autos,
Nestle.
RBI is knocking back. Some of these NBA. You have Nestle, City Gas Distribution. Wow, when you wake up in the morning, you've got the pool of data.
Yes.
So Reema starts off the earnings season, Nigel finishes. So IT and metals. Okay, well, that's generally the mood by this time on Friday. Okay, well, let's just quickly wrap up the market action, right? So for the indices, not very much. Nifty down 0.5%. The mid cap and small cap indices, neither here nor there, 0.5% down, 1% higher. But Bank Nifty was a little pronounced, 1.8% Friday to Friday. So that amongst the four indices, Nifty Bank is the one which stood out. Otherwise, sectoral Friday to Friday, autos was a clear-cut loser, full 5% knock for the Nifty Auto Index. And of course, outsized impact because of Bajaj. Metals as an index was down 1.7. FMCG was down 1.6. Pharma was down about 1% as well. And of course, on the other side, you had PSU banks. Not talked about too much, but you look at some of the smaller PSU banks which have reported numbers. Axis Bank you throw in. So far, so good, right? In the weekend, we'll get more numbers. You look at stocks, I just sort of sorted the big changes. Brokers have had a fantastic week. Motilal is up 30% this week. Angel is up 15%. Names like Century Textile, 13%. Sterling Solar were up 12%. Mastech 11%. 5-Star 10%. These AMCs, right? Aditya Birla AMC. And I don't know, of course, Mahesh has been, I'm sure, taking note, but won't talk about it. But 10% Friday to 11% Friday to Friday. Karur Vysya 10%. On the downside, Manappuram was a big knock, 18%. IGL, MGL, Bajaj 15% knock this week, all told. DMart was down 13%. We kind of forgot about DMart because that is the one, of course, which reported numbers early on. These cable and wire companies, KEI was down about 11%. Bandhan was down 9%, and so on and so forth. So, I mean, that's essentially just sort of, the change in stocks and indices that we saw. But I think more than anything else, and Mahesh, I think you'd agree, how the festive season really pans out.
Yeah.
Consumer demand and consumer behavior.
Yeah.
You're tracking that closely, and what are you hearing there?
Yeah, so you're right. I think, there were a lot of expectations that consumer will now, the mantle will shift from the investment-led growth, right, which you saw, right, in the last year or so. It was all investor-led stocks which did well, right? Consumer stocks were kind of lagging behind, and there was a kind of expectation that this year the monsoon is good, rural economy will pick up, and the consumer sentiment is improving. In fact, some of the consumption-related stocks have done well in the if you look at the post-election last 3 months or so. But I think we'll have to wait for the second half, because that's where the festive demand, I think, will come in. I think the initial feedback is that it is, if you look at the commentary from the auto sector, for example, coming in, right, it's not that great, no, what expectations were there. We were expecting a growth of around, say, high single digits or so. It looks to be in the mid single digits or so, right? So clearly it's not as good, but it's still mixed, I would say. In the consumer durable side, okay, they are hoping it to be better in this festive season. So I would say that still finger crossed over there, but I think that is important for the market sentiment to improve, because I think that's, if consumption starts to do well, I think then we are in a much stable wicket, okay, for the earnings to do well, and even for the overall growth to sustain from a longer period perspective.
Mahesh, you've analyzed the market moves, and your key takeaway or analysis throws up that the market breadth has deteriorated. So take us through, what your data tells us.
Sure. So if you look at until say the election outcome, right, because that was a turning point, I would say. Until then, if you look at the market breadth was very good. When I say market breadth, means the number of stocks which are beating the benchmark, right? That ratio was at an all-time high. If you look at how many stocks are beating the BSE 500, within BSE 500 by 10%, that number had gone to around 40% also, right? So that number is now coming down. In fact, if you look at the peak of the election day peak, since then the market is up, but there are more than 30% of the company stocks which are actually now below that, negative territory. So clearly, I think the breadth is weakening. And now what we're seeing is that, the earnings momentum itself, which was there, which was again driving. One was earnings momentum and liquidity also, right? So while liquidity, domestic flows are strong, we've seen the FIIs, especially in the last, this month till date. I was seeing the number, it's almost $8 billion of sales which have been there. Yeah, almost 70,000 crores. So that has been hurting. And I think we've seen the pain slightly. There's some kind of a profit taking which is happening in the broader market. And there's some distribution pattern what we are seeing. And that's where I think you have to be slightly careful. And for the first time, we are seeing companies actually reacting to negative news, right? The last 2 quarters. Earlier, it didn't really matter. So it's becoming more discerning, I would say, the market.
How much cash is there? Because Nimish, you look at that number at the end of the month. I think there was.
So on an average, 5% is the average cash levels for AMCs, and that would work to close to 1.2 lakh crores, 1.3 lakh crores of the total AUM, which would be in cash.
So all this money, all this selling from FIs has been absorbed?
It's largely been absorbed, right?
Hyundai IPO
exactly, that was 25,000 crores of IPO.
So is there a...
So I think cash would still be there, because there is a lot of passive cash which is there, right?
Also,
the market's correct. There are these hybrid funds, right? So they can come in, but for the market has to correct significantly. We have seen the Nifty has been there, but the breadth is weakening. So that's where the challenge is, I would say.
What's the cash that you all are sitting on?
So we're not sitting on much cash, actually. So we are actually playing, because it's very difficult to take a market call, right? People would have done that around 6 months back also, and they would have actually... So it's more to play within your portfolio, right? Trying to go more defensive, not chasing beta. So, that's more stock selection rather than taking a large cash call. But clearly, we are more cautious.
Nimish, the cover from
So, just to give you a bit of a... basically, with the feel of the market, or the mood of the market, as even, Manish pointed out, 70,000 crores of selling for the FIs. It's largely been matched by the DI buying, because they're sitting on so much of cash that's getting deployed. But, again, bad news is getting sold very heavily. We saw 2 accidents this week, right? Bajaj Auto numbers were good. Just a small commentary that the festive season demand is not good. And we saw massive correction in the auto stocks on Thursday. And Friday, today, we saw massive correction in the oil and city gas companies, right? So that shows the kind of momentum which is there in the market. As you rightly pointed out, Prashant, it looks like the market is tired. The simple reason is because for the last couple of months, at least the traders are not making money. And now at the margin, even at the portfolio level, you're seeing a bit of downtake as well for individual investors. That's why the momentum has broken very clearly. It started with the PSUs, because that's been the biggest overweight for retail. And you've seen a bit of correction there. And hence you're seeing a bit of loss of momentum in the overall markets as well. CLSA put out a nice note today, the technical analysts, and they are now believing that the next level to watch on the downside would be 200 DMA, which is almost at 23,000 on the Nifty, right?
So not a very nice note.
Not a very nice
That's
note.
the peak which the market reached during the election high.
Election high.
That's
the same number.
That's the reason why it's very important.
Which is the June level.
June level of 23,000. So again, that's the level to watch on the downside. Having said all this, for next week, we have the Hyundai listing. Now, suddenly there is no premium, right? It's at a discount now. So need to see how it lists. And there's another large IPO which is going to come up, which is Afcon's Infra, part of the Shapoorji Group. I understand already there is a demand of almost 11x in the QIB book. So again, that's going to be a very important IPO to track. So IPO is sucking a bit of liquidity. There is aggressive selling from the FIs. Need to see how the momentum seems to be, because in general, even in the broader markets, the retails have lost a bit of momentum. And that's why you're not seeing a bit of reaction in the market now.
There's also Vari Energies, which opens up
Energies.
for subscription, and it's reasonably sized, close to about 4,000 crore rupees. But I just want to quickly recap all the IT earnings that have come through this week, and we had all the big ones. Whether it started off with HCL Tech, and then we had Infosys, Wipro, LTI, Mindtree, and throw in mid-cap names like Infosys as well. So here are some of the key takeaways. Now, broadly at the headline level, the numbers were fine. Q2 has played out in line with street expectations. So on the top line, you would see that most of the companies delivered, like Infosys delivered versus expectations, TCS delivered, HCL Tech and Wipro were a beat. The margin performance was mixed this time vis-a-vis expectations. So on one hand, you had a TCS and Infosys missing the mark, but again, Wipro and HCL Tech's margin performance was higher than consensus expectation. There are two key trends which have emerged. One is continued momentum in BFSI. It started in Q1 and it's played out in Q2, and the management commentary seems to suggest that it's more broad-based this time. Some of them are talking about discretionary spending picking up in the BFSI segment, and almost all of them are confident that the BFSI momentum will sustain going into Q3, and this is about 30-35% of the industry revenue. And the second trend is there is a pickup in hiring. Remember, the IT companies went through a long period of headcount rationalization, almost 1.5 years, and now finally you are seeing some hiring pickup. It's seen as an indicator, a forward indicator of demand picking up. But what's the way forward now? Now, come Q3, the outlook is a little bit more muted, largely on account of furloughs and lower working days. So you have a Wipro, which gives you a quarterly guidance, and they're talking about a -2 to a 0% growth in December quarter. Now, Infy's full year guidance, which got upgraded this time, still bakes in about a flat growth in Q3 and Q4 if they have to achieve the middle end of the guidance. Also in the coming quarter, in Q3, you'll have the wage hikes. So companies like HCL Tech, Infosys, LTI, Mindtree, Wipro also will have a 2-month wage hike impact. So that will hurt margins for the companies going ahead. Now, keep that in context with the kind of up move the stocks have seen. So on an average, companies are up between 20 to 40%. Names like Infosys, which corrected sharply post numbers, that stock was up nearly 40% since the rally began in June. And this is how the valuations stack up. Infy so it's TCS still right on top of the pack. Infosys retreated a bit after the correction. HCL Tech and TCS's valuations are pretty much at par right now, and it's Wipro which is lagging behind. So Wipro's valuations are at a discount, and that's one of the reasons why we've seen the Wipro stock price do well post the numbers came in line with street expectations or marginally better. So Mahesh, where do you stand on IT? Have you been playing the IT rally over the last 4 months? Do you think it has legs to continue?
So IT, again, it's kind of a one for us, is like a contra sector, right? I mean, where you want to go counter-cyclical, right? I mean, IT negativity started much earlier, right? It's been underperforming, and a lot of the negatives are known over there, right? So while it is not exactly cheap, but we think that the downside there is limited. So it becomes a kind of a defensive play in that sense, because anyways, we don't expect any major strong growth, okay, in the market. And if you look at the commentary of the IT numbers, okay, which have come in, right, nothing great. I mean, we're not seeing any meaningful upturn, but I think it is broadly, I think in line. So I think this is a sector where we were underweight. We've increased the weight a bit, but still a kind of a neutral-ish on this sector at this point in time.
And how would you play IT? Would you go with the large cap blue chip names like TCS, Infy? Would you go with a Wipro where there is valuation comfort, or even in names like Tech Mahindra? Would you prefer BFSI related players like an Infosys, or those auto ER&D companies like KPIT?
Yeah. So I think large caps, I think we're seeing some kind of a pricing pressure now. So that's where I think these smaller and the mid-sized company could come under pressure. They have done well up till now, if you look at it. So we'll prefer the larger cap plays. Within that, I think the discretionary place which got hurt, right? Some of the names, right? I think there you will see the first turnaround, and especially in the more focus on the BFSI sector, where you're seeing things kind of started to go down much earlier, and things are
so like Infosys, LTI, Mindtree, etc. These. All right, let's move on and talk about another theme. Now, oil marketing companies were in focus because we've seen a big fall in crude prices. So the question is, will the street look through the Q2 inventory loss and bet on a solid Q3? Nigel, what are the numbers telling you?
Well, Mahesh, I want your view on these OMCs. I'll just put out the piece and we get your view out there. So for the last week, in fact, there were a couple of triggers that played out in favor of the OMCs. One is that there was no escalation of the global tensions, the geopolitical tensions. And that's where we saw that crude oil prices did cool off, because Israel says that they are unlikely, or the indications are they're unlikely to hit Iran's oil infra, which is good news. And that's why you saw crude oil prices that soften. The other point was everyone was worried whether or not we'll see a petrol price cut. Now we have the code of conduct that's kicked in for the states that are going to elections. So that's unlikely to be the case. So that's good news as well, both on the input side as well as on the selling price side. Now, moving to the inventory loss. For the coming quarter, there's going to be a hit. So you brace yourselves for that. And that's the broad estimates that have come in, that there is going to be an inventory loss because crude oil prices did correct substantially in the second quarter. The question is, will the street look through these inventory losses in the second quarter and brace for a solid showing in quarter three? Why do I say that? Because the refining GRMs, they have been under pressure, but that's a well-known thing. The important part is the marketing margins have now started moving up. And marketing margins in the last few quarters, well, they've been in that vicinity of around 3 to around 6 rupees odd. As of latest count, it's close to around 10 rupees. And the marketing margins have improved drastically, which could brace these companies for a very, very good showing in the third quarter itself. And when you're looking at, the companies, all the three OMCs, you look at the marketing volumes in comparison to the refining volumes. And by that stretch, HPCL appears best placed because the amount of marketing volumes are much higher. And that's for BPCL as well as IOC. So that's another trigger to track with regard to the marketing volumes being much more than the refining volumes, because we know the refining GRMs have been a little bit subdued. Now, valuation-wise, well, these companies are trading in those mid-single digits, close to around 6 to around 8 times odd, and they give good amount of dividend yield as well. Among the three players, HPCL could be better placed because they have that demerge of the lubricants business that could take place, which will unlock value out there. And also, as I mentioned earlier, the marketing volumes are higher than the refining volume. So the question is, OMCs look set for a solid quarter three. Will the street look through the quarter two inventory loss and then brace for a bit of a re-rating? Well, that's going to be the focal area. Mahesh, I wanted your view. Not, a space for the faint-hearted, but just last week or close to around 2 weeks or so ago, everyone was wondering whether or not crude oil prices are going to scale up towards that, $85, $90 per barrel mark. And also whether or not we'll see a price cut.
Yes.
Both didn't come through, which is good news for the marketing margins. Will you want to play this theme?
Yeah, I mean, again, here there are too many variables, right? Don't know what the government is going to do, how the crude prices are going to stay.
For sure.
Yes, right. and while the numbers, as you said, will be weak because of the inventory loss and refining margins, but again, their valuation comfort is there, right? So which gives the support. And by and large, I think we have seen that the government has allowed them to really look at a composite margins, right? You're refining plus marketing margins and see what you want. And that's how the market has started looking at it and overlooking the short-term gyrations in terms of the marketing margins. So I think given that and the fact that the stocks haven't really done much, I think, yeah, there could be reasonable plays over here because I think market would not be too worried about the short-term kind of loss if they report, right, on the inventory side. So, yeah, so they look fairly priced. I think, again, we don't see any big growth. It's not a growth sector.
But it could be a tactical play in the near term.
Could be, yes.
What about, since we're on the subject of oil and gas, City Gas, was the fall a little excessive for these stocks today?
Yeah, I would guess so, yeah. I mean, again, these stocks had also done well. Okay, if you look at it in the last 6 months, right? Okay, these stocks had again kind of rallied again. So again, I think it's more to do with the overreaction because of the sharp rise what we have seen in the last 6 months. Obviously, there will be some impact, but I think the reaction seems to be more excessive, and that's what's happening in the market currently, right? I mean, sectors which have rallied, okay, they are reacting, doing some kind of a mean reversion, also reacting to that negative news. I think it's getting amplified in that sense.
Mahesh, just need to get into a very short mandatory break. We'll come back and continue this fun discussion on the market. Stay tuned.
incentives attached to anything. AI was an academic dream 60, 70, 80 years ago, and it's evolved into business today. And there is insane, absolutely insane amounts of hype, not just India, globally. But beneath the hype lies legit breakthroughs that have happened in the last 2-3 years. These large language models that all of us use in some form or the other daily now, these breakthroughs have come in the last 2-3 years. And these breakthroughs are legit. Doesn't mean that everything that is said out there is legit. So between the hype, froth and frenzy, legitimate use cases. And at Zerodha, we've started to use some of these things to solve internal problems. Something that a lot of tedium that 100 people were dealing with, we have one small little open source. So this one system that costs us nothing to run is saving 100 people thousands and thousands of hours of work every month. And it's an open source breakthrough. It's commoditized. Now you can have the most powerful AI models, let's say large language models, at your fingertips at zero cost. You just need to have that tech know-how to use it. So it's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt, because an 18-year-old teenager, big, an 18-year-old teenager who's tech savvy can start using these things. You can build a business out of it.
Welcome back. You're with us here on Editors Roundtable. And of course, we're discussing markets and sectors. Mahesh Patil has been with us and he's been taking those questions. Mahesh, autos, Bajaj, for example, was a big one. And you mentioned briefly, what do you make of it? And is it a problem here in terms of demand for the sector, especially two-wheelers?
So I think, two-wheelers were actually doing well, if you look at it, right? There the growth was much stronger than into the commercial vehicles started kind of slow down much earlier than we saw into the passenger vehicles. The two-wheeler expectation was that they will do better, right? Because the recovery also there was much data over there. Again, the stocks also have done. In fact, the problem with the auto sector is that it has outperformed significantly. In fact, the valuations, if you look at, right, of all the two-wheeler names, for example, they are like 2 standard deviations above the historical averages. But I think nothing to worry about, I would say that...
the fear is that even if you look at September, the sales numbers, but wholesale numbers, they were good for two-wheelers. But
that was the inventory filling which was there.
The next few months, and this is the festive period, on the retail side, as Bajaj said, festive first 15 days, they said very low single-digit growth. And they're expecting 5% growth in retail sales. Now that, it's a bit worrying, isn't it?
That's what we have to see the whole, how it pans out. But clearly it is disappointing than what the market was expecting. And again, as I said, the valuations are higher and stocks are up. I think the reaction is much sharper. But I would say structurally, I think in the two-wheeler space, again, there's this EV transition also which is coming in, right? So players which have well placed onto the EV journey, I think they'll be able to do that transition much better. So very clearly you are seeing that change in terms of leadership in the two-wheeler space, and players who are well placed to capture the EV transition also. So that is another dimension, which needs to be taken into consideration over here.
Mahesh, what about the stock market plays? You were earlier talking about the kind of selling we have seen from the FIs.
Right.
And many people tell me, Nigel, you don't know the pain we saw in 2008. But I think financialization theme is picking up, and all you can do is you can, keep your SIPs going, make your larger chunks out there. So this financialization theme still has a longer runway to go. But the stocks have rallied as well considerably. What do you make of, the exchanges? BSE did see a big rally, and now, in fact, it's corrected a little bit. So your take, how do you approach this theme?
So I think besides the volatility or whatever short-term impacts because of the regulatory things which are there, I think that trend for, again, what you are seeing, despite the volatility in the market, I don't see the money flow into the market or participation. Obviously, the speculative elements which are there in the market, right, which are, I think those will get curtailed a bit. But I think the broader journey for the, capital marketplace will continue because the penetration levels are still low. I think if you take a next 10 years view, right, where the penetrations are and where the ownership is, I think the runway for growth seems to be longer. So if you overlook the short-term volatility and this thing, I think structurally they still look to be good placed fundamentally.
And what's the best? Is it brokers, asset managers, AMCs, exchanges? How do you capture the most of the value?
So I think one is, the asset management companies are the best in the sense because ROC, the free cash flow is very, very, you don't require any capital, right, okay, to play over there. But I think the wealth managers, if you look at that segment also, and the distributors, I think they are probably well placed because, I mean, they benefit, doesn't matter, right? If asset management also, we are competing for market share, right? We are competing for performance. So it's some way it can be a bit cyclicality.
It's more sticky, right? They own the customer in that sense.
They own the customer. So I think so in that sense, I think they look to be much more immune in terms of any cyclicality in terms of individual kind of performance, okay, which you could see in the asset management space. But I think the whole, exchanges also for that matter, right? I mean, kind of monopolistic in that sense, right? And any kind of impact regulatory, even they're able to compensate that, right? They have that kind of a pricing power to that extent.
Okay, gentlemen, it's been a long and a tiring week. Wish everyone a restful weekend and come back prepared because next week we'll continue with all the market volatility, news flow, lots of earnings to contend with. With that, it's a wrap on Editors Roundtable from the entire team. Thank you for watching.
Time. So it's commoditized to death already. And it's only been 3 years. Name the specific set of breakthroughs.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like, there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So, and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, you know, because I still haven't yet found the cause that I really want to support, as in, like, you know, something which is close to my heart. Yeah, so there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A Friday bounce helped trim some losses this week, but the Sensex and the Nifty end in the red for the third week in a row, the longest losing streak in 2024 so far. Crude oil prices set for the biggest weekly loss in over a month despite a rebound on Friday. International gold prices hitting a record high amid safe haven buying. The death of Hamas chief Sinwar does not mean the end of the war, says Israel's Prime Minister Netanyahu. The statement comes amidst pressure from the US and other Western allies to call for a ceasefire. Iran says Sinwar's killing will strengthen the spirit of the resistance. The board of Zomato is likely to consider an 8,500 crore rupee fundraise on the 22nd of October. Sources say the move will take domestic shareholding above 50%. The company is likely to ask RBI to cap foreign shareholding at 49%. That's an exclusive.
But I think India is a very important strategic market for anybody who's serious about international aviation.
As British Airways marks 100 years of flying to India, Global CEO Sean Doyle promises more flights and better connectivity, says India is their second largest market and the airline has ambitious expansion plans. That's an exclusive. US authorities identify the Indian intelligence official allegedly involved with the foiled attempt to kill a Sikh separatist Panun in New York as Vikas Yadav charged him with murder for hire and money laundering. Panun is a US citizen who's designated as a terrorist by the Indian government. The government suggests significant tweaks to the RBI's draft circular on bank dividends, bats for value creation in banks instead of high dividend payouts to shareholders. That's an exclusive. The Supreme Court agrees to hear airports' economic regulatory authorities' plea against airport operators fixing cargo and ground handling charges, dismisses arguments raised by Delhi, Mumbai and Bengaluru Airport. The regulatory bodies had moved the apex court after a TDSAT order barred it from imposing tariffs on certain services, including cargo and ground handling. With just over a month to go for the Maharashtra elections, the opposition alliance finalizes seat sharing for 260 seats. Sources say the Congress will get the lion's share, followed by Uddhav Thackeray's Shiv Sena and then Sharad Pawar's NCP. The ruling alliance is in final stages of arriving at a seat sharing formula. Well, let's start with the market action. We saw a rebound this Friday, which paired some losses for the Sensex and the Nifty for the week. The Sensex gained over 200 points and the Nifty gained over 100 points today. So that's where it closed, 81,224 and 100 points high on the Nifty. The mid-cap index also closing about 200 points high. The Nifty Bank saw an 800-point jump. So financial stocks outperformed this afternoon. But despite the Friday bounce back, the markets have ended the third straight week in the red. Now, this is the longest weekly losing streak so far in 2024, and financial stocks have been a clear standout this week. The Nifty Bank Index has gained 2% in the last 5 trading sessions. Well, here's a key news point that's moving the markets worldwide. China reported a GDP growth of 4.6% in the third quarter, and this is slightly above expectations of a 4.5% growth rate. However, the pace of growth is slower when compared to Q2, when the economy grew at 4.7%. The concerns over demand continue to linger as growth in China is expected to remain below 5% for the full year. The big global story: more than a year after the Israel-Hamas war began, Israeli Defense Forces claim that they've killed Yahya Sinwar, the alleged mastermind behind the October 7th attack on Israeli soil. Israel's military shared drone footage of the Hamas leader sitting in a dilapidated apartment in Rafah just minutes before he was killed. Hamas is yet to officially confirm Sinwar's death. But is this the end of the war in Gaza? Well, Prime Minister Netanyahu has declared this as the beginning of the end, and the war will continue until the remaining hostages are brought home. US President Joe Biden has urged the Israeli Prime Minister to move on and progress towards a ceasefire in Gaza. US Vice President Kamala Harris, British Prime Minister Keir Starmer and French President Emmanuel Macron, among others, have also called for a ceasefire. Iran said that Sinwar's killing will strengthen the spirit of the resistance. Iran-backed Hezbollah warned of a new and escalating phase in its war against Israel. Meanwhile, Israel continued to pound the Gaza Strip and Lebanon. Its air force has struck 150 targets in the last 24 hours.
This moment gives us an opportunity to finally end the war in Gaza. And it must end such that Israel is secure, the hostages are released, the suffering in Gaza ends, and the Palestinian people can realize their right to dignity, security, freedom, and self-determination.
While this is not the end of the war in Gaza, it's the beginning of the end. To the people of Gaza, I have a simple message. This war can end tomorrow. It can end if Hamas lays down its arms and returns our hostages. Those who would harm our hostages, I have another message. Israel will hunt you down and bring you to justice.
Benjamin Netanyahu there. Meanwhile, crude oil prices edging higher today, but still on track to post the biggest weekly loss in over a month. The GDP data from China sparking demand concerns even amidst the escalating tensions in the Middle East. A surprise drop in US inventories also helping a mild rebound today, but Brent remains below the $75 mark. That's